he's got to just, he takes it to the next level.
It's 7:01.
Wait, is that bad or good? Wait, what kind of humping are you doing?
I don't know.
Usually humping is a good thing.
Right.
Yeah.
Are you the humper or the humpy?
Freaking hump or something like that.
Question.
Unbelievable. Oh, man. What a night. Okay. Anyway, around 6 o'clock last night.
You're a little sexually frustrated? Yeah, like...
I'm doing a lot of humping. I'm not gonna lie.
I'm sorry, Laura. You don't.
I was gonna get right into the market around 6 o'clock last night. I didn't see it. My phone started blowing up, emails, and you, the viewers, watching the market right at that time. Like, what just happened?
What happened?
What had happened was.
What happened at 6 o'clock last night?
I guess they're kicking a can down the road another 2 weeks or something like that, right? I mean, I don't know. I mean, it was Tuesday yesterday. That is Taco Tuesday.
Sure.
So you had that going on. What are you doing already?
That's just some of my oil. I sold those extra call spreads.
Oh, look at you.
I got quite the manster.
In oil.
Yeah, it's down like $11, right?
It's down 9.5 right now, about 9%, a little bit more.
Yeah, it's going to be a big day.
It's going to be a good day, yes. There'll be other problems, too. But
I've got some problems. AMD is a big problem.
AMD continues.
But, we persevere.
Absolutely.
We cry.
AMD up around $70 now or something like that.
How much do you think that you both have in you? Obviously, you've weathered all sorts of economic things, but Nikki...
Yeah, but this is complete. It's always different.
I know, but that's what I'm saying is like, how much do you think if you have to do an internal gut check, do you think that you have to weather this market? Okay, I mean, capital-wise then.
I've been fortunate not having to do it capital-wise, although... my old roommate was here. He'd probably be working for me now with the losses that he would have.
They'll go down one day, okay? All the things that he's short.
I always
it's like
say
the
that.
meme where you have like it's a straight up, and then you have like the 1% down, and you have like the guy that's like.
Sure. But listen, let's be frank here. I mean, you said it actually this morning. I love the quote. I'm going to steal it from you right now, but I'll give you the credit. We were long when it was wrong to be long. I mean,
when everybody called you stupid.
Right, as we were going lower. Yeah, just leave him alone. He's hurting today, I think. I don't know.
No, he's probably happy. He's hurting with 2 loaves of bread. He didn't keep
This is true. He's only at 28% instead of 29%.
Yeah.
But we were wrong. We were long when it was wrong.
Sure, yeah.
Because, you'd never catch the bottom and you never catch the top. But I have to say, we've been talking about don't sell this creeper. It's a really news-driven market.
Yeah.
It goes exponential.
You got to stay small, and you got to keep everything.
You have to stay small.
You can't. The
FOMO is real. We talked about that. We never one time said you got to put a fork in this market or sell this market, or even these moves in Intel and other stocks like it. I'm just mentioning Intel. This is smaller of the big stocks now. The move. You're going to miss the top. You're going to miss the bottom.
Yeah.
That's how at least I trade.
For sure.
We'll catch it when it turns. We'll get it going.
And just the dynamics today specifically, if you've been getting hurt on oil to the upside, you're getting really bailed out today.
Oh, yeah.
Volatility coming in bigly. I mean, it's down 4%.
Bigly.
We're below 19. The VIX is at 1650. So a lot of premium's going to come in, even if you're directionally wrong. Like, I'm going to be hurting in AMD, but if you've got strangles in AMD, you're going to get some of that money back just from this vol contraction. And that's going to be across the board in any of your other positions. So like if you are getting hurt on stuff and you don't necessarily want that delta anymore, today's a good day to close the strangle and roll to an iron condor or roll to a diagonal spread or a calendar spread or something that has a little bit less short vol to it, unlimited risk, and has a little bit more, dynamic risk profile with not as much risk on the table. Like you don't have to be naked short premium at this point, adding to stuff.
Sure.
You can lighten up positions if you were wrong for the last, 100, 200 points, and you feel like you're missing out, do a diagonal spread or a poor man's cover call. Something like that versus selling puts, where you're selling puts into all-time highs with volatility at, relative lows.
New all-time high.
Yeah. Like think a little bit about, your direction and where your risk is.
Only the down, not making new highs. But it's dare I say, buy the rumor, sell the news kind of thing right now. I know I'm alone.
What's the rumor?
I know I'm alone on this.
What are you talking
you
about?
have oil rally a little bit from here, so maybe. But I don't know.
These moves.
You got to be careful. Like
this morning seems like it's a little bit exaggerated.
We've watched this play out for the last 5 years. Like momentum, it sticks.
It's real.
Yeah, I mean, I'm saying don't fight it with unlimited risk. Like if you want to fight it, do a put diagonal or a put calendar spread or something like that.
Wide vertical spread if you want to sell a call
wide
spread.
vertical spread, wide call spread. Like there's no point.
And then you can always roll down that short call to get more short delta as you do this. Kind of
things are risky. Yeah, so just be safe.
Strategically.
Yeah.
Anyway,
stay small.
Yeah.
So what did you do before 6 o'clock? Because after 6 o'clock, you had to be watching the market. What did you do before 6 o'clock?
Took a nice shower.
Did you? Good for you. Good for you.
Are you a 2-a-day shower? Are you a night shower?
I'm a 2-a-day shower.
You're a 2-a-day shower. Wow.
Yeah.
I didn't know that about you. I just learned about my son.
Yeah. Very clean. Very clean.
2 days.
Yeah.
Interesting. Okay.
Yeah.
All right. I like
Because you don't pay for your own water. You don't care.
Does anybody? The city pays.
Well, our building pays for water. Yeah.
It's in there.
I mean, we pay with the freaking taxes.
You're paying more.
Yeah, I pay for everything.
Than you use.
Nothing's free here.
Yeah.
America. The land of opportunity. We mean nothing's free. Unbelievable. What about you?
Did I take a shower last night?
He said, what'd you do before 6 a.m. as if there's
6 p.m. 6 p.m.
Oh, I think he said 6
No, 6 p.m. last night.
He leaves here at 4. He leaves here at 4 or 3.
No, it's because you were watching the market after 6 p.m.
Yeah,
the market was moving after that.
After 6, well, it was only up 20.
Yeah.
For most of the night.
Yeah, for most of
the
the night.
NASDAQ was really strong because you have these chip stocks going berserkers.
AMAT up 18, AMD up 75
They're
or
all-
so, SMC. I think Light's the only one that was down. It was down around $4.
We're going to get into this.
Watched the one hockey game last night. That was it for me.
Avalanche.
Who was playing hockey?
Avalanche in the Wild?
Yep.
Yeah.
Avalanche look good.
Yeah.
They look good. They look kind of unstoppable. We'll see.
For sure.
Yeah. Anyway.
When's the last time that they won?
Ooh.
Good question. I don't know.
I don't know either. It's been a while.
Oh, okay. I didn't know if it was recent or not.
No.
I literally do not follow hockey.
I can search it up, but I'm not 100% sure. Can I get you both a little angry for the summertime?
Oh, sure.
Okay.
So,
why not?
So Vinny's new thing is a convertible for the summer.
Oh, yes.
Oh, of course. It's the option that makes the most sense. Yeah.
It's not a convertible.
I know, but it's close enough.
No, he's thinking about a Porsche Boxster, an old one, a 25-year-old Porsche Boxster.
Sure.
Yes. But he wants to learn how to work on it first.
So he's a mechanic now. Got it.
So he wants to go half with me. Mm-hmm. So he's going to stop spending money on frivolous stuff. And he's going to save his paycheck. So that
Can I put Vinny on the phone with my dad for just 45 seconds?
His dad may have
just
match.
45 seconds on the phone with my father.
What's he making a week? $250 maybe? $300?
Depends. He makes about $100-ish a day.
Yeah, works 2 days.
So if he works 2 days, you're $200 and change.
$200.
You can pick up another shift, it'd be $300.
Let's say he works.
I'm sorry, does he not pay taxes? That's his take home?
Pretty much. But
Okay.
that's about what it comes out. You get some taxes. I mean,
what are we talking here? 20 grand?
No, 10 grand. 10, 12 grand for the
10
car.
grand for the Porsche.
Boxster. Yeah. 25-year-old car, yeah.
Does this include the 10 grand that you have to put into it to fix?
That's a discussion we've been
Or
having.
we just talking about the
purchase
shell.
price. Yeah, no insurance, no. The car's gonna need brakes and everything else to it. No, we're not talking about the $4 or $5 grand to fix it. No.
I'm sorry, and where are you going to put this car? Because isn't that against your HOA, to have just a literal jalopy
storage.
Right.
We haven't gotten to that yet. We're just getting to the maintenance part of it.
Okay.
We glossed over the insurance part of it.
Uh-huh.
Yeah.
And he wants to go half with me. So he figures if he saves 5,000, I'll put in 5,000, and then he'll have his.
You want to know?
But you know that summer's gonna start, like Memorial Day's in like 3 weeks. Like I'm just tell me with this timeline. If he's making 100, this is like a simple math.
He'll probably.
If Vinny makes $100 a day and he needs $5,000 by summer, it's gonna be summer of what 2020. 2030?
He's probably going to want a little front money up front.
I see.
He hasn't started that yet. But let me tell you how he's going to get to his 5,000.
Okay.
I'm excited. He's going to sell bapples out of the trunk of his car.
No. He has a quicker way of doing it.
Weed.
What's that?
Selling weed.
No. That's what his brother did. No. He, the electric bike that he has?
Oh.
Yeah.
That was like a $5,000 purchase.
He did not pay that money. But go ahead.
Purchase.
Yeah,
My purchase.
Right.
So he's going to sell
got a friend
50% off.
$3,400. He's got a friend that'll buy it for $3,400. He goes, so then I only have to make $1,600.
Okay.
I said, excuse me?
Well, it's all upside profit on his end. That's all upside. Like that's on you. Again, all of this is on you.
I know, but I explained to him that, like I always say,
I mean, if he wants a convertible, a bike is a convertible. Like that's what I would like. That you want to feel the wind in your face. You know what I say, young man? You go right ahead. You have a bike. You take that ass outside on your bike.
Dad taught you well.
That's your convertible. That's right. Give literally. Just give him 45 seconds on the phone with my dad. Just 45 seconds.
He uses my words against me because I always tell him a gift is a gift. When you give a gift.
Did you say that about all the engagement rings?
You don't get it back.
About all the engagement rings you gave out?
You have to be used to, you have to be willing to, what did you say?
I didn't learn about that until I was like this age.
For all the engagement rings you've handed out?
Yeah, I never got them back.
Okay, so it's a gift.
A gift is a gift.
It's a gift, okay.
You have to be willing to part it. That's what a gift is.
Yeah.
It's a gift. It's not a loan. It's a gift.
It's a gift.
So that's what he said to me. He goes, the bike, it was a gift, right? I go, yeah. Well, a gift is not a loan, Dad. A gift is a gift, so it's mine. I go, this is completely different.
Until you profit off of that gift, right? Like until you flip that gift, yeah.
I mean, so that's where I am.
We got some people in the chat. They're saying they bought their.
They're siding with me.
Rebuilt a 2003, I think, Porsche. All in about $15K. Here's exactly how this is going to go.
Yeah, but did these people also buy their child a boat and another vehicle?
No, they rebuilt it. They're saying they rebuilt it.
Sure.
From scratch. It cost them $15,000.
Yeah, but then
I'm going to tell you exactly how this is going to go.
Yeah.
You're going to buy this car because you're a softie. You're going to buy this car. It's going to cost you $10,000-15,000. You're going to bring it home. It's going to need some work. You're going to show them how to change a tire. That'll be about as far as it goes. In about 2 weeks, it'll be at a shop. It'll cost you about $15,000 to fix it, to make it good. And he'll be cruising around, no problem. It'll be like $30K.
Net 35.
Yeah, like 30, $35K. He'll have his Porsche. He'll do zero work on it. Will not work on.
A push Boxster. It's a Boxster.
Yes.
Yeah. That's
how this will go.
Yeah. No, you're completely wrong. I will buy the $20,000 one, and I just won't have to.
Oh, now it's 20.
I'm going to save myself with your math about $5,000 to $10,000.
No, you would.
I'm getting smarter.
Maybe, but you kind of like the idea of him learning how to do this if he actually would do that.
I do love the idea of him learning how to do it.
He can take shop class in high school.
We talked about that, but he said, Dad, the guys
free.
in shop class are not. I don't know how to put this politically correct. I'm not usually politically correct, but the guys in the shop class aren't going to make it to senior year. Let me put it to you that way.
Okay.
Wow.
So he's like, I don't want to go into shop class.
Yeah. Is he going to make it to senior year?
Right, and people whose GPA
from what I've heard,
should not throw stones.
Yeah.
I'm just like,
From what I've heard, he's cheating on every test he takes. I don't know what
And at least the kids in shop class, even if they don't make it to senior year, they're not going to get replaced by AI.
This is true.
The beauty that my dad bought me for and I was so thankful. It would stall in third gear, while I was
But it was a
16
Benz.
years old.
It was a
It
Mercedes.
was a Benz. It was a Mercedes-Benz, 1988. Older than I am.
Sure.
It would
thought it was-
stall as I would go on the highway. So I'd be on the highway with car full of people, and as you get from like third gear, like 50 to 60 miles an hour,
Sure.
the car would stop.
Oh no.
The engine would drop. I would have to turn it off, put it into, or not
Only
even turn it off. You
sometimes.
go into neutral, then you restart it. You hope it starts on the first or second try. And now, we're just throwing around Porsches.
I mean, as much as I would love
For fun,
just
for
keep
funsies.
talking about
The second car.
to keep talking about Vinny.
Sorry. We have a
this is
show.
we have a show to do. This is great. I am not a licensed therapist, but
should be.
on this
You play one on
wonderful
TV.
Wednesday, on this wonderful Wednesday, we have a great show for you here on Tasty Live at the top of the 8 o'clock hour. We've got an options jive, how to time profits in short strangles.
Yeah, it's a good one. So it's a look at different delta strangles. So we'll go from like 40 to 10. And then looking at like the last 5 years of just how many days it takes to get to that 50% profit. And then we're going to look at, your risk and your return on capital for each of those. Because a lot of the questions we get is like, why not just do the 10 delta strangle? It's a way higher probability, less risky, so to speak. So we're going to look at like the return on capital angle because because of the premium, you get paid more to take the same relative risk with those higher delta strangles. So,
Okay.
and they're faster moving. So,
Hey.
we're going to just kind of walk through different delta strengths.
Also, it's Assume the Position Wednesday. So we have, what's your assumption? This is where viewers submit their trade ideas to the bats. They have an underlying and a directional bias. Hopefully that direction is just straight up. But the bats are going to do viewer-submitted trades today at 8:40. And then 9 o'clock, we have a little tasty extra, a cherry picks. Mr. Thomas Preston in the house. Earnings push market higher.
Going to be about earnings.
Okay.
Can't spoil TP's thunder.
Don't want to steal his vibe. And then we have live from the trade desk at around that 9:20 time frame. Quentin Q in the house counting down all the top trending tickers over at Tasty Trade, and Mr. Ryan Grace on the crypto side of things. And hey, we are standing by. We are literally ready with our finger on the switch, ready to flip it on June 4th
Yes.
for that
Day
PDT.
one, baby.
For that PDT. Yeah, you know me. We are tasty, and keep it locked here because we got maybe some exciting stuff that we will
Yes.
be announcing. But because I've been seeing some tweets come through, and because people are just asking about all of the brokers. I can't speak for anyone else, but I can say
Who cares about anyone
But
else?
I can
That's
say
right.
we are ready.
That's
right.
Like we don't.
Horrible brokers.
So we
That's right.
stay
Time to
ready.
worry
We don't
about
have
yourself.
to get ready.
Yeah, we're
So
ready.
We ready.
We
Ready. We ready. Yeah.
I'm so out of the loop here.
Yeah, that's okay. It's good. It's a good song. Let's make that a video.
It's like Remember the Titans.
Yes.
What's the song?
Oh, I got you.
Yeah, I think so.
gotcha.
And then at 10 o'clock, Liz and Jenny live from the floor of the Seaboat. It's always electric when the ladies are live. Also, if you would like to submit a conversation or just to chat with the ladies, use that hashtag LIZJNY, and they might read your tweet live on air. But hey, in the meantime, in between time, I got some certified yappers here this morning going over time.
Sorry about that.
But you want your daily dose?
Oh.
Yeah. Hit me with my theme music. Let's go.
Our leading story.
today's headlines.
Breaking news. Coming across the wire. Our leading story. Top story. Just in.
In today's headlines,
Breaking news.
All right, everybody. Today's a wonderful Wednesday. It's May the 6th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
What has earnings today?
App Lovin', one of the leaders.
That was this morning, right?
I don't.
No,
I don't
sorry.
think so. Was it?
No.
Did I make a mistake? I could. Uber, D-Dog, VST, to name a few.
Yeah, you're right. ARM,
ARM, yes.
Snapchat,
Oh,
Coherent, the newest addition to the S&P 500.
okay.
Yes.
All right,
few others.
so stuff going around.
Some with
Hey,
nothing
I got a
to
lot to get through, so let's do it to it. The SEC's formally proposed a rule change that would allow companies to file semi-annual reports on a new Form 10S in place of traditional quarterly 10Qs. The move brings regulators closer to a structural change that President Trump has advocated, contending that mandatory quarterly reporting for earnings encourages a short-term mindset and distracts executives from bigger picture, long-term strategery. But this is just moving forward. So that's it. That's the tweet.
Yeah. We've talked about this a couple times. My thinking is that earnings will become more volatile, but overall the market itself will be less volatile in between those points. I think, kind of push that earnings volatility. It'll double it twice a year versus having the 4 times a year, which I don't know is good, bad, indifferent. I don't know.
I mean, I don't have a dog in the fight right here or anything like that, but it seems like once you get done with quarterly earnings, most publicly traded companies have been involved with a few of them, presently involved with one. You're getting on next quarter's earnings within a week or two of reporting. So,
but does the calculus of this change when we are going to be on the precipice of these mega IPOs?
Yeah.
Like, do you want SpaceX to only report twice a year? Like, I'm just throwing it out there because that wasn't really a thing when we started talking about. But again, Europe does this, so
I think to that point, it's going to make these earnings announcements a lot more volatile. To both.
Yeah, I think that's a good way of looking at it.
Because you're going to there's going to be more time in between where things can happen and change.
Especially pre-earnings announcement.
Yeah.
Volatility's I would expect it to be elevated. Yeah, I agree with you there.
Yeah.
it might be mitigated by the fact that at least maybe some sectors, like I'm thinking specifically like automotive, would still maybe have to report like deliveries, maybe quarterly. I don't know if that changes.
They do stuff like that. Like in Europe, they'll like even our own company, IG, they'll report like, you know, trading volume kind of thing.
Sure, right. Like other nominal figures and stuff. So maybe there'll be a happy medium. Anyway, keeping it moving here. Crypto exchange Bullish is buying Equinity for $4.2 billion. I did not know Bullish had $4.2 billion. But the crypto exchange looks to establish infrastructure to bridge blockchain technology with traditional capital markets. You can trade Bullish, BLSH, which is kind of a funny ticker.
BLSH.
Yes.
BLSH.
45. I have not looked at this stock, so.
Me either. May 14th earnings. I'm looking at May options.
Is this a SPAC? Did they SPAC this?
That's a good question, Nikki. I don't know.
I think I kind of remember it.
I mean,
it wasn't a SPAC because it opened at like
it just
70s.
came out.
Nope, they're not a
70s.
SPAC.
Yeah.
Yeah, 70s or 80s.
They did try to go public via SPAC in 2021, 2022.
Yeah.
That's what Google Gemini AI is telling me.
I think I'm thinking.
But they did a traditional
nobody's
IPO.
doing the math here with this company. They're paying $4.2 billion for this other company, and they're only worth about, this company, Bullish, only worth $6 billion.
So then GME can buy eBay.
If you do the math there and carry the one,
massive.
it's easy.
Yeah.
Absolutely.
Is the high in coin carrying over into today? Not high, but the new up move in coin, is that carrying over into today?
Coin's
It's up
up
about $3-4, 200. But I mean, even the S&Ps are up 50.
Sure.
Market's up 1.25% or so, and Nasdaq. So everything is kind of up. But yes, you are right. Bitcoin was 83,000, 82 and change right now, almost 83. So every asset is higher, obviously, except oil. It seems like.
Well, let's get to the earnings from last night. AMD reported first quarter results that topped analyst estimates. For the second quarter, the chipmaker says that they expect around $11.2 billion in revenue. AMD stock has more than tripled over the past year. I know that's right, Lisa Su. AMD this quarter brought in revenue of $10.25 billion. Nikki, what'd you do in AMD?
Oh, I'm going to be in some pain. I'm going to be in some pain today.
This stock doubled in the month of April. I mean, I know it's you know, it's May now, but it went from 200 now to 400 and change.
That's bonkers.
Yeah, it's unbelievable.
I didn't think I would see it in my lifetime. I mean,
What was the expected move?
Oh, it wasn't $75.
No, AMD expect to move
$35 or something.
Oh, wow. Okay.
35,
So it's like a
$40.
2 standard deviation.
Yeah.
Okay.
par for the course
Okay.
in this world.
Uh-huh.
It'll be a
Par for the course.
tough one.
Well, speaking about that, Supermicro stock also jumped 18% as they reported better than expected quarterly guidance despite missing on revenue. The server maker said in March that it had severed ties with a co-founder who was named in a federal indictment, but they said, never mind about that.
Yeah, don't worry about that.
Don't worry about that. Hey, look over here. Supermicro brought in revenue $10.24 billion versus $12.3 expected, but the numbers don't matter anymore. Stocks.
That was at the end of March also, when the stock got like sub $20 there for a second. It's been slowly creeping up. It's 31 this morning, up around $3 or $4. But this is telling you how this market can even move SMCI.
Like a blatant fraud, allegedly.
Yeah.
Allegedly.
Yes, exactly. Exactly.
What a time to be alive.
Yeah.
I love this for all of us. In other news, Intel and Micron are on the precipice of major milestones. Options traders can't get enough of the semis. After a 700% rally the past year, traders poured into Micron options on Tuesday, paying expensive premiums to get access to further upside. More than $2.8 billion of Micron options premium changed hands Tuesday, which is what? That's a bonkers number.
Yeah.
Also, Intel coming out with Micron coming out with new chips, Intel hitting new highs. Everything is just what are we doing?
I'll let Nick take this one since he's in it.
And Intel has surpassed its
Intel-
dot
Tell me where
com
Intel
value.
touched you.
Intel has.
It's up 430% year over year. So.
Yeah, it's an incredible move. It's been straight up. Just like, there's 10 million stocks you can point to that look the same. The volatility is through the roof on all these stocks. It's tough to trade them. Without any delta. Like you can't be short calls.
No,
and I have some short calls.
You've been talking about that
painful.
Asymmetric, or not you've been talking about that risk of short calls for some time now. So, yeah.
And you also mentioned, Nikki, SMH just kind of ripping your face off this morning too, which is.
I'll be a little better there.
Okay, good.
I'm fine there, but SMH
I have a little short.
Up 540. It's up to 540. It's up $20. $17 today. Today's going to get bananas. Today's going to get there's going to be some big numbers to the upside, at least at the start of this market.
Yeah, I have a short iron condor with 43 days to go in SMH. My short calls are 560. The stock is 540. That's up almost $20, as Nick pointed out. Now it's a $10 wide iron condor. So here is my quandary. I sold it for around $3. It marked around $4 last night. Maybe it'll be $4.50
in SMH.
In SMH.
Okay.
Now, what do? Do you take that with 43 days to go? You have a lot of time left, so you can take that put spread that you're short, the whole put spread, both sides, long and short. Buy that, and with one click, sell another spread. What would I look to sell another spread for? I'd like to sell another spread for around the whole package for around $1.50, which would give me $4.50. Let's round between friends, say $5 in credit received, which gives me a 50-50 shot on SMH if you collect half the width of the strike. Now, because you can do that with 43 days to go because there's some time left. You also could take just a short strike, use more buying power, and move up just the naked put side. I would look to do the same thing there too, try to get $2 in credit by doing that, get $5, and then you sit and see if the stock can beat you. Sometimes you get beaten. So that's how I look at those.
Yeah.
Good luck. Good luck to everyone today.
Good luck out there.
When the market opens. Hey, in other news, Alphabet is on the cusp of overtaking NVIDIA as the world's most valuable company, riding on a record stock rally fueled by its AI efforts and booming cloud business. The potential reshuffling would put the Google parent at the #1 spot for the first time in more than a decade. It last held that position briefly in February of 2016.
Yeah, Google. Just incredible. It's at 396, up $7 here pre-market.
$7, that's nothing. What's wrong with this?
The money that they gave to Anthropic is now being spent on Google.
Oh, I like that.
200 billion.
Yeah.
They gave 200 billion to Anthropic, and Anthropic is using that 200 billion to buy things from Google. Like it's gone. I guess, does that create $200 billion?
I think that's just money laundering.
Sort of.
I think that's.
We should be familiar with that.
I think that's just what it is. But what's NVIDIA doing this morning? Like, can you do a Google NVIDIA pairs trade? Like, what can you do?
It's funny because NVIDIA has been kind of a laggard in the group. I mean, NVIDIA yesterday, I think it was
down.
Ended down
it was
like
down.
$2.
Yeah, it was down
despite
yesterday.
the rest of the semiconductor space just going berserk. It's been
well, people have to finance their Micron calls somehow. So
that's true.
Yeah.
That's certainly part of it. I think you're also like kind of looking at a little bit of a speculation / changing of the guards. A lot of these mid cap stocks are moving, 40%, whereas like, your Meta, your Microsoft, your Apple, your NVIDIA, I mean, they're obviously still massive companies, but they're just not moving this in the same way. It's almost like there's a little bit of like, okay, these are at their peak, and now we got to find the next ones.
Yeah.
It's kind of what this market feels like.
Agreed. But NVIDIA hanging in there around $200, right? 196 where it closed.
I have some long delta.
we'll see if it'll still hang in there because NVIDIA announced they're partnering with ServiceNow. I know, Nikki, you trade ServiceNow. They're joining together to launch ServiceNow's new Project Arc, which is an enterprise AI agent similar to the popular OpenClaw platform that lives on users' desktops rather than in the cloud. Companies now are racing to create their own OpenClaw AI agents, and so NVIDIA and ServiceNow are partnering to do that. So.
ServiceNow unchanged at 92, and this is a stock that's on its butt. It doesn't have a high correlation to the market. Obviously, it's on lows. I mean, the market's on highs. You would say that it had no correlation, which you'd be correct. But this might be one that Ivy rank of 55 may have did something.
Okay.
Trades today. Markets in June are, about 50 cents wide. They're not the best, but something with defined risk might be a way to go.
Also, Uber set to report their earnings tonight. Uber is also partnering with NVIDIA, so that could come out on the call. I don't know.
Uber
I'm just
up $5 here.
spitballing here.
Wow.
So their earnings are already out.
And Uber's on its butt too, right?
Oh, that was this morning was Uber. Yeah.
Okay, so I was joking.
Yeah.
So it is already out. Okay,
Yeah, Uber and Disney and Novo Nordisk were this morning.
nice.
Gotcha.
All of them up.
Apple is going to allow users to select from third-party AI models for tasks such as generating and editing text and images across its iOS 27 features. Instead of just being one singular source of AI, Apple's like, look, we tried to do this. We can't. We don't care. You pick.
Apple is the weirdest stock to trade if you're trading it like we are looking at the market every day. Because you say Apple, and I've said it numerous times on this show, Apple's up $5, market can't sell off anymore today. Or, Apple's unchanged and the market's getting hit. Market can't go down anymore because Apple's just in every ETF, everything that watches the market. Meanwhile, it now has a correlation that's 0.27, which is basically uncorrelated to the market. Is on its highs or near its highs.
But the way it got there hasn't been like
On down days, it's up. On up days, it's down.
Apple does what it wants.
And it's down this morning, $2. There's no way you could have called that with what's going on in the market today.
I think it's become just a commodity. Like I think it is just a like every
You're
year.
doing it for the 0.3 of a percentage point dividend that it pays?
No, I think just like it will. There's no like speculation with it. It's just become like gas. You have to fill up your car.
Yeah.
Every year you have to get a new iPhone. And that's just what.
I mean, and it is interesting too, because they're like, hey, our CEO who's led us over the past decade and a half, he's leaving, and the street's like, okay, that's cool. You're right. Apple's just a commodity, so just stock up on some.
Yeah, it's just like it's a safe spot to just park money. Like, what is it going to go down? I mean, everybody
Yeah.
buys an iPhone every year.
Yeah.
Not sure how tradable or actionable this is, but as a companion to Apple, if you don't want to be on a forced mandate to buy an iPhone every year, Samsung has hit $1 trillion valuation as the AI rally lifts Samsung shares over 10%. Last week, the company reported an over 8-fold increase in first quarter operating profits. Chip stocks on the Kospi rose above 7,000 for the first time. So
Yeah, those are all going bananas. EWY is up like $10 this morning.
And
but that's cool. That's good. Good for you, Samsung. Good
Yeah.
for you,
Good
South Korea.
Samsung. Good for you.
Yeah.
Yes.
Good for you.
Yes.
Good job out of you, son.
Major publishers are suing Meta platforms in federal court, alleging the tech giant misused their books and journal articles to train its AI model Llama. The publishers, as well as author Scott Turow, what are you doing in there, Scott Turow? Have made a class action settlement that Meta pirated millions of their works without permission. What's Meta doing this morning?
It's a dog. It's sitting at like 600 and change here.
Sounds like it's high, right? But I mean, this was almost $800 stock the end of last year, and it traded down to around 550 or so. It's sitting at 600. Has not participated in anything.
Get it together, Meta.
Yeah, I mean,
What's the IV in there?
it's
30. I mean, there's
IV rank at 30. Yeah. I mean, we have small long delta there, and I guess I have that like leap call spread that is far out of the money, but
Okay.
it's Meta is not doesn't look good. It does not look good when everything's rallying and you got a stock that's near lows and it's
yes.
not really. It doesn't have the like picks and shovels that everybody is rushing to buy right now. Like
Sure.
Meta, Instagram, great. We're all on it. Could there be 5 Instagrams in the next like 3 months? Yeah.
Yeah, sure.
Like
Sure.
vibe
I'm gonna
code
build
and
one.
Instagram and Meta's, biggest thing is
Puts.
I think there's risk there.
Interesting data from S&P Global Market Intelligence showed that 4.67% of Nike's outstanding shares were on loan, a proxy for short selling as of May 1st. That's more than 11 times the amount of shares on loan when their new CEO took the reins in October 2024. Nike normally around the last to report earnings, so it's a little bit of runway for Nike to go. But bets are surging against Nike. What do you do?
Nike's been my longest long-term hold. I bought it right
Have
after.
you enjoyed it?
It's gone absolutely nowhere.
Just do it.
I'm down probably a point on the whole thing since the last time it went from 50 something.
Well, the hits keep coming because they've been trying to like engineer a shoe to get like a sub 2-hour marathon, but Adidas actually had 2 runners that did it, I believe, in the London Marathon or either the Boston Marathon or the London Marathon. And so Nike begrudgingly was like, congratulations. But like
I'm still
the thing that
team
they
Nike
need to
'cause-
like hang their hat on, like they can't even do that.
It's the only shoe I can wear that doesn't hurt me. So I got to go with.
I'm surprised because Nike are the most.
Have you ever tried Hoka's? Hoka's are really nice. I love my
And you
Hoka's.
don't wear Nikes. You wear like the bougie like Nike.
Next story.
X,
Banana,
you
please.
know.
I thought you look an on cloud guy. Like you're an on cloud dad.
Nah, that's Scott Sheridan.
Oh, okay. He is
I'm not-
cool.
yeah.
Yeah, he's cool.
Yeah, I can't do
Cool.
that.
All right.
I can't do that. I got to stay true.
Hey, if you're excited for the Upside Down, it's arrived at your local McDonald's. The fast food chain has teamed up with Netflix on a limited edition Happy Meal to celebrate the premiere of the streamer's new Stranger Things Tales from 85, the animated series.
Wow.
So if you are a Stranger Things aficionado, head on over to your local McDonald's. What are Netflix?
I thought this was. I didn't know they had another one coming out.
Well, this is the animated series.
I was like, he's
so.
kind of late to the party.
That's what I thought
Like
too
a
when
year
I
ago, right?
Yeah, this is what I thought too,
Over,
but
like-
it's the animated series. So Netflix or McDonald's, what are the
I
two?
haven't traded McDonald's in forever. I didn't realize it's $285. Actually, $286
At the Lowe's.
At the Lowe's. But my son-in-law, Lucas, was talking about this 2 nights ago. $9 or $10 burger, the whatever.
The Big Arch.
The Big Arch. Or
Yeah, I
something.
had that. It's great.
Yeah, but he
Right.
said like, $9.60.
You may as well go to Chili's and have like a
Well, he's like,
sit-down
I'd
meal.
rather go get a $15
Or go to
Good Burger,
Cheval,
like
yeah.
Like small cheval.
Small
like a
cheval.
small cheval
Yeah.
or something like
Of
that,
course.
Yeah.
But not everyone has a small cheval in their town.
That's true.
So-
That's true. I'm gonna get one.
I mean,
it's gonna come to a strip mall near
support
you.
your local businesses, though. Like, go to your local mom and pop businesses, whatever.
Yeah.
Hey, finally today, it is the spring season, and this weekend is Mother's Day. And this lady, she's not a regular mom. She's a cool mom. I don't know how many of my mom friends can do this, but maybe with some
wow.
practice. But this is pretty impressive, man or woman.
Okay, let's see what she's doing.
Yeah, wait a minute, get it how you live it. 10 toes in when we standing on business. I'm a big stepper.
You sure that's not Sazonov?
That's pretty
Very good.
impressive. Can you do
Very
that? The bounce and the behind the
How
back?
you live it. 10
Yeah,
toes
no.
in when we
Yeah.
standing
The
on
no-look
business. I'm a
catch?
Yeah. I'd have to wear safety goggles. I would wear sunglasses. I'm gonna get popped in that and a helmet.
Thank
That's
you,
a
Laura.
concussion waiting to happen.
Yeah, that's a black eye.
Yeah,
waiting
maybe
on it.
elbow pads too.
Yeah.
Maybe I might need that. Good job, or good job at anybody.
Yeah.
Good job.
Don't forget your moms. Sunday's Mother's Day. Jamokes. Get it together.
right.
Do it now while you can.
Mm-hmm.
We're gonna take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
We got to look back, and I got some special little added stuff in there.
Oh, beautiful. Well, stay tuned. We'll be back in 90 seconds. Tasty Live. Good job out of you. Thank you.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Nikki, we are back, son. You know what that means. Time for a little bit more Tasty Live. That's right, with, a little look back on what happened yesterday. Go. How magnificent were the Magnificent Seven? We always start off with them.
They weren't magnificent.
They weren't.
They haven't
You're
been
right.
magnificent.
That's
It's
right.
been the story of I don't even call them mid caps anymore because they're like $300 billion. But
What is a mid cap? What is considered a mid cap stock right now? That'd be good to know. But go ahead.
well, I wanted to give. Let's go to the first slide here because I wanted to give just a couple things that I've been getting questions about. It's the
Mid cap companies are between 2 and 10 billion.
So we're working on a bunch of stuff behind the scenes, like some little dashboards that we as the content peeps can query and pull up.
Sure.
And so I've been getting this question a lot of like, how wild has this rally been. And so I went back and I put together this is essentially a standard deviation. So I'm looking back at April 1st, which was roughly the bottom of this move.
Yes.
Volatility was at its height.
April Fool's Day. Yes.
April Fool's Day. Surprise. The war was basically over. But the point I want to make here is that volatility reflects both upside and downside. So at this point, we had a 10%-ish downside move. You had the VIX at 25 to 30-ish, really, really high. You have to understand that when volatility is high, it reflects both distributions, up and down.
Yep.
And so that cone is the expected move, the one standard deviation, up until now, based on that point in time. So, and this will be a little bit higher because I did this yesterday, and we're up another 1% today, and we're going to look at SMH as well. But this just shows you how big of a move we've had. Even the one standard deviation at the height of volatility wasn't enough at that point. So, this has been truly historic. We're talking like 2-3 standard deviation type move. It gets even crazier when we go to the next slide.
Well, it makes me feel a little bit better. I didn't realize that by around, it looks like about April 10th, April 15th, somewhere in that range, we were at or outside the expected move for that short period of time.
Yeah,
that's where your line.
Let's go back one just real quick. Sorry.
That's where your line kind of.
Yeah, by the middle of April, you'd blown through a standard deviation,
and that's where I lost my heavy delta from the move down. Meaning, we got long too early, rode it down for a period of time,
and then you get less long as you get outside that.
It makes me feel good, but not that good because
of course
you got long soft delta
that?
After that. 1-by-2 put ratio spreads, some diagonal spreads. That you scalp for good profits because the market moved in that direction.
Yeah.
But you missed the exponential move here. Maybe you're adding more long delta, but it was soft delta. It wasn't that hard futures type delta that you were getting.
And this is a look back, obviously.
It makes me feel a little bit better, but the P&L doesn't matter.
No, but we talked about this. Like we were losing long delta as we were outside of this range.
That's correct.
And it kept going, and that happens. Mm-hmm. It happens even more with
this was the biblical proportions. It happens, but this is the fastest it's happened.
Well, and the point I was making with this was that this was the height of volatility. So this was as wide as you would typically see. Normally, when volatility is like right now, if you looked at this cone
it's going to be much tighter.
Is a third of the size.
Right.
And so even when volatility being very high, you can have tail type upside events, which is what you had here. Mm-hmm. Now let's go to the next slide, which is SMH, to just show this is one of even more biblical proportions, because we've gone you're talking 3 or 4 standard deviations past what the height of volatility was projecting. So volatility at its highest point didn't even price this in any regard.
Yep,
that is a huge move.
Yep.
And so I put this together with the Qs on the next slide here. And so this is all 3 of them together to just show you that no matter what you did, nobody, unless you were, playing absolute tails, nobody had this in the cards. Volatility didn't have this in the cards. You and I didn't have this in the cards. And this is a hindsight look back, but just to show how incredible this was. I mean, you're talking about SMH volatility was projecting, a 20% up or downside move at the peak of fear. Yep. And we've had a 40% move to the upside. Yeah. That'll be 44% today.
Yeah.
So it just a truly historic market move here. One that us Johnnies will never ever get credit for, because nothing is ever as bad or as good as 08. and 2000. But just to show
You get your props there. You've earned your bones. You got
what a
you've got
5
major
standard
bones.
deviation move looks like. There is some risk profiles for
My
you.
buddy Paul just wrote in from Monday, the expected move in the NASDAQ, which you just point out for the week was around 500, and it's already moved 1,000. So, yeah. Same, a rose by another name, saying the same thing.
Historic.
Yep.
So let's get into yesterday. So yesterday, relatively strong day in the market. A 1% move to the upside in the NASDAQ, which has just been on fire. The S&P, the Russell, the Dow, everything moving in tandem. Getting more of that today. You got the NASDAQ and the Russell, the strongest of the group. As we talked about with the Mag 7s, mixed bag here. The Mag 7s have not been the story here. It's really been a story of kind of those mid-cap stocks that are moving, 20% a day, it seems like. Right. These stocks have been kind of on the sidelines, which is interesting because if you are bullish, a lot of these stocks have some room to make up. Microsoft, Tesla, Meta, even NVIDIA, which is in a correction, down 10% from highs. I'm just joking.
It is down 10% from highs.
That's what you call a correction, right? There's a lot of catch-up.
But it's still $200, which was the old high from last week.
Yes.
Right? I mean,
so,
yeah. But Microsoft, you mentioned, this is a stock, high IV rank, no earnings coming, has not really participated in the market, got a correlation of 0.40. Tesla's another one to a degree, but yeah, they all are actually. Apple's down this morning. It's crazy.
Unbelievable. When we looked at the sectors themselves, it was a strong week or a strong day for pretty much everything. So the sector
semiconductors were out of it.
Semiconductors up 3%. We're on the next one here. Tech up 2.2%. You had metals and mining going nuts. You had healthcare up. Energy was up a little bit. It was a can't miss extravaganza. We have the slide up. It's just frozen.
Yeah, you can.
Sorry.
MU up 10, 11%.
The memory, chip
AMD
stocks,
big, all come up huge. NVIDIA down.
I know it's an interesting one.
It is.
When you look at the upside moves here, it's more the same that all those names that you were talking about. Intel, SanDisk, MU, Qualcomm has been a rocket ship. That's really been the story of the market the last couple weeks here. On the downside, it's a list of kind of nothing. You have PayPal in there and Palantir. I think those are probably the two most interesting of the group. Palantir.
I got a little long delta in Palantir. I did that for my option trades today, hanging in there. It's actually unchanged this morning, maybe down 10 cents or something. But
yeah, the momentum is all in the chips.
Palantir after earnings.
Software, anything else just doesn't hold a candle to it.
Yep.
Unbelievable. Yep. And then when we look at just the heat map, so it's another weird one. Like when you look at the heat map and you see NVIDIA and Microsoft, these two huge companies in the red, where everything else is green. That's been the story.
Tesla, Meta, you mentioned them,
It's been the middle of the distribution that has been, and by distribution I mean like the middle stocks in the distribution of size that have been really outperforming the rest of the group, which seems bullish. Like that seems like a bullish indicator. If you say
it doesn't seem bearish.
It doesn't seem bearish. If you told me that the biggest stocks in the world, are net 10% from high.
You can't argue about the 7 stocks being 80% of the move anymore, right?
Yep, that story has completely reversed, and that seems continuously bullish.
Let's take a quick 90-second break. We'll come back. We've got more Tasty Live after this. What comes up next? A little bit of confirm and send. We'll go to your viewer emails. We'll take a look at the market that we got at hand. Back in 90 seconds.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
We are back, son. You know what that means. Time for a little bit more Tasty Live with, confirm and send on Wednesday, May 6th. But before we do, let's take a look at what's going on in the market. Even the S&P's up 50. Sounds like a lot, and it is. They're about 25 handles higher than that not too long ago.
Yeah.
NASDAQ up 300 and change. Russell up 32. Those are your two leaders in the clubhouse. And the Dow, the only indice that has not made new all-time highs. I said it to you earlier today when we were on the show and off the show. I think there's a little bit of a buy the rumor, sell the news kind of thing going on right now, and I'm going to tell you why. I'm going to point to volatility, 1915, well off its lows of 1869, right in the middle of its range from 1960. I don't think we sell off from here today, but I don't think we, like the highs possibly are in for the day. Maybe we'll flirt with them again in the market, but I think you'll be able to have a little bit of two-sided action today, hopefully, which we have had zero two-sided action.
No.
And a matter of fact, we've had our weakest point of the day really at the start of trading, where we kind of make highs like we did today, sell off 5 to 7 handles, and then slowly uptick into perpetuity for the rest of the day. So we'll see if there's a little bit of a change today.
Yeah.
You do have bonds up 29, 113.20. I think we both were talking about bonds being a little bit of a buy there underneath the, the 113 to 112.5 area. A couple of times traded those, worked out nice for us, out of them right now. Bitcoin trade up to 83,002. It's 82,005 right now. Ethereum up 34 on a percentage basis, up twice as much as Bitcoin right now. Oil traded under 90 into the 88 handle. It's now 95, which makes it down almost $7. It traded up to 102. It's in the middle of its range.
Unbelievable.
Gold also had a big move higher. It was another $40 higher than this. It's up 125, which is almost a 3% move, too, in the order move. Good there. Silver silver up almost $4. That's a big move, twice as big between us friends. Up $3.80. Corn, wheat, and soybeans.
They've all been so strong.
And they've all been halted this morning as the corn was down 6 and change. Wheat's down 14. Oh, there we go. They're not halted anymore. Now down 5. There you go. They were halted. They came off of their lows.
Yeah. I just did. So I closed out of the call spread in oil, and I got into an upside broken wing butterfly. So I did another one, the long spread right around 100, and then I sold the wide upside call spread. My whole position is essentially a butterfly right at 100. That's like my perfect spot.
It's a big round number.
With 8 days to go till expiration.
Our producer Laura just said oil is going to 200, so you might want to move that.
So I'm
How
right
many
there.
days? 8 days though, right?
8 days. I
Yeah.
did it for a 14-cent credit, which is $140. So it's a small credit if oil falls out of bed, but it's a pseudo buy the dip here in oil. I have a monster of a USO position that's gonna get vaporized, I think, this morning. So this
Because it's just gone down too much. Only down.
no,
$10.
this is perfect.
Oh, you said
This is-
vaporized.
I've been doing the 1x2, 1x3, 1x4
Gotcha.
ratio spreads where we've been selling so much front volatility the move, not only the delta move, but volatility, I imagine is going to come in pretty significantly.
All right, very good. Very good. You ready to take a look?
It'll hedge me half of what I'll lose in AMD on this
you poor
insane number.
Ah.
What's it at? 408. That's a little bit better.
See that?
Wednesday, May 6th. A day that will live in infamy.
Ready.
Based on the option jive Tuesday and how volatility becomes more overstated the more you go out in time, why not sell options that are 90 days out? Isn't it a safer trade?
Yeah, it's not safer. Math is mathing, right? I mean, 30 deltas, 30 delta, 15 deltas, 15 deltas, no matter where you are. But yeah, you certainly could go out. I mean, 90 days is a little bit longish for me, but I've been putting on some trades in July with 72 days to go. So sure, yeah, if you want to, go right ahead. You get paid more staying shorter term.
Yeah, and past 90 days, it doesn't change. The volatility, the implied versus realized doesn't change all that much.
Yeah.
And you don't get, it's not linear in terms of what you get paid to take that risk. So if you sell something for $1 and it's 1 week out, it doesn't mean that 2 weeks out, it's going to be $2 and 3 weeks out, it'll be $3. It's not linear like that. Like a 30-day option might be $5. A 90-day option might be $7. It's not, you don't get that same sort of, so your value is kind of put towards that, like, 0 to 60-day time frame. That's where the most bang for your buck is versus the further out options.
Perfect. Good job. Next one, please. When Craig was on, that's from the CME when we do our futures segment there. You talked about the launch of single stock futures. How will that was just this week on Tuesday. That was yesterday, right?
Yeah.
Yeah, yesterday. There we go. How will a single stock future differ from owning the stock other than the capital efficiency? Can I still sell a covered call or put?
That's a good question. I don't know if they will have options on them.
Not. I've seen no press release about having options on there after on the release or any time thereafter. I'm sure they'll look into it. I just think it's two governing bodies and they got to get them together. Yeah. It's almost like the Senate and the House trying to get together.
Yeah.
For the good of one side and not the other, which would be the CME.
I think the way you can look at these is if you are long NVIDIA stock, you can use the futures as a pseudo covered call. You're going
to trade 24/5, which will be nice for earnings and other type things like that, or even big moves like you got today. If you thought that you were lucky enough to be long and you wanted to mitigate some of your risk, if there was single stock futures, you could have sold some of those single stock futures against your long delta. I think it'll be great for a short-term hedge type position. You won't get any margin relief between the two.
No.
So it'll be capital intensive, but you'll get 6 times leverage or something.
It'll be an interesting product for people to trade against long shares, especially those that you're doing for tax purposes, like long-term capital gains or something like that, where you've held stock for quite some time and you want to flatten out delta in the short term. You could do that really, really easily in a product that won't, affect that tax status.
That's right.
Which will be positive.
Good job. Next one, please. I believe it's you.
Sure. On the recent episode with the Bats and Dr. J, they discussed the benefits of carrying short delta at all-time highs. Nick went on to say that you can have a bullish outlook in a bullish portfolio, but still carry negative beta-weighted deltas. How would you construct a bullish portfolio with a downside hedge carrying negative deltas?
I mean, it's a great question, and I don't think you can.
I don't know if that was the exact quote.
Yeah.
If you have short delta, you're short delta.
Yeah, if you have short delta, you have short delta. You're going to benefit from a down move. Now, individual stocks inside there, like if you were getting long delta from, and I'll make an extreme here, AMD, and you had a short SPY, naked call, and you were net on the whole portfolio, short delta, you're going to make money in this up move because AMD's move is exponential compared to the move in SPY right now. Yeah. So that would be an example of how you have short delta and still make money. And that's an extreme example.
But that's not that extreme. Because
that's not that extreme, but you can have multiple positions. You got a portfolio of 30 stocks and a lot of individual stocks and a few ETFs, and the ETFs beta weight your portfolio over time, short delta. You could benefit from an up move in those other stocks.
But a lot of the up move and the delta that we had into the up move was convexity type positions, call diagonal spreads, crab trades, stuff where you had an asymmetry of upside delta exposure in single name equities that might go up, 3 or 5%, and short delta in stuff like a SPY or the Qs that is only going up 1%. And so the dynamics of that is that the market as a whole has gone up, 15 or 20%. Yep. But some of these stocks have gone up 50 or 100%. And so even though you had net short delta because you're holding, a bigger from a notional perspective position, like a short MES contract. If you had one short MES contract and it's 50 deltas versus an AMD call diagonal that might have 5 beta weighted deltas, those are from a risk perspective way, way different because the AMD position is a higher beta, and it's realizing that move, and it has a convexity to it where it gets bigger as the move happens. So you almost get long delta into higher prices, net of your whole position.
Very good. Good job out of you. Next one, please. Is there a number of metric? Is there a number or metric that you look at in the morning and sometimes just say, nah, I'm not going to do a 0-day trade today?
More recently, it's just been the level of volatility. I mean, we've been so used to...
/VX or something like
that.
Mm-hmm.
Yeah, I think that's one thing to look at. I mean, on a face ripper like we've seen, I guess today we've sold off a little bit from the highs. Mm-hmm. I'd be less inclined, and just the nature of the market, things are moving so much that I'd just rather focus energy on trading the single names. But I think volatility, we've been used to selling these 20-point wide iron condors for $5. They're $3 now.
Right.
It's hard to, from just a short-term memory perspective, to put that away and be like, oh yeah, let's just be mechanical with it when we were selling these at $5 2 weeks ago. And now they're $3. It's just, it's one of those things where I'm like, I just don't know if the risk reward is there anymore.
Yeah, I mean, and we probably shouldn't be thinking like that. If you go to the research, volatility is what it is because it's pricing in all of this already. And you are going to get those outside tail moves, and that's why you do it with defined risk in a larger product, smaller contracts like an SPX, cash settled. It's over at the end of the day. If you're staying mechanical, you're probably looking to put these on all the time.
Yes.
Let's take a quick.
Oh yeah, that was the last one.
Okay, let's take a quick 90-second break.
Only do 3.
Come back with more Tasty Live after this with even the S&P's up 42, 43. Oh, no. NASDAQ was up 1 1/3%. It's up just about 1% with the Russell. We'll be back in 90 seconds. Tasty Live.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
It's options. Jive. Niggy, we are back, son, and we are back with an option jive. Go.
Let's do it.
How to time profits in short strangles. Can't. Bad day for this piece. Go ahead.
So a short strangle profits from a range-bound movement in the stock. You're trading volatility, you're trading time, you're trading a range in the stock. The risk profile is pretty self-explanatory here. You want the stock to kind of stay in a range, and so we're going to talk about that. So here's just our sample. Stock's trading at 100. You sell the 90 put, the 110 call. This is your strangle risk profile. You have a range where you have a variable profit. In the middle of your two strikes, you would keep whatever the premium is that you sold the strangle for. This is just, what your risk profile looks like. When we talk about strangles, though, expected timing for profits in a short strangle just depends on the delta of the strikes that you select. So what does the research show as far as the average time in a trade for the P&L to reach 50% of the credit received? We usually say around that 21 day is when we like to manage our positions. That's generally when things start or have been working for you. If
it works, it's usually worked by that 21 day. And if it hasn't worked, it's probably time to do something, because now you start getting that risk reward between gamma and theta decay.
For sure. And there's nothing like scientific about 21 days. It's just halfway, but roughly halfway between your 45-day time frame and zero. So you should expect for roughly half of that premium to come in. So when we talk about strangles, closer to at the money, and then longer the duration of these strangles. But when you're talking about delta of these positions, the longer the duration is going to be with the higher the delta of the options. So 40 delta options, slower moving trade. 5 delta options, faster moving trade. The problem is what we're going to look at is the relative premium and risk of these positions. So, when you sell a 30 or 20 day or 20 delta option, that's kind of like where we stay. It's going to take you half the duration to get to your 50% mark. That lines up right with your 21 days. You start this trade at 40 to 50 days. After 28 days, which puts you at that 20 to 25 day until expiration, that's when you're going to be at 50% of the max profit. You might look at this and be like, why not sell the 5 delta option? It's only going to take you 20 days to get your 50%. And that's because there's a lot of difference in the relative premium that you're selling in these positions. So higher delta, going to be slower moving from a total premium perspective, but the total premium is going to be a lot bigger. So the actual dollar value of this decay is going to be very, very skewed. And we'll see that kind of through the next part of this research. And so the two things we're going to look at are win rate and average P&L here. And so when we look at these positions, the closer at the money had the highest P&L, while the further out of the money had the highest win rate. This should not come as a shock to you because these numbers are going to be shown to you right at entry. If you sell a 40 delta strangle, 40 delta on each side, you're going to sell this at $5. When you sell a 5 delta option on either side, you're going to sell this at 50 cents. And so your total P&L, your highest P&L, going to be much greater for the at the money options. You're going to have a much higher win rate for those further out of the money options because they're further out of the money, they're higher probability trade. And so that's what you see across the board with the win rate. The next thing you're going to see is the average P&L. The average P&L is going to be much higher for those 40 delta options, but there's a distribution here, right? So your 40 delta and your 20 delta is a $50 difference. Your 20 delta to your 5 delta, which is the same, relative change in delta. You're going from 40 to 20, so that's 20 delta difference. 20 to 15 is going to be 15 delta difference. But your P&L drops, your average P&L drops from roughly $200 to roughly $80. And so there's a bigger difference in that value. Your relative P&L is not linear across the board. It doesn't go, if you're making...
Sadly.
It would be a lot better because then you just go to the 5 delta. There's always going to be the gotcha when you're trading. There's a give me a gotcha here. And you see that in the average P&L. Your average P&L gets much more steep as you get further out of the money. When you're in that 20 to 30 delta range, it's not that much different than the 40 delta, which is why we kind of focus on that range of delta. Somewhere between the 1 standard deviation and the 30 delta, the P&L drop-off is a lot less than what you see when you get further out on the tail to the 15, 10, 5 delta options. And you see that in the average premium. So your average premium in that position, in that window from 16 to 30 deltas, is relatively similar, is more similar to the 40 delta than it is to the 15 delta, even though they're at the same relative distance away from each other. And you can see that in the return on capital. Your return on capital, it does decline as you go further out of the money, but the drop off is not as steep as when you get to these tail sort of options where you're selling that really high probability trade, but your average P&L is a lot lower. Your average premium, the amount you can the total amount you can make is a lot lower, and your return on capital is going to be a lot lower. So you got to kind of be in the 16 to 30 delta range. You have to put a little bit of risk.
Yeah, but that was a good observation when you made there between the 15 and the 40 delta. That was pretty good. Yeah, I like it.
It's not a linear drop off is the key here.
Next one, please.
And so for risk, to better understand the worst case downside relative to the capital risk, the closer at the money options had the highest loss, of course, because they're closer at the money, they can have that potential intrinsic value, even if the further out had the highest win rate. The problem here is that it's not that big of a difference. So if you're selling the 40 delta options, your largest loss relative to buying power is about 1x. When you're looking at the 5 delta options, it's about 0.5x, which seems like a lot. But when you factor in the amount of premium that you're selling, you're talking about a huge difference because we're looking at buying power. These all have relatively the same amount of buying power here. And so, your small little wins on the 5 delta, the one loss is going to offset hundreds of them, where it's only going to offset, 5 or 10 of the wins from the 40 delta, the 30 delta. It's a much more manageable risk if you're selling enough premium to make it worth the risk. When you're selling the junky tail options, you're going to win a lot of the time. The one loss is going to offset many, many, many occurrences. When you're selling the 20 delta, you're going to have many more losses, but it's not going to offset, 100 wins. It's going to offset 5 wins or 7 wins, something like that, where it's much more manageable there. And you can see that in the max drawdown. Your max drawdown of 26% relative to the buying power, even on a 40 delta option, it's going to be much easier to get that back than it will be with the 5 delta option, even though the max drawdown is quote unquote lower.
Perfect. Well said. Eat like a bird, poop like an elephant is the way an animal would say it.
Yes.
That's what happens.
It's a good way of saying it. So finally, we're going to take a look at how Strangles performed when IVR was elevated above the 30 IV rank. So we're going to look at just higher volatility Strangles versus just the whole data set here. And so when IV is high, we saw a faster turnaround on larger profits, but the 5 delta seemed hardly worth it. This is even more to the fact, and our look back from this morning where you see, like, when you have a fat tail on the upside, it can be huge too. A delta increase, days in the trade and average P&L increases while the win rate decreases. This further shows you that the 5 delta options, it's a lot of tiny little wins, but those big losses are gonna really spank you. You got to be somewhere in that 16 to 30 delta range. When you get to that 40 range or the 40 delta range, the difference of that to a 30 delta is not going to be as great as that 30 delta is to a 5 delta, or that 40 to 20 to 5. The 20 is going to be your most optimal of the group of those 3 options, somewhere in that range.
Yeah, we're looking for optimal. It's good and better here, right? I mean, they all work to a degree, right? And you can pick and choose. But if you're going to go optimal and you're going to pick and choose, after a little while, you're going to work it out where you're right around that sweet spot that we're talking about. And that's where you should be.
Yeah. Yeah. Good. And this is just for high volatility. Mm-hmm. And so when you're at the high volatility, you're looking at the same things. 20 to 30-ish deltas are spot.
Nothing changes, all the same.
So for Strangles, the amount of potential profit and the likelihood that those profits are realized depends on the strike selection. Historically, the more aggressive strike selection, which is closer to the 40 or 30 delta, has had a larger average profit, but takes longer than the less aggressive alternatives. So your 5 delta options are going to move very quickly from a percentage standpoint. It's just going to be a lower amount.
Perfect. Good job out of you.
Good job
out of everyone. Everyone gets a participation award.
Awesome.
We're going to take a quick 90-second break and come back. We got more Tasty Live. Even the S&P's hanging in there, I guess, up 46 is more than hanging in there. They are 30 handles off of their highs. They are about 50 handles off of their lows. NASDAQ up 270 and change is about 200 handles off of its highs. Interesting or not interesting to you?
Yeah, I can't decide if I feel you're buy the rumor, sell the news, or if I feel like
it's another day like yesterday or the day before, the day before that, and the day before that, all this whole up move really since April 1st, where we sell off a little bit in the morning and catch a bid. Well, we will see. Maybe take a look at volatility /VX down.
Oh no, Trump tells New York Post it's too soon to prep for the Iran peace signing. So maybe there's your bid in oil here.
Oil is down almost $6, but it's 96, about $4. No, more like $6 off of its highs and about $6 off its lows right in the middle. We'll take a quick 90-second break. We'll talk more about that in the opening bell right after this.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Back, son, and just like that, the opening bell is imminent. Just about 2 minutes. E-mini S&Ps are up 44. NASDAQ up 250. Russell up 26. Dow up 400 and change. We'll take a look at the Dow just for giggles here. Up 400. Almost the leader in the clubhouse now to the upside. I guess the NASDAQ, the Russell, and the Dow all up around the same. But you can see here the Dow is about 500 handles off of its lows. It's about 200 handles off its highs. When you take a look at the NASDAQ is about 150 handles off of its lows, yet it's almost 250 handles off of its highs. NASDAQ has sold off a little bit as the Dow has stayed consistent. Still up 1%. Volatility 1919. It was a very good year, down 60 cents. Bonds 113.17 off of their highs by about 10 ticks, well off of the lows by almost a full point. Bitcoin up $320, although it was $1,000 higher than that. Ethereum was your leader in the clubhouse between Bitcoin and Ethereum. Now it's basically equal to the move in Bitcoin. What I'm trying to point out here is highs were made, it looks like, overnight so far. We'll see if that holds. I think it will across the market, but we will see. Oil down about $6 here, catching a little bit of a bid, down from up from 88, down from 102, right in the middle of its range. Gold up $120 and change. Silver up $3 and change. That gold-silver relationship has not changed this morning. As a matter of fact, let's take a look at the gold-silver. Hasn't moved. It's about 61. Remember, we were talking about the gold-silver ratio being around 62.
It hasn't moved.
And change. It really hasn't moved, no matter what gold and silver has done right now. Across the board here, as we look at some of these stocks for earnings, let's look at AMD. It was up around $75. Let's see what it's doing right now. AMD up around, I don't know, you want to consider it $50, $55? So sold off of its highs that it was making last night a little bit. Ding, 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 ding. Here's your opening bell. Life. Light, L-I-T-E, was the only bucker, and it's down around, well, it depends on where you look, $2 to $11 right now.
I mean, that's an inside move if I've ever seen one.
Yeah, only 1 million shares have traded. It's relatively light. We'll take a look at the rest of the market in just a quick second. Volatility 1920. All right, my man. What do you think here?
Give me a second.
I think when you went to bed last night, well, I mean, maybe before the day started, you didn't think that it was going to be like this, right? I mean, who had this in their cards?
Yeah, I didn't have this one.
Mm-hmm.
Okay.
Let's see. Love up $2. Got a little long delta in there. We'll see what's going on.
Disney.
Yes, with
randomly
the
up.
move lower in oil.
Disney had
a
a
good thing, right? Yes.
I don't know. Going to the junky stuff right now.
Mm-hmm. Okay.
That was just a put I had as part of a strangle that in DraftKings is a tiny nothing thing.
GLD up of $12, almost 3% move there.
Yeah, I probably
I've been fighting some long delta in there, finally getting paid today. Just a matter of whether you take it or not.
I think you got to stay long there.
Do you think so? I had a 1x2 put spread on, but it's $10 wide, relatively high. Very good.
I'm going.
I know. I'm doing the same thing here. I'm so sorry.
I've been scalping calls short term in GLD. So I'm adding them back.
Got you. Covered them is what you mean.
Well, I covered them the other day, and now I'm laying them out.
You've been trading them
into this move. Yeah.
That's a great job out of you. You know that?
Good job out of you.
It's a good job out of all of us. Everybody gets a participation award.
Yes.
Mm-hmm. Sorry, I'll be right there.
Mm-hmm.
As we look across the board here, even the S&P's up 49, AMD up 63 and change. It is unbelievable when you think about it. What's your Intel doing? I'll get there in a moment. INTC.
Probably up.
It is up $2 though.
Why not?
I mean, relatively small move when you look across the board here about everything, right?
Yeah.
Let's see what we're doing here. Again, let's go to the high option volume list here and see what's moving this market. We'll see what the buckers are right now. You got a bucker in ANET down $16. USO obviously down almost 9. Microsoft can't catch itself a bid, down 6. Market's catching a little bit of a bid. Palantir, I have some long delta in, down $4.60. D-Dog has earnings coming out tomorrow before the market opens. It's down $4. CRM, Tesla down $3. Apple down $2.60. Crazy Apple. ServiceNow down $2.40. And on the upside, you got some big movers. AMD up almost $70. GLW, what's going on there? What's going on with Corning?
Partnered with NVIDIA.
Partnered with NVIDIA, up $30, a 20% move. Sure.
Why not?
NVIDIA up $4 also on that move. LRCX up $16. Carvana on the fact that Vinny might look for a Boxster up $15. Light is now up $14. Again, about 300,000 shares have traded from it being down 14 to up 14. Crazy moves here.
Crazy moves here.
I did not take your word for it, and I closed my GLD.
Probably the better.
Took my ball and jack and went away. I closed my love also, just because I wanted to be a win for my sister by selling puts in there. You just did something in USO, Tesla.
Yeah, I closed out the short calls. I sold them at like $3. They went to like 90 cents.
Ooh, good job out of you.
I did it 1 by 4. And I have some left too. I mean, like I'm short front volatility there, but with the closing of those calls, I'm getting a little bit longer delta here.
Okay. Long delta has not hurt anybody in just about anything this past month plus. So at this point, I wouldn't worry about anything. Volatility hanging in there, 19.15. Bonds are hanging in there too. We're basically opening where we spent the majority of the morning so far since we've been on this show around 7 o'clock. Even the S&P's up 55. NASDAQ quoted itself a bit up 300 now. Your Intel was only up $1. It's up $3.50 now. Hope that makes you feel better.
Oh, yes.
Oh, I'm sure.
Amazing.
I got you.
Do I scratch ASTS crap?
Some of the things that you did, you covered USO, Tesla Gold, DraftKings, oil earlier this morning. Did okay there. CRM. CRM down $3 and change here. CRM bucking the up move.
Is service now going to stay at 90 for the next 9 days?
All these service.
Do you think it's going to stay at 90 for the? I have a butterfly that's right there. I just closed it.
It's been a.
That's $4 out of that.
Yeah, it's been a nimble market. It's been a resilient market, but really, it's a type of market where if you take your profits, you had an opportunity to do something again with it. Unless it's been in these big flight to quality, like the ARMs of the world and the AMDs of the world and the Intels of the world.
Yeah, these things are just.
VST has earnings after the close. Been getting a lot of emails there. Hasn't really participated with the overall market, up 64 cents. When you look at markets in here, and I'll go to the front month, May, they're quite wide. This is a defined risk trade, if anything at all. Good IV rank of 66, but the markets really don't warrant anything that uses a lot of buying power. Oil's down $6, sitting right there. You close your service now. I mean, it's a what was it, a $10 wide butterfly for $4. I mean, I think you maximized your return on there, unless you're really going to just.
I mean, I legged into it.
Roll the bones, yeah.
So
by bones, I mean roll the dice.
2 extra calls I can sell.
2 extra calls to sell into where?
All right. So I closed out of. I had a leftover long put from like a crab trade that I had in NVIDIA. I closed that. I sold 2 calls against it. So now I have short puts, call diagonals into NVIDIA earnings. Long, aka the stupid.
Okay. Palantir down $2 and change. It was down significantly more. It traded down to around 131. It's 133. So it's cut its losses by about 40% or so. SMH up $16.
Unbelievable.
SPY up $5 and change. XOM, I put on some long delta there a couple of days ago. I'm out about $1 or so on that. Trading 149. I've got a short call spread and a short put in XOM. I'm going to sit with it. My short put is 145. The stock is just under 150. So we'll sit there. XOM down around $4 and change. Good IV rank of 64. Obviously no earnings coming because they had earnings already. All oil related with /CL down $6 and change.
I'm trying to do something in EWY because I'm.
Okay.
I'm trying to do a short-term put ratio spread. I have some short delta there into this move. Obviously, the stock the ETF is at 180. So I have some units I can sell on the downside. Instead of doing them naked, I did a put ratio spread. Short term.
That's what'd you do is that NVIDIA?
No, that was EWY.
What'd you do in NVIDIA?
I did NVIDIA. I sold the extra call. Closed out the put, sold some extra
You're just
calls.
trading here.
Short put, call diagonal spreads.
I like it.
So we're upside in NVIDIA.
Got it. NVIDIA is up around $4 this morning after trading down to under 200, 198. It's 200 and change right now. NVIDIA catching a little bit of a bid with the rest of the market. Good IB ranking there. Volatility expanding. Earnings are May 20th. Looming when it's only May 6th.
Yeah, it's the last one of the group. Moving B is helping.
Even the S&Ps, I think this is not a SPY type market. This is a
no, this is NASDAQ.
This is a NASDAQ.
This is all NASDAQ.
Yep, all NASDAQ all the time.
Yeah, I don't even know what to do with AMD. I don't think you can do anything.
I don't think you can do anything with AMD either.
I'm just short the stock.
Yeah. AMD.
I mean, you can't. What are you going to sell? The
$67.
350 puts for $5. I would rather, if we get to 350, I'd rather be out of the stock.
Yeah. I mean, you can here.
Your sister.
You can buy 30
sell
shares.
the puts.
You can buy 30 shares of stock. You can do an upside diagonal spread to mitigate some of your short delta and hope that you get killed on that spread, right? You can buy a in the money call spread. You can sell an in the money put spread to reduce some of your delta in there. It doesn't necessarily have to be just rolling up. If you want to have that move lower in the stock, you can do something with defined risk that still gives you that velocity to the downside that you're hoping for when a stock goes from 200 to 400 in what seems like 24 hours. Yes. Good.
Do you like that?
Yes.
Did you like that trade that I just did? Oh, you don't. I have to push it through.
Push it through. I'm so sorry.
I did it 1x3.
You did it 1x3.
The crab trade. So I bought the 420 in July. I sold 3 of the 370s in June.
In July, you bought the 420.
I'm short stock. It's a trade where if we get to like 400, I can make back a decent amount of money here because I'm short the stock.
You sold.
So I'm
puts.
short.
You did this
I'm
in
short
puts.
2 puts to 1 deep in the money call here.
Got it.
So we got to move back to 300, and I miss out on $40 or $50 to the downside.
Got it.
But if we go back to like 350 to 400, 350 to 400 is my spot.
Yeah. So here I put up the trade for you so everybody can see it.
Yeah.
You're doing exactly what I suggested that maybe you do was pick up 26 deltas, pick up some long.
But it's a little dynamic delta.
It's a little dynamic delta. It's not hard delta. That is.
But you have dynamic delta only down to really your short strikes.
That is correct. You hope that this happens.
You hope that this gets
not tomorrow,
but over the next 30 days.
Yes.
You want to trickle down to 400.
Yeah, or some back and forth action where you can do something that's better than just sitting smoking opium.
Yes, for sure. But
and I know this would have been better yesterday or the day before or any day prior to that, but you got to do what you got to do.
I'm long a call in Baba at 140. I sold the 150 against it into earnings.
Good job out of you. Even the S&P's up 54, hanging steady. All right, my friend, you ready to take a quick 90-second break?
Sure. We have, what's your assumption? So we have trade ideas coming. So
we need them. We want them. We have to have them. I just can't wait to see these prices.
I know it's going to be amazing.
We'll be back in 90 seconds. This is Tasty Live.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This
was not a paid, you're not getting paid for this advertisement. Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, we are back, son. You know what that means. Time for a little bit more Tasty Live with, what's your assumption? What do you think here, son, about the market before we get to this? Even the S&P's up 56. Resilient, to say the least.
Resilient. I mean, you can't, there's no way we're going down. I mean, you can't go down when things are moving $200 billion a day. It's just not, at some point, you'll have a breather, but the market as a whole, how do you go down? Today. We're talking today.
Yeah, we're talking today.
But oil is strong. You got volatility, like staying bid.
Mm-hmm.
I mean, everybody knows that there's risk out there.
Everybody knows there's risk out there.
Yeah.
This is true.
I'm just short. I'm just short stock in the two biggest freaking movers, Intel and AMD.
Yeah, Intel INTC up another $4. I'm just rounding higher here, almost 112.
But I gotta roll to June. I gotta do something here.
Yeah, you have to do something.
I'm doing like the same thing that I did in AMD, but this one's like I'm just too short stock, so I have to roll this up to something that has some sort of extrinsic value. I mean, I'm talking about rolling to an 85 delta.
Yeah.
Like from 100 to 85.
Did you ever think you'd be rolling that much?
No.
Yeah.
No.
So either.
Okay. Cool. Let's do it. What's your assumption?
Let's go.
Great ideas. I need them.
I need him. You need him. We need him.
ARM.
Twice as good. ARM.
Earnings play. Stock's up 10% today. $21.
Yeah.
Neutral on ARM. Well, I doubt it pushes through 240. It's at 230 right now. But the downside is harder to call. Oh, what does a new subscriber do here?
Yeah, a new subscriber. Stock's up 10% already. What about a broken wing call butterfly in June?
Broken wing call butterfly.
Call spreads trade cheap when you've got call skew, which you're going to have here. You can just do a little something, something. Let me see which one we can do. You can go here, 280, 300. I'll put up on the screen for you for a quick second, if you're so inclined. 280, 300, 340. You're long a $20 wide one, short a $40 wide one. I was trading for around a dollar credit. I don't know where it's going to trade now, around 80 cents, something like that. What do you think?
I was looking at you're looking at the 240, 280?
You're going closer to the money.
250, 280.
I was doing 280, 300.
We're doing this game again?
What's that? Here, I'll give you, here, you want
I'll
more?
do the 260, 300.
260, 300. So you're going wider. Okay, go ahead. Give me what you're looking at.
260, 300 in June.
Okay, that's 1 by 2.
1 by 2.
And are you going to buy something upside or no?
No.
No, you're just amazing.
No, I'm just, I'm
340.
ready to get my face ripped off in this one.
Don't trade angry, boys and girls. Just trade. If you can get filled. Markets are wide.
Yeah, they are wide.
Trying to get filled?
Trying.
That's that little cancel and replace that you hear. That's correct. Even the S&P is up 52.
Oof. Can't get filled on this. I mean, these markets, they're not even that wide.
They're not. I mean, they're 30, 40 cents wide, but you are selling 2 upside. The stock's up $20 now. Sold off about $1 or so. What are you doing this for? A small credit, right? That's the problem. Hello?
Yeah, I'm looking, I'm working.
I know, but there's
I'm trying.
You got 80, 90 cent wide markets. Just leave it.
I know
and I mean, the natural is no credit. The natural sell is $2.60.
I mean, is this stock going to open at 300?
Probably. That's why I want to do something with defined risk. And
we're going to do something else.
Okay, so here I'll give you this. Are you ready? Because remember, the 300 is about a 25 delta, which is about a 50% chance of a touch, right?
Yeah.
So let's do 290, 300, 330. If you want to get more credit here, you're looking at $1. 290, 300. That's only $10 wide. Normally we would go to the 320, which you would do for a small credit. If you want to get more credit to your whole thing, you can double your credit by going to the 330 and see what your credit's going to be, right? Your break even is 310. It's above where you were looking at just a moment ago, or close enough to it. What did you do? You did the
280, 300, 350 for $1. That's a 50% move in 40 days.
Okay. I don't hate it. 97% pop, but stranger things have happened.
This one has debacle written all over it.
Well, you did 280, 300 short, and then a short 350.
It's a ratio spread.
You did a ratio. You did a
call ratio spread. I did a Johnny Sosnoff ratio.
Yeah,
and it's going to lose me 10 grand.
Okay. All right. Fair enough. Fair enough. All right. Good.
I'm with you, Ben. Let's see the stock open lower.
Even the S&P is up 59.
Next one, please.
Next one, please. Volatility in by 48 cents. Cancel crash.
This isn't, I mean, Vol's kind of on the higher end of, it got down to 1860.
Yeah, last night. Yeah. Yeah,
it's a weird one.
It is a weird one.
I lost the screen in here, but so Snow, neutral, June, selling the 120, 190 strangle for a 776 credit. Software name, probably going to zero, right?
Yes. Snow. What are you doing in here? Have you put on positions in Snow in a while? Snow down $4. Definitely a bucker. And it does look like it's been bucking the trend. And as you would imagine, the correlation is negative in there. So if you got long delta in there, it really wouldn't help any beta-weighted deltas. This would be an example of what we were talking about just a moment ago when we were going through some of the confirm and sends, where how you can have a bullish position in something and have negative delta in SPY. See that? If you wait long enough, everything gives you an answer. Bonds up 25, oil down $5.80 to 96 and change.
All right, I did a diagonal spread in Snow. All diagonal spread. I'm long the 145 in June, short the 155 in the May 29th that goes into earnings. I did a $6, $10 wide, small little shot, doesn't have as much downside risk here, and a little bit of an upside buffer.
Beautiful.
An upside play.
Beautiful. Look at you, my friend. Good job. Good job indeed. Next one, please. SPX 0 day. We haven't done anything. Here's your chance to be a superstar. What do you want to do? How'd you do on your SPX yesterday? I'm so sorry.
Good. We made a couple bucks on it. I actually closed it towards the end of the day, which kind of saved me.
Awesome. Managing these trades has been the savior to all of these positions. Right?
Yeah. I think we're going to go back to the well. If I can get filled.
Shit. What do you got here? What are you doing in?
Trying to do a butterfly, like a
you're doing your upside butterfly again.
Like a 50-60 center.
And you're doing a call one, I would imagine?
Yes.
Got it.
70
there
cents.
You go. So
that's the same as what we put on yesterday. So.
Yeah. It's basically same setup, different strikes, obviously. Yeah. Your debit that you pay is not your risk. Obviously, your max risk is that broken wing part of it, that upside where you have $500 worth of risk paying $70. So $570 on $1,000, $930 since you're paying $70 for it.
Yeah.
Probability of profit is quite low because you're paying that 70 cents, but the probability of managing this trade is quite high.
Yes.
Good job out of you.
All right, so we're in SPX. Celsius.
When was the last time you traded this? CELH.
In quite some time. Wow.
Yeah, Ivy rank of 81. I'm sorry, I missed it. Has earnings tomorrow. No, the 7th. Sorry, I didn't miss it. So it's the 7th, which would be
selling the 30 delta put for 90 cents, break even near 29. Tony in Newark. If it drops below that, they're going to take shares.
I actually like the play, but let's see what the May 30 puts are trading at. I mean, they're 85 cents or something like that. How about doing something with some upside earnings? All seem to be good everywhere across the board.
You can't miss.
Right. Even the ones that do miss, can't miss.
The markets just stink here. Look at some of these.
Yeah.
Like I'm looking at some of these May options. Like I was thinking a poor man's covered call or something like that.
Yeah.
You got 40, 50 cent. I mean, some of these, the 38 strike calls are 85 cents at $1.52.
Yeah. Yeah.
Even
the at the money puts $2, $3.10.
I think I got to pass on this one.
I agree. You could do better price discovery at home for us.
Yeah. I'm sorry, Tony.
I'm sorry, Tony.
Tony.
Only the best tasting tuna becomes Starkist. It's an old commercial. Go ahead.
Cool. GDX. All right. I have a GDXJ position. What are you thinking here? Looking to get long some gold-related assets. Well, 7% today. The market feels a little hyped up, and if something breaks, gold can catch a bit again. I'm with you. I have some long delta in gold in general here. What are we thinking?
What are we thinking here?
Okay.
GDX up $6.70. It used to be an $85 stock. It's $92, up almost 8%. Ivy rank is still good at 53, but GDX, like gold itself and all the rest. By the way, what is gold doing here? Up $145, back near its highs. So you were right about holding off. What'd you do? Looks like
cheapy little diagonal spread.
Oh, there you go. There you go. That's my boy.
I don't know. It's hard to.
There's my boy who used to make money every day. There you are. Good diagonal spread. I like it.
I mean, it's a 6% upside move, so it's hard to sell the puts.
Push it through for me, my man.
Yes.
Good job out of you.
Good job out of you.
No,
you.
Welcome back to the fold.
Oh, you. Fastly. Okay, we did make some money on this stock randomly one time. If you remember, it had there was a 2 or 3 day, from here. So it went
hope they waited for this bullshit.
It went from 34 to 24, and we had a in the money call spread that basically went from fully in the money to fully out of the money in 3 days. Stock can only go up from here. I want upside.
Well, it's down 7%, which is $2.25 dollar move right now. Okay. So
only up.
Please, Ryan, San Diego. Hope you waited.
Earnings are today, May 6th. Yeah.
Earnings are today after the market closes. Yes.
What do you do here?
You have a $5 expected move. This is a mover.
Yeah.
By the way. Markets in here are kind of as crappy as the last stock you looked at. Even the S&P's up 61. Cancel, crash, bat, you suck.
Yeah, markets do stink here.
It's a tough one for me.
Yeah.
It's a tough one.
All right.
Hard to do anything in here. If you're doing the 2-day options,
I'm not taking the downside risk here. I don't know anything about this stock.
And the stocks you do know about, you take some downside risk on. Don't worry about it. They only go higher.
I know.
You don't have to take any downside risk. You'll be fine.
All right, I did a cheapy diagonal spread.
Cheapy diagonal spread.
$3.64. I'm long the 30 in June, short the 35 in the 2-day, expiring this week.
Oh, I like it.
Taking a little shot. I mean, there's minimal if the stock opens at 15, I'm out a couple bucks. So
I like it. I think you did good there. I don't usually say that.
Thank you so much. I appreciate that.
But I like it. You did good.
Thank you.
Oh, you're welcome. You're welcome.
Hymns. Okay. We're getting in the weeds here.
We are.
We actually, we were doing those 1x2, crab trades in here last time. I think we did diagonal spreads too. Stocks trading at 25. Earnings are next week, and I'm bullish for the next couple of months.
Okay.
Wow. Okay.
What do you think about that?
What do you do here?
Bitcoin now down $100. That's the one of the reversals there, about $1,500. Same thing with Ethereum. Oil hanging in there right there at $96, down $6.
What are we doing, Hymns?
Hymns, tough one. They're bullish. Hymns down 37 cents. Has earnings May 11th. Hymns has not been a real market mover to the upside. Correlation basically unch. Why don't you let's see.
I'm going to do the same thing I did in Fastly. I have no bone to pick here.
Okay. I mean, you could do a little bit of a
25.29. Sold $1 in the 29.
Oh, you did exactly what I was gonna tell you to do. By June.
Well, they're bullish for months.
Right.
And I mean, June is a month and a half out, so.
Right. You're buying the June 25 call, 96, a very high monthly implied volatility. But when you go up to what you sold here with May 15th, with the earnings coming on the 11th, you're selling a juicy 136. You got almost a 40 point vol differential between the two. You got your 25-ish deltas, 27 and change. I like the play.
Yeah.
That's an intelligent play there.
A little engagement trade,
I like
would
it.
say.
I like it. Yeah. Mhm. Good job out of you.
Good job out of you.
Next one, please. McDonald's. Oh, we were talking about this bullish. What is McDonald's doing this morning? Up 50 cents. Did we miss it?
It's got earnings this week.
I'm just kidding. If you look at McDonald's, it hasn't had an uptick, which seems like into perpetuity, which has really just been the last.
I have some long calls. I've done diagonal spreads here. I think I'm out a couple bucks on them. Net.
Okay.
But I've scalped out of the short call, so I'm just long the calls. What are they thinking here? Weeklies. Okay, can't be bearish on McDonald's. It's close to the support at 280. Okay, adding an out of the money put spread. All right.
How's that make you feel?
I mean, volatility, just like this is a low volatility underlying, so it's a tough. I guess you do the 280, 275 if you're doing this in the weeklies.
Apple up $1 and change. I only mentioned that because it was up about $1 higher than that a moment ago. You mean the S&P's up 54. AVGO, which has been one of the market movers to the upside, was trading 437. It's now 425.
Another diagonal.
$3. Good diagonal trade for you. Google still up 5. Microsoft down $1. Palantir
The
down
mega caps
$1.80.
are not participating in this. Nvidia is. Nvidia's up like $6 or $7.
Nvidia's up $7, $7.03. Yes, you are correct.
AMD coming in a little bit. That's nice.
Yep.
Okay, so we got a little long delta in McDonald's. Kirk looking at Boeing, right? Was that the next one? We did that one. Boeing neutral. Wait. I think they're
McDonald's is the last.
It's okay if we don't have the comments. They're all good.
There we go. Yeah.
Boeing neutral. Kirk.
San Diego. Sioux Falls. Sorry. Boeing. Haven't traded that in a while. IB rank of 37. It's up $4 and change.
What do you do here?
What's a new subscriber to do in Boeing? Well, they're neutral, so I'll go with that too. Markets are okay here. Boeing in the middle of its range. What about just a good old-fashioned 43-day iron condor? What do you think on the 20-ish delta? Go $10 wide?
Yeah.
Okay, I was doing $10 wide, 350, 60, 10, 210, 200. Mid price is around 290.
I did it 20 points wide.
Same short strikes. You just went 20 points wide. Good for you.
Just a little bit wider.
Yeah, I have no problem.
Same thinking.
Yeah, same thinking. $100 wide, $100 stock, $10 wide, $200, $20 wide. That's kind of how we look at things, just from a high level point of view. I was just being a little bit more conservative with the markets not being that great in there. Next one, please. I think the last one. Meta, medium term, still bullish on Meta, but I don't want too much downside exposure. Jade Lizard feels like the right structure. Now, remember, Jade Lizard does have risk to the downside. This is a $600 stock, so it's going to be very capital intensive, Kyle, in Ohio here. June, if you're looking at it with Meta up almost $3. I hope you put it on yesterday. It hasn't really gone anywhere, Meta. It is sideways. I don't know about a Jade Lizard. I would probably have defined risk to the downside. What do you want to do here, son? June.
I have some upside here. I have.
Oh.
We did that leap.
Congratulations on your wealth. It's up $3.
Small.
Even the S&P's canceled crash up 57. They sure do make it tough.
Yeah, they do.
Apple up $2 now.
I did a July-June diagonal spread.
A July-June.
620. long, $6.55 for the short. Nets you about $20 to $30.
Yeah, 21-ish long
Same-ish
deltas.
as you would get with the Jade Lizard. But
Yes, very similar to Jade, but defined risk, right?
Yes. Yeah.
I like it. Good job.
Especially because if you're selling the puts here, you're going to use $6,000 in buying pot.
Yeah,
it's a lot of capital to put out there. I'd rather put this
for an Ivy rank of 30.
Yeah,
it's not.
It's not going to move all that much in the short term, for or against you.
Will you push that through for me? Yeah, it'll have much more soft deltas than the deltas that will be created by the Jade Lizard as it goes lower. You're really going to pick up a 1-to-1 delta. Even the S&P's up 61. Son, told you. NASDAQ up 350. I'm kidding on that. Completely wrong. I thought the highs would be. And I mean, we haven't made new highs yet, but still. Ooh, look at you. 8 out of 10.
What a day.
Yeah, what can't you do?
What can't I do?
Unbelievable. That's right. Well, I know what you can't do. You can't make sure the TP's in the room, but we'll find out immediately following these messages. We're going to go with our friend TP. We got a tasty extra coming at you next.
Beautiful.
It's always electric when TP is in the...
It is electric.
We'll be back in 90 seconds with Tasty Live. TP next.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Nicky, we are back, son. And you know what that means? We're joined by this man. TP is in the house. How are you, TP? You looking fabulous, my
I'm trying
friend.
to sober up a little bit before I hop on air. It was getting a little out of hand in the pre-show.
The Ocho channel, which we are.
I'm just talking about. That's right. You're talking about, the development of technology, all this stuff. Tony, I asked you, if you had a Polaroid swinger back in the 1960s, you couldn't quite remember what that is. We had one. That was a camera to us in those days.
Sure.
And,
I actually bought my my little grandson a camera. This is how far they've come, and we're getting completely off topic here. But a camera that basically puts out like a digital picture of you almost instantaneously, and you just rip it off on a piece of paper. It's a little $25 camera, and it takes pictures within seconds. It's just black and white. No smearing of the picture or anything like that. So he runs around taking pictures of just about everything. The cartridge for the refill is like $1.50. I mean, it's amazing what technology has done. But you're right, TP. We didn't even have cameras when we were
back in your day.
That's right. They weren't even invented yet.
No, it's like you had drawings, rough drawings.
That's right.
And the rich people had paper. Just saying. Just saying.
That's right.
So speaking of technology, Nikki, I think you were bullish on AMD, and
not this bullish.
Not this bullish. Seriously, this whole rally. One of the things that's interesting in this, especially with things like companies like AMD and all that, is the whole capital expenditure thing. What I was reading is they're coming out with these, $800 billion, the top stocks in the S&P 500, the big market cap stocks are all talking about spending all this money on AI. And eventually at $800 billion this year, over $1 trillion projected next year, that eventually they're going to start getting the negative free cash flow. So they're going to start eating into the money that they have easily to spend on this stuff. And the argument is that they're going to have to sell bonds to raise money to build all this stuff they're doing. Could start pushing up bond yields, pressuring bonds, prices. I don't know. It's just something to keep in the back of your mind. I'm still kind of bearish on bonds for a variety of reasons, but eventually this CapEx stuff, this capital expenditure stuff, I think it's going to come home to roost at some point. It's just like all this money pumped into this stuff, and who knows if it's going to pay out. You really don't.
Yeah, no, you don't. Of course not. But so far, everything pays, TP.
Seriously, no. It's this rally is, I don't call it insane, but you know what, Tony, the market doesn't care.
No, but you could call it the biggest, the fastest of all time.
Yeah,
and that's what it is. So I mean, to say that you didn't see it coming is easy to say, right? I mean, maybe 100%. A rally back after after April 1st. Bottom there, to a degree. We talked about it a little bit this morning, where when we went outside the probability cone, I was losing.
We're a 2 or 3 standard deviation move in the last 30 days.
Right.
Even,
not in a year, in 30 days. Think about that.
30 days.
It's on the upside.
Yeah.
That's and we're going to talk a little bit about that in a second. But it's that upside volatility that it certainly surprised me. And I've been doing this for a long time. And you just don't see that kind of risk acceleration.
Right.
The velocity of risk to the upside like we've seen. Yeah. And there's a point where, okay, that's what the market wants to give us. As long as oil is relatively stable, they don't care that it's $95 or $100 oil, just so long as it doesn't go down to 60 and up to 120. You can plan for that. They don't care that, 30-year bonds are pushing 5%. They don't care as long as it's stable. And that's what it is. That's what it is. And so let's get into the segment here, because there's a lot of stuff I know, Nick, that you've looked at in the past. So one of the things, no, I don't want to get to the disclaimer yet. So one of the things that I saw yesterday, I know somebody's talking about, like 80% of companies beat earnings, but 61% of the S&P 500 companies that reported recently over the past couple of weeks Their earnings beat estimates by greater than one standard deviation. What does that mean? So I can look at a company's earnings estimates. There may be 20, right? 20 banks or managers or whoever who come up with estimates and publish the estimates. That you can take the average of those numbers and then a standard deviation. And the population isn't huge. Like I said, it's probably 20 or something. I don't know how many analysts you get on that. But you can calculate an average into standard deviation, just like we do for stock returns. And you can calculate the amount or the number where the actual reported earnings were above the upper and lower one standard deviation moves. 61% beat by over one standard deviation. It's a huge number.
Yeah.
Compare that to 5% that were below one standard deviation. And that's what's propelling this rally right now, this optimism that corporate America is making money hand over fist. They don't care that, hey, you can lay off 5,000, 6,000 people. They don't care.
But layoffs are usually bullish for stocks, TP. I mean, no matter, what time frame or what's going on geopolitically or anything else in the world. And when you talk about an Amazon, is that what you were talking about right now? Laying off
well, Amazon, Meta, all these places.
Sure. I mean, but they employ 1.5 million people. And they lay off 5%. I mean, it's a huge number, 5%. It's a huge amount of people. And then you have 1.5 million people being employed, 5% being laid off. But these numbers are just so big, TP.
They've gotten so big.
I mean, they've gotten so big. It's not our father's market. And I don't even think it's our market, from yesteryear. Right?
No, and there's a point where, and I don't want to get sidetracked, but the three of us, look, we're traders, right? And we see things in a certain way. What makes it hard, I think, for people who are starting out is just the size, the absolute prices of these products.
Yeah.
So the S&Ps are a $7,000 index.
Right.
Stocks are $500-$600 within the strike prices are 5 points apart.
Yeah.
If you want to take a small amount of risk, it's hard to do. It's harder to do than it was 10 years ago.
Yeah.
When you had single point strikes, maybe 500 on the S&Ps or 400 on the S&P, whatever it was, they were just more manageable.
Yeah.
Or 4,000, I should say. They were just more manageable. Now it's much harder. I don't want to say it's harder to trade because it's always hard.
Yeah.
But you got to adjust. You got to adjust to this new size. And then this is the highest earnings growth we've seen this past cycle in 4 years. So you think back to 2022, coming out of COVID, all the money coming back into the market. I hate to do it, but it makes me want to lean bullish. Let's go to the next slide because I pulled some data on this stuff. Where's number 2?
I think they want to go to the second slide here. Yeah, there we go. Upward bias post earnings. This one?
That's all right. Yeah. So what I did was I pulled the S&P 500 stocks and calculated the one-day price change after the earnings came out. For the stocks that went up, the average was 5%. For the stocks that went down, it was 4%. Is that a huge difference? On a percent basis, no. But Tony, like you were just saying, that just points to the upward velocity of risk in the market. We typically don't see that kind of upward skew in the results. Now we are. The 10 stocks, just pull the top 10 out, pull the bottom 10 out. The top 10 stocks that reported earnings, their one-day price change was up, 12.7%. The ones that were down, the worst down, the ones that the worst, the bottom of the 500 were down 12.4%. Again, not a huge percent change, but illustrates the velocity towards the upside. Let's go to the next slide. And here's what they are. It's mostly these big, well, Caterpillar was big, Eli Lilly, but most of these, the big one-day price changes, and Google is caught twice in there. But the point is, these are primarily tech stocks and tech-related stocks. I don't know if you looked at Corning Glass today.
GLW, they're partnered with NVIDIA. It's only up 16 now. It's been kind of, there's
Corning Glass.
Hey,
Corning Glass.
Hey, you need glass for the fiber optic cables.
I keep the leftovers in Corning Glass. Okay, look, not to insult Corning Glass. They're wonderful. But my point is, it's anything that's adjacent to that AI crap. I'm not saying it's whatever. It's AI is awesome, whatever. But the point is, anything adjacent to it is just going crazy. And then the next slide just shows the down ones. And yes, it's kind of, point for point as far as the percentage goes, but the average of the up moves was still higher. Let's go to the last slide, because Nick, this is something I know you've looked at a lot, is the skew index.
Yeah.
Right now, the skew is the lowest it's been in at least a year.
Which is unbelievable.
And even longer. And what the skew is, and Nick, you can fill in any details you want, but what the skew is, it measures in the SPX options, the relative price between the out of the money puts and the out of the money calls. In other words, the skew. In other words, how much more are the SPX puts trading over out of the money SPX calls. That's all it really is. And it shows you how much fear is in the market. It's a little bit different than the VIX. And the VIX I see as an opportunity index, not a fear index. Skew to me is a little bit more who's buying protection, who's buying insurance here. They're just not buying insurance. They're just not paying up for those puts. But
isn't that the scary time, TP?
Yeah. When nobody's hedged.
Look, it should be. Tony, it should be a scary sign. It should be a scary sign. If you told me, if we talked last year, if you said the skew is down around 140 or whatever.
Yeah.
We're headed for a sell-off. Oil, $100 a barrel, headed for a sell-off. Bond yields, 30-year bond yields up to 5%, close to 5%, ready for a sell-off. And we're not seeing it. Right. We're just not seeing it. And so there's a point where, Tony, you and I have known how many people who've come and gone in the trading industry. And Nick, you're starting to put together your own little list yourself.
Yeah, well, mine retire, not die. Okay, they don't.
I'm not talking about dying. I'm not talking about that. I'm talking about the people. Look, there's traders who think they have it all figured out, right? And they go out of business, and then they start losing. Then the tricks that worked last month or last week don't work anymore. And this is the sort of thing. In trading, you have to keep learning. You have to keep looking at stuff, always critiquing your approach and strategy. Because if you stick to the old stuff, you're probably going to get beaten. So yeah, Tony, you're absolutely right. This should be an overbought indicator. And I wouldn't blame you if you put on a short-term, at least, bearish trade on this. Personally, I'm biased towards the upside over the next few days. And that's why I'm selling. I missed them today. Selling put spreads in the SPX every day. And, the cherry picks yesterday put out a 3-day SPX put spread. I know the research team's been looking at stuff going out, 4 and 5 days. That's great. It's awesome. Gives you a little bit more flexibility, gives you a little bit more time to manage a trade, maybe.
Yeah.
So I just put one out 3 days. But again, I tried putting it on this morning, missed it. Put in another one, missed it.
You got to be aggressive.
There's always another day, TP, though. That's the greatest thing about the market. You miss it today, it's open tomorrow.
That is true.
I get it.
There's opportunity.
And I'm not going to give those guys and women, I'm not going to give them too much slippage on this stuff. Because fighting for the fills, getting a decent price is what keeps you in business.
Yeah.
That still works, okay? That still works. That hasn't changed. So the bottom line is, I think, at least for the short term, going out for the next couple of weeks, we have a bullish bias. If anything positive happens with this Iranian war, we're going to go higher.
I think you've been saying buy the rumor, sell the news. Maybe this is the spot. I think it's an interesting thought.
I mean, it's easy to say at the new high, but I haven't said it until today. But volatility's in by 55 cents. And if I told you MU was down, I think it was. I know it's still down now, but MU was down. Intel was down. SanDisk is down. But the rest of the market is picking it up. I mean, it doesn't seem to matter if there's just a little bit.
Nvidia is
the horse today. Yeah. Yeah.
Well, yeah, and this is the big complaint: is the rally is kind of narrow. In other words, there are a lot of stocks that really haven't participated in it. Yeah, fair enough. But when you're looking at a capitalization weighted index like the SPX, it overweights the big stocks, the big cap stocks, and that's what's carrying the market right now.
Yeah.
All right, TP, I'm going to take a quick 90-second break. You did good, my friend. Always great to see you. Thank you so much for coming on the show as usual. Usually we're not at all-time highs. Give me your market call for the rest of the day and for the next time I see you.
We're going to be, I don't have the platform up right now.
Yeah.
We're going to be up, S&P is going to be up another 100 points by the time I talk to you next Wednesday. For the rest of the day, I think the rally might be done for the rest of the day.
Yeah, I said that too.
I'm saying flat to lower for the rest of the day.
Okay.
All right, my friend, let's take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
Got the boy.
Q and Ryan. That's right. We'll be back in 90 seconds. Tasty Live. Good job, TP. Thank you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Nicky, we are back, son. And just like that, so are the E-mini S&Ps. They're up 72, flirting with the highs that they made at 66. Ooh, 66 on the all-time lows. 66 is a number.
666.
Shh. NASDAQ up 337, flirting with its highs, although 50 handles off of that. Russell up 18. That's the lagger in the group. And the Dow, which has been strong all day, over 50,000 at one point, flirting with 50,000. Take your 50,000 hats out. Volatility in by 55 cents and bonds up 24. Gold continues its rally up 150. Silver continues its rally even more than gold, almost twice as strong as gold today is silver, up $4.40. But you know what? Let's hear it right from the horse's mouth because we got this man. My man Q. How's the desk?
Fellas, how's it going? Desk is good.
How are you?
I am doing very well.
How's the desk?
Thank you.
You never
There you
ask
go.
how he is.
I righted my wrong. I made a mistake. I'm a good person. I made a mistake.
It's okay.
Thank you. I did a bad thing.
It's all right. But yeah, no, desk is good, busy, but a good kind of busy. And so, yeah, it's a weird market right now. Market at all-time highs based on like a few companies' earnings. But, don't forget like S&P 500 is mainly like 7 companies, right? The like weight. And so, yeah, when you see things like this, SNDK, crazy, Micron, crazy. And yeah, dealing with a lot of customers who have positions on in there, how to manage it.
Yeah.
And yeah, desk is good though. Desk is good.
Good.
Good. Beautiful.
What's the most common? Is SanDisk the most common phone call?
Right now, yeah.
Right
for
now.
sure. Yeah. Positions in
SanDisk.
SanDisk.
Really, I didn't think it would be that traded,
It's
on the
momentum, dude.
What's that?
It's momentum.
Yeah, the momentum, the volatility.
Yeah.
It's actually down today, down about $40. It traded down at $334, which is $30 low in this. It was down almost $70 at one point. That's not the whole story. It got up to 14, I'll round up, 1440. So it was about $80 higher than this. This is a mover.
Oh, yeah.
Yeah, hence
Not
the
for the
people
faint of
trading
heart.
it, right? Our customers, they like the movers and the shakers out there. They don't just want to, a lot of our customers want to speculate, take advantage of that volatility, not necessarily just like,
So now you're remembering, now you're making me remember yesteryear because I know this seems hard to fathom when stocks are up 10% in a day these days. But I remember when an overall return on the market of
10%
was a freaking
Don't even
home
get
run.
out of bed for 10%. I want 10% a day.
And when we got that frothiness, and it went for years, it quickly dissipated and stopped. And then you got your bear market, and 10% was unattainable at some point. But when you've got a market like this, where prices have gotten so high, and you know how to mitigate risk to the downside, maximize return to the downside or the upside, I don't think it ever happens again. I think your 10% a day goes on into perpetuity. Because
From here?
Yeah. It doesn't have to be to the upside. I just think the magnitude of the moves are going to be so great.
Everything gets bigger.
That's
I mean,
right.
The numbers get bigger.
That's right.
70-point move now is the same as 10 points 10 years ago.
Yes, which was the same as 3 points.
Yeah. It's the same
in the 80s.
Yeah, it's just that things get bigger.
I mean, remember the Dow, a 50-point move in the Dow. It's up 500 today, and it's nothing. It's a 1% move.
Yeah.
But a 50-point in the Dow move in the Dow in the mid 80s was the largest move it ever had.
Yeah.
In a day.
Yeah, and then also we're at all-time highs. But what's /VX right now? It's
19,
in what, the 19 handle. Yeah.
20. Not 1921.
And I mean, that is not something you expect at all-time highs. But I mean, a lot of risk is to the upside too.
Yep.
Those calls are getting expensive.
Yeah.
Somebody just wrote me, hey, if TP said the market's going higher, I'm going short. He's
Seriously.
right.
But yeah, we love our TP. Poo-poo TP.
Well, he's always kind of a little bit bearish. In the
Yeah.
market. Yeah. All right. Give us,
if Tim Knight tells you to buy.
Oh, he's on vacation. He's in the fetal position somewhere.
Yeah, but if he tells you to buy, we have some problems.
He'll die on the cross. He's just not somebody.
He's always got some.
Bearish. Yeah. Why don't you give us your list so you can get back to the desk and we can get you working again?
Righty. Thank you very much. 5 best minutes of my day. These are my favorite 5 minutes of the day.
Is it?
Always.
Good.
All right, top 20 symbols going through the system.
You really got to get better friends.
And their IVR. At number 1, AMD with a 70, NVIDIA 53, Micron 89, Tesla 11, Intel 108, GLD 36, Palantir 20, SLV 35, SMCI 47, Apple 38, Meta 30, Microsoft 44, SMH 68, Goog L 35, SanDisk 71, Goog without the L 33, USO 50, GLW 83, ARM 93, and Uber 35.
Good job out of you, my friend. Good job out of our viewers. Good job out of the people at Tasty Trade who have opened, moved, transferred, brought their account to Tasty Trade, number one brokerage firm.
Great job out of the customers.
Yes.
Good job out of
Keep
you.
the lights on in here. You don't want to put the bats in the dark.
No.
Weird things happen.
We thrive in the dark. We're bats.
I was born in the darkness.
I'm going to let you go.
Bane, a little Bane for you. You didn't like that one?
Ryan, I had such great hopes for you when you came on that Bitcoin would be on its recent highs of just
It
about
is.
80.
It's up $100.
It is up $100 to 82. It was 83 earlier. Still got your bullish stance to this?
Yeah, I mean, I think you trade this range. If you own some at 75 or even 80, you're probably taking a little bit of a profit. I haven't seen anything change. It's like, all right, 80 to 120, let's go, baby.
Yeah.
It's still going to chop, of course, but it's trading alongside everything else. As we talked about, the correlations haven't broken down for whatever reason. The stock market continues to run. This is going to follow along with it.
Yeah. I will say there was, because MicroStrategy had earnings.
They report. They
reported their Bitcoin holdings, but there was a little kerfuffle with like, maybe we're gonna sell some. On the call with that.
That would go against the religion.
I know.
I mean,
I think they made it basically like if it's accretive to getting more Bitcoin, they would sell, which doesn't make a lot of sense because if you're selling Bitcoin, it's almost like you're just a prop firm trading Bitcoin.
I'll have to take a look. I didn't see that, but I thought that Mr. Saylor was never going to sell.
It's never sell, but sell if you can get more somehow. I don't know. It's essentially trading. I want to sell. I want to sell when it gets
like trading.
higher, and then when it goes down, you buy more. That sort of thing.
I like that.
Yeah.
Well, I think he's still like 90%.
Well, you should have bought more Intel because it's up $1 now.
Damn it.
Cancel crash, by the way.
I saw Corning Glass.
GLW, it was up like $30 on the opening. It's up $20 right now. It's still a 12% move. There you go. There's those 10% moves that
it really is.
That would have to work all year long to try to do. You can do it in a day.
Boring.
Just own Corning Glass. Like who would have thought there? I thought we were done with the fiber optics underneath the ocean cables.
It never stops.
It never stops.
No, it never stopped. You can't be done with that. No,
The AI needs more cables.
You need it for the fiber optic cables. Yeah. Like
what schmagegi coin is the Corning Glass of coins right now?
I wish I could tell you.
I wish you could tell me too.
Yeah.
I'd go all in.
There's got to be something there. But if you guys want to take a look at performance, it's gotten a bit better. You have very quickly seen everything flip back over in the short term into a
really have
bullish trend here. That said, I mean, I've been pounding the table on Bitcoin over everything. They're scoring a lot of points on that team, and the other teams are going to score once in a while, of course. But I think the theme, the trend, for what it's worth, I mean, it's been Bitcoin outperformance. Until that just changes, I'm not too excited about much else. We called out the outperformance in Doge. But the rest of this stuff is just bouncing off of some very
sympathy
weak,
moves,
low levels. Bitcoin, though, if we jump to the expected moves, vol has come in, prices move slightly higher. You get a little bit of a wider range. As a result, though, volatility is near, pretty much that 1 year low. So if we can throw up those expected moves, take a look at what might be within the realm of possibilities.
85,
86, 86, Nick, come on.
We're even higher. We gotta get that next
what was this? This was the weekly range for this week?
This morning, I just updated
77 to 86. Well, that should tell you, I mean, even though volatility, as you've put in, is relatively low, that's a decent sized move. I don't think I would have expected the range to be almost 10,000. I guess $10,000. I would have made it more like 10%. I would have thought it would have been like $6,000 or $7,000, not $10,000. If I was making a market, that's what I would have said. And I watch it every day, so this is a little bit surprising for me. to think that. Now, you've had a range already in Bitcoin this week from around that 76, 77,000 number to where we were, 83. So you're right there.
Yeah, definitely. I mean, it's if you go back to where we were on Monday, I think the price that you were quoting there, Nick, we're trading within what the market was pricing in. And it continues to kind of move higher. You see a higher low in that one standard deviation move and a higher high. So generally pretty good, at least for now. ETH is trading a little bit better too, but has certainly hasn't been as strong. Doge catching a little bit of a bid here. Solana catching a little bit of a bid, but very low volatility still in Doge, in XRP, in Solana. I mean, I'm going off of realized vol, which is really all we have to go off of, but it's just been so range bound and stuck with a $6 to $7 weekly move if you use that as your volatility input for what it's worth. But Doge, I mean, this is a coin that we were used to 100% or more
overnight.
Wow.
Yeah.
So maybe you get that again. I think if you do start to see those signs, it definitely invites participation. But guys, I'm looking at a realized volatility of Doge here in the last 10 days of about 30%. But let's just take a look at the last month to give you an update there versus what we've seen before. 42% is your realized vol in Doge. Yeah, I mean, these kind of have all been left for dead, and eventually they wake up, I suppose. But again, I still think it's Bitcoin over everything. You stick with that trade for now. You could see as well here, ETH BTC continues to show some weakness or get weaker. Solana had a little bit of a pop today, but Solana versus Bitcoin, pretty poor performance. Doge is hanging around that 11 cent level, 11 cent 50.
What are you thinking on this move in oil?
Oh, I think we've seen this, I mean, almost around the same exact time every month. You're about a week in front of the option expiration and getting closer to that contract roll. I'm not like a conspiracy theorist or anything. I just think like market mechanics, positioning. You're seeing some of this volatility. It does tend to align with an Axios report that within 2 hours, I mean, guys, we've seen this.
He mentions it to me on
I've taught him so much. The things.
All right, we live in the simulation.
And he uses it without my permission. I give him that in a lot of other things. And he does. I'm basically his little brain on the shelf up there for him.
My mouthpiece.
Yeah, mouthpiece.
Yeah.
But I told him, I'm like, dude, these Axios reports, you can't. It's all crap. Everything that comes out, it's wrong, and they send out 50 of them. It's like a flurry of just fake news, just everywhere.
Sprinkle the infield. One of them's going to be right. One of them's going to hit.
These Axios reports come out and they're like, deal signed, and it's like, come on.
Gotcha.
Yeah, gotcha. Like, what happened to like actually reporting something that's like real?
Wow, you sounding old. I mean,
that went away years ago.
Like, and
the first time Trump came around, he was telling us about this, and now he's doing it.
Yeah, now he's doing it. Yes, it's just come on.
There is a pattern, right? It's the same source every single time. It has the same impact in the market. Oil gets up to about 110, and then that comes across the wire. Immediately, Iran is like, hell no. Israel was like, what are you talking about? We've got we've got the missiles are loaded. We've got new targets. I saw a report came out just a minute ago. Yeah, guys, I don't know. I mean, I think it gave you a little bit of an opportunity. And clearly, if you were trading this at 3, 4, 5 in the morning, you bought 88, you probably sold it at 96.
Yeah.
And maybe we retake 100. I don't know. Vol has come in a little bit, but I think you have a sense at least short term where you will go to on these sorts of headlines, because this is about the third time that we've traded sub 90 and immediately you find a bid. I think you have to look at the data. We're simply just running out of time. I did a YouTube interview for tastylive yesterday with a commodity strategist, a very well-known guy named Bob Ryan, and he kind of walked through all of this. And who knows where we go to, but assuming you have to get to some point where the market starts to catalyze more demand destruction. The cure for higher prices, everybody says, right?
Yeah.
And I just don't think that you're seeing that here at $90 a barrel, given the fact that we're drawing down all the supplies, all the inventories, and we're 10 million barrels short every single day. The clock basically gets you to, let's say, end of this month.
Mm-hmm.
And then the market's going to have a new reality.
Even if it doesn't matter when we have AI videos of
It might not matter today.
Politicians like, doing all. You saw that one? That was a funny one. We're in banana land.
Maybe the hedge, right? So what you have historically seen is that an oil price shock tends to precede a recession. Just it feeds through eventually. Like these things are kind of throw you off guard. Maybe the hedge is AI. I don't know.
A recession is asset heavy, isn't it? Usually.
Yeah.
Right? Your gold, your silver, your real estate.
Yeah.
Yeah. So there are other markets to go to.
Absolutely.
Maybe your Bitcoin is a hard asset. I don't know. I'm trying to extrapolate out here. I'm looking at the oil curve, which you've talked a lot about. It's stayed
still high.
Yeah, it stayed pretty steady, and it's maybe $10 from top to bottom, maybe $15 if you go further out, like a year out or something like that. But it's still staying relatively flat-ish.
Yeah.
So that would give your thesis of maybe oil staying bid relative some legs to it.
Yeah.
So I'm there. I said the E-mini S&P's high were in for the day. I was wrong. They're $5 higher than that right now.
It's okay. I forgive you.
Do you?
I forgive you. It's okay.
Okay. Volatility in by 58 cents. Bitcoin over 82,000.
See?
What hat do you wear in Bitcoin when it gets
We're
to
waiting
what?
for the 100K hats.
Triple digits? Is that the 100K?
I guess there's a 100K hat.
What are you going to do?
I think the price targets are higher, really. If you're in this, you've been in it, and you're along for the ride, I think you're looking at 250. You're looking at, there's a $500,000 hat. There's a where are we in 5 years and what happens between now and then. I am more in the diamond hands camp with Bitcoin. I think from the technology perspective and what you're seeing with use cases, what's being built on Ethereum and the convergence of the financial system there, that's a big trade as well. But with Bitcoin, that's more of just, I've got it in my portfolio, Tony, and I hold it. And I think eventually you do get to, in the same way that, we'll see what the dollar can buy, but you do get to a level where the nominal price is a lot higher.
Yeah.
Same thing with the S&P. Regardless of the volatility in the near term here, because of the passive flows, because of how the index is constructed, because of what we do to debase currency, you would assume that in another decade, regardless of what happens in between, your S&P is, get your 10,000 hat out.
10,000, that's this year, bro.
Maybe you go to 3 before then. It's entirely possible.
Yeah.
But I think the long-term trend is higher, and so I just approach Bitcoin that way. So, anyways, I'll get off the soapbox. But yeah,
no, you're good.
I've got it's in there somewhere. The $500,000 hat. I'll break that out.
I like it.
2045.
Why not?
Sure. Why not? Even the S&Ps, let's take a look at this market before we say goodbye to everybody. Even the S&Ps up 80. I'm going to round up. NASDAQ up almost 400. Not on its highs, but about $100 off it. Russell up 26. And the Dow, which has been strong for most of the day, still strong, up almost 600. Volatility in by 63 cents, off of its lows, off of its highs. It was down around 40-ish cents on its highs from when the market was open. So it sold off about 20-ish cents. Bonds have stayed bid up 27. Oil is the market a lot of people looking at, down $7, almost a 7% move, hanging in there at 95, the middle of its move. Gold caught a bid after selling up about $20-30, but really this is a market like no other that I've seen. MU, which was lower earlier, traded down to 627. That's $30 lower, is now up 16 again, saving those momentum players. I'm sorry, that's not Intel, INTC. I apologize. Intel, which was red for a quick second, was quickly bought up $2.30. More movers to the upside. AMAT up 13. Disney for earnings up $8. Uber has earnings this afternoon. It's up around $6 already. I think it puts a hard play on any of these earnings stocks to do anything with. This is all your earnings here. I'm going to go to the high option volume list before we get going here so I can get your big movers. To the upside, you've got, forget about the market itself, which is just a huge move. AMD up 57, TSM up $20. That's a 5% move there. ARM up $20. You got a 10% move there. SMH up $19, just off of its highs. Goldman Sachs up $19. AMAT up $13. Everything is up. What's down, you ask? Well, few
Nothing.
and far between. Well, Light's down $70. That was one of the movers.
That's like one day. It's like one day.
It is.
Come on,
It is a 7%.
You need the glass. You
Would
need the
you
glass
guys,
and the
given
lasers.
the speed
PE
of the
down
rally,
$9. Go ahead.
do you guys step into something like that at this point, or are you looking for it to?
Markets aren't
increase a
good
bit
enough
more?
in there to do something, but B might be something that you want to step in. But do you want to here? Let me ask you: is this down?
You want a fresh one?
Down 3% today. Is this down? Am I buying it cheap here? I don't think it's cheap.
I think the trade is more of the same. You have to just play the momentum. You can't be short vol in either direction here because you're going to have, to your point, these 10% moves in either direction. I don't care what the vol number is. You have to have diagonal spreads, calendar spreads, something like that where you can play the momentum in
you gotta
either
be intelligent.
direction because you're going to get your face ripped off on both sides.
Have you ever seen a face get ripped off? It's not a pretty
Scary.
sight.
It's scary.
Very scary.
Yeah.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with what comes up next.
Got Liz and Jenny live, and it's always electric when ladies are live.
At the CBOE. Peace.
Peace.
Also known as the CBO. Sorry.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
We are ready to build. This is make or break for this team. It's down to the last 2 minutes, and it's time to rock and roll, baby. That's all I got is 2 minutes, and that's on a good night. I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime. I think we're going to overtime. Here it comes. Shalaka! Man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof! Take one. Hey, baby! I like the looks!
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews.
Hello, Liz.
Yeah.
All right. So breaking news.
Life hack.
Breaking news. According to Liz, people who show their palms.
You trust people who show their palms. You don't trust people that go like this.
What? Where did you hear that? Yeah, trust people who show their palms. Are they just trying to show you that I'm not stealing anything? There's nothing in my hands.
It's backed by science. It's on TikTok, so it's got to be true. But nonetheless, this market is in fuego. This market's showing us its palms because
no, I don't know if I trust this market. This market is like this. I don't think I trust this market. SPOO's up 86. Fine. I personally don't believe that the S&P 500 is going to take a big tumble, but
something's
I do
happening,
think
though. Hold on.
It's up 86. Things have been happening all morning, but I don't believe the semiconductor index is going to continue to. I'm gonna put zebras in SMH today. That's what I'm doing. I am.
I'm riding the wave. I'm buying call zebras. So the semiconductor index is in fuego, and it's a lot of the S&P 500 right now. So the S&P 500 is up.
Mm-hmm.
I mean, SPOOs are up 86 right now. Can't stop, won't stop. It's all semiconductors, and we haven't even had Nvidia's earnings.
Well, now it's everything. Now it's everything.
I mean, you still got PLTR down. Like
you've got a couple things down, Meta, PLT. You got a couple things down, but most things up. Now, even the Cloroxes of the world are up today. So I think it's across the board.
Well, oil's down. So a lot of oil's down.
Right.
Yeah, so the oil stocks are down. So, but semiconductors are leading this rally. We did make a play in AMD yesterday that we were going to take off, but AMD, let's jump in the platform and take a look at it.
Oh, sure. Jump in the platform. AMD up 14% today.
Double its expected move.
Its expected move was about $30, and it's up 52.
Yeah.
It was higher than this earlier today. AMD got as high as, wait for it, much higher than this, was 430. It was a lot higher.
So it was definitely double its expected move. And it has kind of raised, in the words of Tony Batista, I'm giving him credit for this, a rising tide raises all boats. So you can see a lot of those names that are associated with AMD are up as well.
Right. Yes. Yeah. You take a look. Okay. So we've got AMD up 14%. SMH, the semiconductor ETF, is up 3.5%.
Well, it's an ETF. So it's a basket of semiconductors.
So up again every day, new highs. And to me,
same with the S&P 500,
reminding me of, anything that had AI in it just kept going up, or anything that had .com in it just kept going up. Now, anything in the semiconductor ETF just keeps going up, which is why I'm buying put zebras in SMH today. And I'm just going to, if I throw away a couple $1,000, I throw away a couple $1,000.
Okay.
I take my chances.
It's pretty interesting. And I do like everybody having different opinions because this is anybody's market. And everybody, you could buy them and you could get out on a down day. And I could buy calls and I can get out on an up day.
I'm long plenty of products and I'm long Delta. And my account is a long Delta, meaning a bullish account.
Yeah.
But I just feel like at some point in time, these semiconductors have to settle down.
For sure. Look at silver. I mean, it's the same thing where we had that rush with silver. And it's hard because you don't know when.
You don't know when it's going to.
So it could take, you could be in the house of pain, as TFM likes to say.
Okay, so let's take off AMD. Okay. We looked at the diagonal. The diagonal was about $14 for a $30 wide. We didn't want to spend $1,400 in AMD, so we did kind of a baby trade where we bought a 250 wide call spread and sold a $5 wide put spread to pay for it. So we made almost the full $250. We paid a 4-cent debit. I'm going to try to close this thing for 240.
Yeah.
Yeah, 240. I'll put that in. And it's far away from all of this.
So we did a handful of earnings yesterday. We did AMD, Disney, Uber, AMC, which is right above AMD. And AMC is up 4 cents and we are down $6.
Oh, AMC. Okay. AMC, it didn't move. Right? It's like weird.
Yeah, but we bought an option. So AMC is up 4 cents and we're down $4. That's why the power of selling options is wonderful.
Right. I mean, there was 8 cents in this option.
Yeah.
So we're just gonna, I'm just gonna leave that AMC for till the end of the week.
Make sure you close AMD.
I'm working 240. I'll let it work for a minute or two. Disney, we did a diagonal and Disney's up to its expected move. We sold a call at the expected move. That was the 107. And that's where it's trading, 107. So this $7 wide diagonal is not quite worth $7 yet. It would be on Friday, end of the day.
That's okay. Still close it.
Yeah. Okay. So 623. So we made $300 in our Disney diagonal. I will try to get out of this. Getting out of our own personal trades at 8:30, we did have to give up a little.
Yeah. But it's easy when you're taking profits. I will say it's a little easier on the mental psyche when you're taking profits. Let's manage Uber before we go any farther.
Okay, so Disney's gone. Disney's filled. Now, what else? There
Uber.
Was that the only other earnings trade we did?
The other earnings trade we did. We did AMC, AMD, Disney, and Uber yesterday. There's
and Uber's up $6. We just sold a put. We sold a put for $1. So we made $115. We sold the put for $117. So at least we had 3 earnings trades that were 3 winners, maybe to make up for the day before where we had 2 losers.
I know. Well, hey, there's more earnings on deck, and we'll take a look at those later. Today is Wednesday. We are live from the SPX pit. We do have an SPX study from our resident genius.
The crowd is wild today.
They're wild. I mean, and so there is so much. We were listening to, some other reports and things of that nature. There is so much bullish call buying and put selling in these markets that it's like everybody's euphoric.
Well, I think some products, once earnings come out, like Disney, we had a diagonal on in Disney. You know what I did today? I took off my diagonal and I sold weekly puts. I sold next week's puts. I don't mind. Earnings are out. We're getting some news. I didn't mind selling puts in there. Right. So I did sell more puts today because selling puts gives you some room. If we have a little bit of pullback, you still have some room for the stock to pull back a little bit.
Right. So, no, I know. I get it. And so is the rest of the world. So Jenny and the rest of the world
selling puts. Selling puts. I'm not necessarily buying calls. I will.
They're pretty active back there. And so I think it's a good day to look at the most active list too. We'll do it at the end of the show so we can get a little bit more activity under our belt. But they're very active today.
They are very busy.
But this is kind of the activity that we hear behind us is almost what you hear on the down days. Like when that's what it feels like back there right now.
You're right. And we've got who's up 80, 85, and we're getting this action.
I mean, they don't look like they're moving, but they are yelling.
The pit is full. There's a lot of orders coming in, and big orders. Big orders.
Yeah,
definitely.
For sure. So doesn't it feel like that though? This is what it feels like when you're in the crash mode and the VIX is up.
I know.
That's what it feels like back there right now. But it feels like temperature isn't always what's happening, right?
Right. If you sat us down in this pit and we heard the commotion and the orders and the craziness,
I would say VIX was at 20 and we're down 100.
Yes.
Yeah.
Yes.
But we're not. So let's pop in the pipe. I want to see where VIX is. We'll do our study. Perfect.
Yeah, I've got our study for the day pulled up. Jacob put together a study. Let's pull it up. Trading 0 DTEs with 1 DTE part two. We did this a few weeks ago.
On the 17th. On April 17th, I went back and looked at the date.
Okay.
And so we did this. Now we're leapfrogging because yesterday we did a study, or not yesterday. Last week we did the study on jade lizards. There's another one coming next week, but he's completing one task and then moving on to the next.
So this will be our last, part 2 will be, I think, the final part of the trading 0 DTEs with 1 DTE. So looking at selling tomorrow's options today. At the end of the day,
which was asked for and requested due to the pattern day trading rule, which RIP is ending soon,
very soon, June, beginning of June,
and we appreciate him doing these. So we're going to take a look at this. Okay.
So if I remember correctly, the takeaway from the last study was the 0 DTEs outperform the 1 DTE.
I believe you. I believe that to be facts too. I'm interested in looking at this one because I haven't seen it yet.
Okay.
I didn't look through it.
All right. Here we go. Zero DTs have become a dominant force in option markets with same-day volume now routinely rivaling or exceeding longer-dated contracts.
I mean, I think that's I think that's important when you think about that. The zero Ds back here. So it's about 50% or greater than the volume of the longer dated contracts.
I mean, the longer dated contracts go this week, next month, so many months out, plus the leaps. It's crazy to think that 0 days are more than 50% of the volume of all of SPX trading.
Yeah, they're pretty crazy back there. Okay. Our previous studies refine the entry and exit mechanics that get the most out of short premium put spreads, with recent attention to collecting larger premium by entering positions the day before.
Now, their success, however, owes no small debt to how bullish the market has been in recent years. And we've seen this, people talk about it. They keep saying like, oh, those put spreads have been so great because we've been in a bull market. Well, sometimes
I actually like to give an addendum to that, because with Jacob's past studies, if you're closing it at 20%, I've had them close on the most horrific down day ever, and you're out.
Yeah.
So that being said, I understand that we are in a bull market up day, but each day has its own set of parameters.
And I do agree that there have been plenty of down days where we put on just the put spreads and we've gotten out of them.
You get out of them and then you move on with your day. But not every trader wants to be short puts every day. Exclamation point. Today we will ask how a variety of mechanical approaches have treated one DTE out of the money positions with alternative directional assumptions.
Here we go. Ready to jump in? Here's the study. Using 3 years of data in 0 DTE SPX options collected every 10 minutes.
Okay, consider the results selling the one DTE put spreads, call spreads, or iron condos. So there's 3. Monday through Thursday. We didn't do it on Friday. 15 minutes before the close, placing the short strike at the expected move, and the long strikes either $20 past there.
And long strikes to either $20 past. Okay, so you're looking at selling the expected move and making these $20 wide.
Yes.
Experimented with closing winners at either 25% or 50% of max profit while leaving losers and small winners on through the close.
Okay. So that's I think a key point too. Examine the total number of winning trades, the total profits or losses, and the frequency with which overnight trades profited sufficiently to be closed within 10 minutes of the open.
Oh, interesting.
Huh.
All trades were assumed to exercise at mid-price all times with Chicago. 0 DTE results are replicated from previous studies for comparison.
For those of you in different countries, that is Central Standard Time. Chicago is Central Standard Time.
Yes, we are always Central Standard Time.
Yes.
There are some areas not too far from us where parts of the state like change their clocks and parts don't, where they flip-flop. They're not always, sometimes they're Eastern Time, sometimes they're Central Time.
We are always
Central Time.
Central Time. Okay.
All right. Trading 0 DTEs with 1 DTE. This is looking at put spreads. Again, selling that short put at the expected move, making the spread $20 wide.
Okay. So look at this. Look at those dates up there. So you've got the 1 DTE sold before the close and winners closed at 25%.
Okay.
You have the 1 DTE sold just before the close and winners closed at 50%.
Okay.
You have 0 DTE sold at open. So we're he's pitting them against each other. I like the grudge match. 0 DTE sold at open and closed at 25%, or 0 DTE sold at open and winners closed at 50%.
So to me, when
zeros for the win,
zeros for the win, and I think that was the results the last time, zeros for the win. But when you look at this, I know they always hang their hat on, oh, put spreads win because we've been in a bull market. Well, then why aren't the 1 DTE put spreads winning?
Excellent point, Jenny.
I thought so. So it just goes to show, like in those 0 DTEs, anything can happen in a day, and the market fluctuates. It's not like it goes up and just keeps going.
I'm sorry, we
I can barely talk over this.
I know I don't know if they can hear it.
Trying to move my mic that way.
They're not moving too much, but it is in fuego back there.
There is screaming, and it's. But I do think it's been stressful. From talking to some traders, this environment lately has been stressful.
Yeah.
Some of these traders have, they're under pressure. They've got big positions. They've got a lot of money flowing through them throughout the day, and they've got a lot of risk on.
When there's a lot of volume, there's a lot of risk for these guys. I agree with you.
Okay. And when the market's moving quickly, it's tough. Usually they're filling orders and then trying to hedge their hedge their portfolio.
Yes.
It's hard to hedge when SPUs are ripping around
And then
like
you're forced to take the next order before you can hedge. So yes, it
Yeah.
is. We understand what's going back there. Now let's go back to our regularly scheduled. Next slide.
All right.
Now call spreads. Now we read the top already, so we know what that top says. All negative.
Yeah, never just sell a call spread.
Never just sell a call spread.
Unless we turn around and go into a bear market, but who knows when it would start, when it would end. I just won't even go there.
Yes. Closed it anywhere. 1 DTE, 0 DTE. None of these are winners.
Did I say bull market or bear market?
You said bear.
Yeah, bear.
But even then.
Well, that's what I mean. Unless we turn around and turn into a bear market at some point in time. But for as long as we've been doing the show, which is over 15 years.
Calls burn me. Calls always burned me.
Yeah, I don't know that we've
ever. And they hurt worse than puts when they do.
That's true.
It stings worse.
That's true. Okay. Now, Iron Condor's doing both sides. It's here you have the 1 DTE. It does okay. It does okay. Like, not great, but okay.
But at least they're all in the green here, where everything is profitable and that you're going to do here. So I think you need the put side to balance the call side if you want to do it that way. But in my opinion, I think that first slide was a clear winner.
So the first slide, the put spreads, the 1 DT lost and lost. So here, when you're doing the Iron Condors, you have a positive P&L, which would make me think you have a positive P&L here on just the call spreads, because something has to be taken away from the loss on the put spreads. If you've got a $20 wide put spread at the expected move, putting it on at 245 and you're losing 30 and 16, don't you think you've got to have a winner on those call spreads here to subtract from the losses you had on those put spreads?
I think that the credit you get from both helps with the additional credit. Because the put spread is by its standalone and the call spread is standalone, but they're combining the credits, which gives you a little bit.
So instead of getting like $1.80, you're getting $4. And then you're looking for 25% or 50% of
a greater number.
Greater credit.
Yes, that's the only thing that makes logical sense to me.
But so these do okay, but what makes the most sense to me is the 0 DTE put spreads at the open or close to 9 o'clock. That's about when we're putting these on.
Yes.
But I still we've got the best case scenario here, $103 a day. I think the Jade Lizard outperformed that.
I think the Jade Lizard did outperform that.
I think it did.
And the 5-day Jade Lizard is what we've been doing. Okay. So let's go to takeaways. Entering night before collects larger credits, but accepting the overnight move means seceding to the rapid response control that matters most as options approach expiration.
Call spreads, despite their smaller credits, hit overnight profit targets more frequently than put spreads, which help the 1 DTE call spreads weather our bull market better than their 0 DTE equivalents.
I didn't see that.
The numbers are there, and Jacob is, again, our in-house genius. I trust him. I trust him
too. Iron Condors were only 1 DTE structure that come out net profitable, collecting premium on both sides. Yet even they were outperformed by simply waiting for the open. Okay, so they wait till the open, trade the zeros.
All right, the fine-grained intraday control that makes 0 DT trading distinctive evaporates the moment you hold overnight. And the results here suggest that a trade-off is a difficult one to justify. So the takeaway, stick with the zeros.
You know what my takeaway is?
Zeros.
You know what my takeaway is? I want 0 DTE Jade Lizards.
Okay. I was going to say stick with the zeros, but we're saying stick with the zeros, but with these 5-day GTE, so we did a study on Jade Lizards, 5 DTE, 7 DTE, or 10. The 5 outperformed. Maybe the 0 would outperform the 5.
I know.
What a brilliant idea. All right, so that's this week's study. Next week, he's going to follow up with the Jade Lizard study and take a look at what if we left them till the end of the day, looking for full profit, or till the end of the 5 days.
And then we'll springboard into the 0 days.
Yeah, then let's look at the 0 DTE Jade Lizards. Okay?
Absolutely.
Perfect.
I love it.
Let's get back in the platform because we have a lot to do. We actually have a lot of
Can we take a look at the VIX? I know I wanted to do that right before the study. I haven't looked at it
You've been thinking about that the whole time.
I've been thinking about it and thinking about it.
1712. Oh, did it hit 16 today? Did it hit 16?
So, like I said, the only reason I was thinking about this is the way the crowd is reacting.
16, 18.
You would think the VIX would be higher. 16.18.
So that's the low, 16.18. Guys, low is it's 17.11 right now. Guys, low is 16.18.
So do you think it's 17.11 right now, and SPOOs are now up the highest level? They're up 83, and the VIX is a little bit higher. That's not normal.
If I showed you this chart of like SPY up for so many days, so we've had from March 30th until now, May 6th, SPY straight up. Where would you think VIX would be?
13?
Yeah, right?
Yeah, but that's not the case. It's so very bizarre. It's a very bizarre environment we're in.
I know. And it got down to 16, but now jumped back up to 17.
I think that 17 is a little bit, like I said, jumping up when your SPOOs are at the top of their range and VIX is higher, that something's odd.
I heard someone say that the insurance is cheap now, right? With the VIX lower, insurance is cheaper.
And if it were 20 or 25.
Yeah, and with the market at all-time highs, sure. But it's still, VIX at 617 still isn't, they're not giving it away. It's not like 13.
That's what I'm saying. They're not. If you look at that, you would assume it'd be a lot lower, and it's not.
I know. So, all right, we're going to jump into our account. We did close our Disney diagonal. I did get into Disney with puts. I don't know if you have any interest.
I'm in. We have a lot of earnings to do today too.
Okay.
I just know our buying power is a little on the sketchier side right now.
Well, I don't know. Let's see. Let's close some things. Let's take a look at what we want to close.
So I guess we're okay. We have 13.6.
Are we not out of AMD yet? We are not out of AMD.
Okay, that'll help.
Well, that was that.
Let's put 5 by whatever. We're going to try to take a look at our IBIT and close it because that Jade Lizard was holding up quite a bit.
Okay, so AMD we got out of. We're out of our Disney. I'm going to sort P&L percent here.
I would like to close something at 10,000%, please. Just kidding.
Hey, I got news for you. Now it's 12,000%.
It is.
So this could happen. It looks like this, but it's not anything crazy. In Southwest, we put on a Bob on Fire where we bought a $10 rate call spread and sold 2 puts to pay for it. This is way out in January. We did this for a 1 cent credit. So when we took in a 1 cent credit and we've made $126, that's why it's saying we're up 12,700%.
That's a percentage I can live with.
But
we don't have to close it. I was kidding. I just wanted to talk about that percentage and why.
But I will say $127 in 2 weeks in Southwest Airlines. I think we can take it.
Was it up today? Is that why?
It's up today.
Were we down yesterday? Because I feel like I took mine up yesterday.
We're up $102 on it today.
I think I took $27 yesterday. I was trying to lighten up positions.
Oh, that's funny. I know you said you were lightening up positions, but I didn't know you guys were getting that desperate.
Well, no,
$27.
I have so many scrolling positions. I was like, just get rid of it.
I get it.
I think I took $27.
Okay, so I'm working that. Forward, we have
60%.
We've got the 12 puts in the 9-day and the 12 puts in the 2-day. This was a little bit of a Mikey special. Mikey said, hey, Ford's paying a dividend this week. I'm going to sell these 12 puts in the 2-day. If I get put the stock, great. I'll get then the dividend and then I'll sell calls and it'll be in the wheel. But maybe we just want our $47 in Ford.
I'll take it. I'd like to clean up.
All right. Clean up time. And I put it in order to close both of those. Then DraftKings, we are holding with our long call short put. Although we could take that short put off because now we made
DraftKings earnings are up on deck, right?
Yeah, and that put we've made almost 50%. We've made 40%. Let's just close the put and leave that call. We've got 100 shares of long stock with
take the risk off the table.
Yeah. Okay. All right. It is a very weird day today down here.
It is a very weird day. And so can you, I know we are taking live tweets. Can you go to Twitter real quick too?
Mm-hmm.
Only because we're talking about the day and go top down. Tap down. There you go. Okay. With your current setup and the noise canceling microphones, you can hear almost no yelling from the pit. which is
nuts because
fascinating
it's
to me.
Today's like one of the loudest days we've been down here.
And you can tell by we've been down here for a long time. You know, we both traded in these pits. We both have yelled and screamed for a living. And you can tell when our voices get raised, it's because we need to hear each other. And I don't know if they can hear that.
Right. I don't know. Maybe not. With these high-tech mics, like Steve said, he can't hear
if it was just me, I could talk like this. But in order for you to hear it when it's crazy like that.
I'm going to talk to our production team and see if we could get like some kind of mic, some kind of like crowd mic.
Yeah.
Where if there is like a rage and a roar going on in the pit, we could turn that on so people could hear it.
Like a real extended on like a pole. So I could literally be like, hey, can you say that again?
At Florida 7, Chicago is currently on Central Daylight Savings Time.
True. We shift. We shift.
Oh, we do?
Well, you know, like spring forward, fall back.
Oh, daylight savings time. Yeah, but we're always on Central Time. We're
Central.
on Central Time. There are parts of, because we're
Central. All we need to know is it's Central.
There's a little bit of either Indiana. There's a little bit of Indiana where they will some shift for daylight savings times, some don't. So sometimes they're on Eastern Time, sometimes they're on Central Time.
That's what you're talking about. We're always Central.
We're always Central.
That's right, Central.
Scott Somer, ladies, do you do anything with calendars or diagonals that have the short in 0 day and the long in the 1 day? Are we doing any 1 day, 0 day?
I have done 1 day, 0 day because they're cheaper. So when you're looking at it from that perspective, if you're doing the 1 day, 0 day, they're going to be much less expensive than just going the durational calendars or durational.
Now he's looking at SPX or the XSP, which is the smaller version, or RUT or the MRUT, which is the smaller version. But they're still expensive in SPX.
But let's look. Can we look at XSP?
Sure.
Just to kind of show.
And I don't know if he's bullish or bearish, if he thinks the run's going to continue or not. But here, so 1 day, 0 day. Like, let's just go to the 0 day expected move.
It's very hard because, you're in SPX. Good.
Did he say,
I just typed in XSP, but let's try SPX because you can't see premium.
I'm just going to do a calendar because the diagonal is going to be very expensive. I'm going to go the expected move 73.60 and pull up a calendar, 0 day, 1 day. It's not as much as I thought it would be, $960.
And then keep in mind, if you're doing it in XSP, cut it, it's a tenth. So it'd be $95.
$95.
Do it in XSP.
So what you're playing for is the short to expire worthless today, and then you have that long for tomorrow.
It's hard when I looked at XSP because you're only getting 30 cents for that one up. I was like,
I know. Yeah. But again, I don't know what direction you're playing.
No, but I do say I have looked at those, and if I want an option going bullish or bearish, to your point, if I want an option for the next day, I'm always selling that front month premium because then you get it at
a discount. So here's the 0 day, 73.30 put on the 0 day, selling that and buying the 73.30. You're paying $985.
It's symmetrical.
You can have a downside, upside. We were up like 60 yesterday. We're up 80 today. Are we going to be up? Where's our boom mic? I wish I could hear what the order is.
They're divvying out thousands.
You're hearing like thousand.
Yeah.
Interesting.
It's interesting being down here because I'm still tuned to be able to listen.
Well, we were trained to always hear everything.
Yeah, so I would, and our husbands got so mad at us because we can block anything out, but I can hear something from across the room.
I know. So our husbands talk and we don't listen, but we could hear what we want to hear.
My favorite was because there was only phones on there, and I was like, I gotta go by. And he's like, you don't even. I still get off the phone like that.
I know. That's so funny. So funny. So yeah, we can do them. We could.
We don't have to put it in. I just wanted to show it. On there.
There's going to be a fight down here.
There is a fight right now. It's a good thing.
Let's just keep it up.
It's a good thing you can't hear it right now. There's a bunch of profanities.
There is a lot of yelling.
That's okay though. Okay, so let's keep moving forward.
Right, let's keep going.
And the floor officials are now walking out.
Next up, let's go into the platform. All right, back in the platform, I'm going to make sure I get out of these. I'm going to penny this down, the love order.
Oh, the love, yeah. Which I took my $27 on. Make sure you get your 127.
We'll see. We'll see if that fills because it's the wide market's way out there.
But it is wide markets, and it's not that important if we don't get out of it, right?
No,
it's not the end of the world.
Forward. I'm going to get out of that.
Okay, you're trying
That's working. Carnival, what do we have? We have a strangle in Carnival.
It's up 44% for a strangle. It's got 9 days left. He gone.
And weird because it's $1 away from the put. We've got the 26 put and it's trading 27 and we're up $46 on this strangle. So that's not bad.
That's not bad at all. Let's get out of that. And if you go to the trade page, just go to the trade page real quick. What Jenny's saying is you can see it. The 32 calls only worth 5 cents. We're very close to that put.
Yeah. We got all the money from the call.
Yeah.
Okay. What would you do if there was a fight down here and like stuff just started flying at us? We've seen many fights in our day, but they used to have to, like, I didn't see too many. Why are you doing this?
No, I had an itch. I felt a hair right here. This was not a signal of anything.
What does this mean?
This means stop talking.
The fights would usually go out to the horse fountain. So if you were going to get in a fight, you would say, take it to the horse, and everyone would go out to the horse fountain because it couldn't happen like on the floor.
And then what would happen was I worked for a big firm. Anytime there was a fight in a crowd, they would send me in afterwards because they knew I wasn't going to get hit.
They knew the guys wouldn't be in a fight and accidentally punched Liz in the face.
Yes.
And my crowd was so peaceful, we never fought.
Oh, I would always go in there and be like, oh, sorry, guys, you're stuck with me now. Like,
but once I had that out trade.
And she had to go to the horse.
Yeah, once I had to go to the horse over an out trade where both traders thought they were buying. And they were both like, no, I was buying. So
and usually it's the clerk's job to settle it.
And so
who's your trader? Who's the trader? Do you remember?
DV. So I had to go to the horse fight the other clerk to settle the out trade.
He better have bought you a beer.
I don't even remember. I blocked it out of my mind.
Yeah,
I blocked it out of my mind.
That's pretty funny.
Yeah. Okay. All right. So we're out of our CCL strangle. Clorox. We sold the 80 put in Clorox. We're up 41% on that.
Yeah. Clean house. Anything you can clean up, clean up. Because what we're doing is taking risk off the table, right? So you're closing a lot of these, semi-bullish trades.
Okay. Then American Airlines, I'm going to leave. TMC, I'm going to leave. Birkenstocks. I know it's only 28%. I'm going to put in an order for this. Or I'll just put in a GTC for 50%. Because Burke, can you believe Burke was down in the 30s?
No, I can't.
I put together a list. I put money in a card for Annabelle's birthday and said, with this money, you have to buy 5 shares of this, 10 shares of this, 1 share of this. And I added Burke in there just because.
I saw that, but yes. We're going to open it, hopefully, on one of the shows. We'll have her do it live on air. Or not live, but recorded.
Yeah. Maybe I'll just buy it back. Because $1,500. I was using $1,500 in buying power.
Oh, get rid of that thing.
Don't even tell her to buy a share because it's going to be, maybe. Just put it in there.
It doesn't matter. Okay.
Anything else? No, nothing else really. In Microsoft, we have this Jade Lizard. It's made $100 already. Now,
how long have we put that on for? I think that's a add-on.
I think it was, we lost on the earnings diagonal and we were trying to make some money back. So I will put in a 50% GTC.
Yes, because our year-to-date in Microsoft is not good. So put a GTC in for that.
But that is using $1,700 in buying power, just so you know.
But getting back what you got back, I think we're in good shape. Yeah, we're in great shape right now. So you good job. You get a gold star.
And then Oklo, we could take Oklo off. We put on a diagonal and we said, oh, well, this could be our earnings trade because we've got this diagonal going through earnings, but we made $180 in a day.
And we'll look at another trade on earnings.
So let's just take the 180.
I agree. All right. And then we are going to be taking live tweets. Well, we have earnings, and I know you tweeted the earnings.
Yes, I did.
So I want to take a look at those.
ARM, DoorDash, IONQ, Snap.
Snap has earnings?
Yes. Yes, Snap. And I can't even read that. Let me zoom in. Oh, Warner Brothers, Discovery. And then we have McDonald's, Celsius Holdings, Datadog, Vistra, and Unity Software.
So here's what I would like to look at. ARM Holdings, Snap, because I'm locked and loaded in Snap.
Okay.
I like to look at McDonald's.
Locked and loaded in Snap. How much Snap do you have?
More than I care to share. More than I care to share. And I'd like to look at Datadog.
Okay. Yeah, we can do all these.
Okay.
Let's just start at the top. Arm. I'm going to go right into arm.
And I do want to see the elephant.
Let me sort these again.
I do want to see the elephant on Twitter too. We're going to go back to Twitter.
Oh, yeah, we're going to go back to Twitter. Arm holdings, $234. Can I say pass?
Yes, you can pass. Now, that being said, is it up? It's up 12% today on the news of.
Look at arm holdings.
Yes.
Crazy. Okay, but we're going to pass on arm.
You can pass.
DoorDash.
Now, Uber was up. Do you think DoorDash is going to be up? See the Uber chart. Does Uber look like this, or is this down? Uber and Lyft is there?
Uber was up on earnings, but Uber doesn't
looks like this.
Yeah.
So yes. Okay.
Yeah. Let's.
It doesn't look like a.
Do you use DoorDash or Uber Eats?
I don't use either.
What do you use?
My husband calls it a gateway drug. He refuses to let us order food to the house.
DoorDash.
The kids can't do it either. Like, we are not allowed to use Uber Eats or DoorDash.
I feel like DoorDash delivers more than just food.
Probably, yeah.
Because I think I was ordering something on Dick's Sporting Goods, and it said, if you want this in 3 hours, DoorDash will deliver it. I think like they deliver more than just food.
Oh, I agree. And that's why I use Instacart for all my secret deliveries.
Oh, you had
I'm not allowed to use DoorDash. Allowed. He's very nice to me. I'm just but I'm not allowed to use DoorDash or Uber Eats because he calls it a gateway drug. He's like, if you want something, go get it.
Do you know what was
food wise?
You inspired me. She inspired me yesterday because you were just getting whatever you wanted.
Makeup.
It was Sephora, a trip to Sephora. She was Instacart girl, was going to Sephora, going somewhere else, going somewhere else. And I said to Lily, I really need flowers for the table, but I don't want to
the flower store.
Go to this flower store. And I was already in my pajamas. And
see, my husband doesn't realize Instacart does.
And so I said, if Liz can order makeup from Sephora and get it in an hour, I think I can order flowers.
You sure can. They'll get anything in Instacart.
So I just went on to like Meyer, this many bunches of this color tulips.
Yeah.
God, brought them. It was like I had a florist delivering me flowers.
Yep. Correct.
But it cost $14 instead of $100.
Correct.
Clever.
Yeah. Thank you. Thank you.
Clever. Very clever.
SMRT.
All right. Back to DoorDash. So I love the home delivery. It makes life very easy, especially if you're busy. If you're two very busy working people, like my husband, he's in DC right now. He's sick. He called me last night and said, I'm sick. And I said, why don't you just have a delivery of Dayquil, NyQuil? I'm sure you can get it.
You guys Uber Eats all the time, don't you? You're an Uber Eats family.
He works from home. So he Uber Eats his lunches every day. Yeah.
Yeah.
When he works from home. When he works from home, he Uber Eats his lunch every day. Or if he's in a hotel, I guess I think he Uber Eats rather than room service. I think he uses, we're probably Uber Eats best customer. All right. What do you want to do in DoorDash?
I would like to do, what did we do in Uber? We just sold a put.
We did. Okay. DoorDash is $167. We can sell that $145 put for $130. That's not bad.
That's not bad. How much capital it's using?
$1,400
overnight.
But take a look at this. When I go to review and send, our buying power is up to 18,000.
Yeah, that's what I'm telling you. You did
and you told me I couldn't sell a put in Disney?
Before we were at 10. You got it up to 18 by closing everything.
All right. All right. So I'm going to sell this $145 put in DoorDash for $1.30. Yep. And now I'm going to go and sell the put in Disney.
Yeah.
I'm going to go to Disney.
Just put a pin in that. Let's close some things.
June. Let's get aggressive. 105 put, 280. Oh, that's using $1,900.
I don't care. Whatever. It's just a durational trade. I would rather get $130 in 2 days.
Yeah. I know. And we both did the 9-day puts in Disney. We did the let's do this. We're turning short term. Research be damned. We're short term traders. I'm going to sell the 9-day.
But though, when they were doing all that, it makes sense with the theta decay, the 45 days till expiration. All those rules made sense at the time until the rule book changed.
Trading changes, right? And if you don't change your trading with the market, and honestly, he could do a study and show that the 45-day puts in Disney would outperform selling 9-day puts. That's possible. But I'd rather get $100 in 9 days than $200 in 45 days.
I agree.
So I'm going to sell the 104 puts for $1.15. I just figure let's keep what we have. So then we're trading our book.
Yeah, I like it. I just looked up something for earnings that it was not on the list. because we were talking about Instacart, and I was on with Angeline Ong in Europe when it IPO'd. CART has earnings today. Maple.
Oh, really? Maple Bear.
I mean, it's
Company?
very. It's nothing exciting, but I just figured I would let you know because it was.
This is Instacart. Look, did it already have it? Because look at the drop today. It's down 8%. It must have already had
Maybe
it.
they did because it said May 6th, so maybe.
It must. It was this morning. So down. Unfortunately, Liz, you're not keeping Instacart in business.
You know what that means? It's down. I can sell puts because I would have sold puts yesterday.
Let's take a look. If I go, I'm going to go the 9-day. We're going to be 9-day traders. I'm going to go the 9-day 39 put for 75 cents. It only uses $700.
Yeah, it's cheap.
Yeah. But what I've been doing on things that are down on earnings is selling the next week's strangle. And I've liked that because it's down on earnings. Earnings are out. It's bad. It's down on earnings. So I have been selling the strangle.
It's set to closing only.
Oh, it is?
I just went to go put it in mine.
Markets are too wide.
Yeah.
Markets are too wide. All right. So DoorDash, we're in. Disney, we're in. That's not an earnings trade. IONQ for train conductor.
Oh, yes. They have earnings today?
Although he likes QBTS, but I think it's all this. They're all similar. IONQ, $50. I don't know. I don't know if I want to touch these on earnings.
We're not in it. We'll revisit it tomorrow. We'll do an after earnings trade in it.
I could price out the diagonal. I'll price out a 2-day, 9-day diagonal. Go to the expected move, get $1.20 on the 56, buy the 50. It's $3 for a $6 wide. That's what we're going to start seeing Wednesday, Thursday.
It's Wednesday, Thursday, Friday. That's what you're going to see. Monday and Tuesday, you get a little bit better of a setup.
Okay, what else is on this?
Datadog. I'd like to see
Snap.
Snap.
Let's address Snap since that's your biggest position.
It's totally reminding me of, do you remember when Twitter took me out?
Yes.
Yeah, it's very similar. Because I kept selling puts and kept getting put the stock. I kept selling puts and kept getting put the stock. Now I'm just holding stock for earnings.
Well, here, so you can see we have 100 shares that we bought at $5. So we have 100 shares of Snap in this account.
Let it ride.
Just let it ride, right?
Yes.
Snap, we have 100 shares.
So I'm not going to sell a call against it. The only thing I would do, and this is how I got myself in a pickle the first time, so I don't know if we want to do this, is I would then sell strangles around it, and then I kept getting put more stock.
Mm-hmm. Mm-hmm.
There's nothing there, though.
Yeah, I don't know if a new trader, I'm not going to sell a call for 27 cents. No. If a new trader didn't have a position, what would you suggest they do?
I would. If a new trader didn't have a position, I'd go to the 9-day and I would sell that 6 put for 43 cents. But I'm stuck with my book. I'm clearly long Snap.
Yeah.
So that's the only thing I can see premium on. And so honestly, we're locked and loaded in Snap. Let it ride. You're not going to sell that call again.
I think it was like last summer. Yeah, last summer when Logan was home from before he went to school, we were in his trading account and he wanted to buy Snap. So he bought Snap. Probably up here around 7 or 8. So he's with you.
Yeah. I mean, and that's kind of why I kept my big position is because JD's in it as well.
And you snap your kids.
I snap my kids every day. That's the only way we communicate.
But you snap them. But do you feel like people communicate more now via something else? Instagram?
No. The only way I can get my son to communicate with me, my husband gets infuriated. Because if you text him, he won't respond. But if you send him a message in Snap, he responds immediately.
He responds. Okay. Well, we're long Snap. We've got 100 shares here. We'll keep that.
No, he does send a picture every day, which I do love too. But he will then give me like it's almost like a text.
Okay.
Yeah.
On Snap.
Yeah.
Got it. Warner Brothers Discovery. Whatever happened with it?
Oh, it's done. That whole thing is over.
What is it? DSC?
Warner Brothers?
The whole Discovery. I don't know.
It's I'll look it up.
I don't know. I don't even remember. There was, for so long, the whole Warner Brothers Discovery deal. I don't even know what the symbol is anymore.
Stock symbol. Hold on.
Until you find that, I'm going to move on to
WBD.
WBD.
It's on the NASDAQ. Formed by the merger of Warner Media and Discovery in 2022.
That NASDAQ stocks had to have 4 letters.
It's old. That's so old. We're dating ourselves there. NASDAQ stocks used to have 4 letters. Now they don't.
Really?
Mm-hmm.
I don't know.
It's true.
I guess so. Yeah, you're right. I mean, I makes sense. Makes sense. Micron, MU, 2 letters.
2
just 2 letters. Okay. Anything you want to do in Warner Brothers Discovery?
Not really. I mean, look at that. It looks almost like a dead stock.
Datadog, Unity Software. DDog.
We have traded quite a bit. While you're doing that,
I think I could do a Jade Lizard and Data Dog. We can get really far. The expected move is $17. So I can go way down, way down. It's trading 143. I can go all the way to the 115 put. The 115 put, and that'll give me 88 cents.
And it's only using $1,100 if I'm looking
And if I go to the upside, I would have to do the 149, 150 call spread. And then I'll have $1.10 on a Jade Lizard.
I think that's a great trade.
The calls are really in because
dollar wide,
because then it switches to 250 wide. So maybe I'll just sell that put.
Yeah.
So just the put. Again,
Bring it
puts
up,
are neutral
get
too.
Get it up and
collect
88
cents. The only reason I stuck with the 115 is because that's the only line with
that has open interest. Okay, you're forgiven.
So, and 88 cents on that 115 put. We'll send that.
Okay.
Okay. And McDonald's, I'm not going to trade for earnings.
Can we take a look at it though? I know you don't want to trade it, and I kind of agree with you, but I just want to take a look at it with you. So McDonald's,
honestly, look at the fall that it's had.
Yeah, that's what I thought it was doing. McDonald's was really rallying for a while.
I know, and so
you don't know when that's going to happen. You never know when it's going to happen. What is the IV rank?
Right, McDonald's was on fire for a while.
Yeah, it was.
It has a 72 IV rank.
Do you know that I am so simple? Do you know what I've requested for breakfast on Mother's Day?
What?
McDonald's sausage McMuffins.
Really?
I love them.
McDonald's?
I haven't had them in a long time, but I love them.
That's what you're going to get for Mother's Day?
That's my breakfast.
Sounds nice.
Yes.
I'm going to Phoenix.
We are actually going to be like a little bit on the road, like kind of running around.
Where are you going to be?
No, we have a couple places to go.
Okay.
And we're going golfing. So I was like, let's just have that for breakfast.
Okay. Yeah, that's going to be nice. But it's going to be really, really nice.
It's really nice for you.
Your McDonald's.
That's what I requested because my husband doesn't eat them. He refuses to eat that too. So I was like, guess what?
So you're going to make everyone, for Mother's Day, you're going to make everyone eat what they don't want to eat.
Correct.
I don't know what to think about McDonald's.
We don't have to touch it with a 10-foot pole.
It's expensive. If I looked at selling a strangle, it's expensive. I don't know if it's worth the risk. I don't know if it's worth it.
No, I don't think in my heart of hearts, I don't think a strangle is worth it through earnings right now. They're too expensive and you don't want to be stuck with. You don't want to have that. There are certain stocks that you don't want to look at on your sheets every day, and that's one of them.
Try to guess the symbol of Unity Software.
I can't see that, so that's
good. Nothing typed in.
You
were right the first time.
Yes, just you.
It's just you.
Yeah. I know.
You.
Like, those old rules make us sound so old when you're like, doesn't it have to have four steps? Like, it's been gone for a while.
Yeah, it's just you.
Yeah.
So here's Unity Software. It, took a big hit early in the year. It hasn't really rallied quite back yet. 73 rank.
Just because you can doesn't mean you should. You don't have to trade earnings.
No, but I just want to price a diagonal here because I think it's going to be cheap. So I'm going to go to the 30.5 call and sell that in the 2-day.
You're at least getting something. You're getting 77 cents for it.
And then the 9. So it's only $1.50.
$1.50 for a 350 wide. It's not bad. It's not terrible.
It's not bad.
Ship it. What do we know?
Yeah. What do we know? I got almost everything was up yesterday. Even the SMCI
down and there.
SMCI, the super microcomputer.
They can't hear it.
They can, yeah. Super microcomputer, that's up 16% on earnings from yesterday.
So you never know if you're going to get the follow through. So sometimes with earnings, good news is good news and bad news is good news, depending on what the market is doing. And when you're getting this rally, everything could be good news.
What's MicroStrategy? MSTR? That barely moved. It was down $3. It barely moved.
Really?
Yeah.
Huh. I didn't
so
see
that's
that.
kind of weird. And I did want to look at Celsius Holdings because that's something that we had a viewer who often traded Celsius Holdings. We'd look at it quite a bit. That's fallen from its highs too. But
is GLW still the symbol for Corning glass?
Yeah.
Type it in.
Oh, fiber optics is all the rage again. I know. It's skyrocketing. $183.
Yes.
I would love to know, and it's possible. Like I have a very old account at another
Corning glass in it.
at another brokerage firm that I just like. I mean, I thought I closed everything out, but it could have had
split and doubled.
Let me see. Like I probably walked away from that in 2000, and I walked away from that account in like I'm transferred. Anything that had any value, I transferred to Tasty Trade.
Yes.
And anything that was like peanuts, I left. And what was Corning Glass then?
In 2001?
Here, it was $16. I probably sold it.
I'm sure you did. I'm sure you did.
Yeah. Corning Glass, fiber optics, they're taking over again.
Yes, they are. They're taking over.
Yeah.
I heard it. I heard that this morning, and it just made me think of you when I was like, oh, GLW. I wonder if
GLW.
they're counting it.
It was like the hottest put on the trading floor when they started getting into the fiber optics.
They did. It was very, very. It was.
You couldn't get in. You couldn't get into the pit.
You couldn't.
Everyone was trying to fight their way into Corning Glass.
Yeah.
Yeah. Oh, here, maybe we can get. There's a celebrity spotting. Oh, there goes Hollywood.
I think he was going to bow. I really did.
All right, we have 5 minutes. I'm gonna go to Twitter.
Go to Twitter.
Go to Twitter.
Just make sure we get to everybody.
I will. Okay. So Punish Pixels, he brought up his ES trade, Punish Pixels, and he talked about ways to adjust it. We just closed it yesterday. We said,
I mean, honestly, we'd rather be lucky than smart, and that was a luck move.
Yeah, we said we were down to
$2.
$2. Everything was so far out of the money. We just saved ourselves a few $100s by closing it yesterday. We could put it back on today if we wanted to.
Right. And I appreciate it, Punish Pixels.
And then
Look
here,
this is Fabio is living my bucket list. I've always wanted to go on a safari.
And he says when VIX reaches 100. So VIX here is 17. In Fabio's world, it's 100 when an elephant's walking right at your car.
Don't move.
That's
breathe
awesome.
slowly and stand still. Oh man,
I know.
That is awesome. That's one of the coolest things I've ever seen. Thank you, Bob. Thank you for sharing.
Look at Mikey. Is he taking off? Happy Hump Day. Mimi put some more
trader
money in her purse thanks to Ford. Short put made 50%. So made more than what the dividend would be. So yeah, we're taking off our Ford puts. Mimi's taking off his Ford puts.
That's his alter ego. But I would rather have the money than the dividend.
Yeah. And here we go. Ajit in AMD. Look at this.
Upside ratio.
Upside ratio, collecting decent credit, risk to the upside.
What cycle is he in?
618.
618. What are the strikes?
And you could see he's got the 455, 455, 485. Buy one, sell two. Buy one 455, sell two 485s.
In 618?
Yeah.
There's no fives.
What?
There's no 5 strikes. It's
then 480s. Then I'm
450, 480.
Yeah, 450, 480. Well, no, 460, 460, 480.
Okay, thank you.
I'm just eyeballing. I'm eyeballing this graph and guessing the strikes. 460, 480.
Collecting $1,000.
Ajit.
I just put it in Ajit.
I mean, it's too rich for our blood, but I like it. Thanks for sharing it.
I like it too. My only issue, and I'm okay because you know what? Trying to calm down about having a naked call. I can do it.
Scott Sommer. Let's see, ladies. That's when we looked at those. Yep. Steve Jones, we got 2. Scott Sommer. How does the Jan
Bob on Fire
10, 15, 20 sound to you?
I actually, the strikes sound great to me when you say 10, 15, 20.
Oh,
and that's for earnings.
OYFT.
We didn't put anything in for earnings yet, did we?
Oh no, earnings in Lyft coming up tomorrow.
Let's go Bob on Fire. You can do it early.
January. So you're buying the 15. What was it? 1520?
I'm pulling it up right now. It's got somewhere.
1520? Is it? I don't
have it. You know how weird that is?
I've got 10, 15, 20. Yeah. 15, 20 call spread, selling the 10 put.
Take a look at this. I go from Steve Jones to Patty Handy. He's not in there. Scott, I have no idea why I don't see it.
You maybe need to update.
I just did.
I don't know.
I don't have it.
Maybe Scott deleted it and I've got it before it's gone. So here,
don't try to delete it.
I'm going to buy the 15-20 call spread in January and sell 2 10 puts. Our risk is getting long 200 shares of Lyft at 10 in January, taking in a credit. This uses only $468, can make $500. It's a longer term trade.
Press that button on a deleted tweet.
And the BOF, Bob on Fire.
Yeah, I like it.
Filled. Bob on Fire or Ratio Super Bowl. The jury still is out.
We like Bob on Fire. I appreciate Scott for sending the actual name Bob on Fire. Now, I've got Patty, which is crazy. Good morning, friends. Do you ever dabble in the tri-weekly options? If so, what companies do you like and what strategy?
So the ones who have Monday, Wednesday, Friday?
I think so, yeah.
That would be tri-weekly?
That tracks.
Do we dabble in them? Sure.
We'll dabble in anything, but it's not my go-to strategy.
Yeah, it's not like, oh, I'm looking for those Monday, Wednesday, Friday.
No, we did have that.
Come on.
Yeah, come on.
Here. Speak into the microphone. What do you see going on?
Interest on the D's quarterly 8120s and 8130s.
PX? Oh.
D's quarterly. I'm going to get
calls. Yeah.
Yeah,
right. Here, you use your
Doug?
use your mic. If
Yeah.
you could, all right, Doug. What do you want?
Quarterly 8120s and 8130s. This guy's come in every day. We're rallying 100.
8120.
He's rolling. 120. He's rolling. There should be like 40,000 open interest or something.
We love the break.
We have to go so far.
Yeah.
It's so far. Okay.
Yeah.
8120, 69,000 volume, 40,000.
Over the last month, he keeps coming in and buying his shorts and rolling further out. So every 100 points we rally, which is every day, he keeps coming in. Right now, this is what he put on today.
That's amazing.
Yeah.
So
he started with like the.
I don't know if we could hear.
Strike.
I don't know if
he
we
started with like the 80 half strike, 7,800 strike.
Tell us about
And he
the
keeps
fights we're
running.
hearing.
Right.
Tell us about the fights we're hearing back there. We've heard a lot of possible like yelling, screaming, swearing.
Well, I mean, the market keeps going up right now, and if they signed this deal today, it's like I said before, a lot of pain. You know what I mean? A lot of people may be short. This guy's an example. He keeps coming in every day, day after day. Like I said, we're rallying 100, and he keeps rolling them up. So
And so a lot of traders in the pit are taking
they have to take
yeah.
any other sides.
Right. So there's a lot.
So if we rally another 100, he'll buy these back and roll it out even further.
That's amazing.
I just want to
All
let
right, I appreciate that. Thank
All
you,
right, Doug. Thanks for stopping by with that news.
We appreciate it.
We're gonna get you a mic next time. It was nice having Doug stop in.
Oh my God, I love it. I love the information.
Yeah.
60. How many? You like? Hold on. Go there, and then we'll be done for the day. So we're gonna take a look at
You
this.
see 69,000 today of these 8120
So
calls.
every day that we're up 100, he's gonna roll it then up. Every day we're up. He rolls it up.
Well, I do feel bad for the traders who their job is to take the other side. And we're hearing thousands and thousands and thousands of contracts come through this pit.
Probably what we heard when it was like thousand.
Yep. All right. On that, we are done for the day. Everybody have a wonderful day. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
See you tomorrow.
Everybody.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
We built tastytrade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. tastytrade.
What's up, Tasty Nation? Welcome back to the show. My name is Mike. I'm here with Thomas, and it is Options Trading Concepts Live, 11 a.m. Central on this fabulous Wednesday. Thomas, how you doing?
Doing good. How are you? You got back from your trip.
I did. I got back from my trip, survived. Almost didn't survive, though. This guy that was he drove us from the airport to the resort, and I was like, this guy thinks he's a Formula One driver. It was like one of those Sprinter vans that's more vertical than wide, and he was just ripping around these turns. I could feel the thing like shifting. I'm like, are we gonna just topple over? And like a car would be parked in front of us or stopped at a light, and he'd just be accelerating into them until the very last second. So I was like, I can't watch this. And then on the way back from the resort to the airport, I was like, please don't be this guy. He gets out of the car. He's like, hey. And I'm like, oh, good.
Yeah.
So, but survived.
Hey,
here I am.
Glad you're here.
Thank you. Good to see you. I'm not as tan as Nick. That was my goal, is to get that sweet, sweet olive skin. But
he put the coconut oil and stuff on his skin.
Yeah. I guess I just can't get there.
Yeah.
You know? But yeah, I mean, I checked my phone every day. looking at these markets, and they're insane.
Oh, yeah. Yeah.
Just straight up.
Yeah, it's wild time. I mean, still wild. So, yeah.
Yeah, crude oil down 6.5% today. The E-minis and NASDAQ simply cannot be stopped. Biggest intraday range we've seen in crude in the M contract for quite some time. But, I mean, AMD had earnings, just gapped higher, up to 415, up 16%, 60 points right now. And this isn't even the high of the day. We got as high as 430, 15 points higher than this. So, I mean, I don't know what to say. Everything's just going straight up, and volatility is collapsing before our eyes. And we now have between the MNQ UV contract, like we have almost a point of backwardation or contango between all these contracts. So the sky's the limit? I don't know.
Yeah, it seems like the sky is the limit. I mean, AMD, it's up like 300% or something over the past year. You know, I wish I could go back to when I was a kid and tell my parents invest in NVIDIA, AMD, trading for dollars, maybe cents back then. But
yeah, I mean, it's just wild. It's crazy. And it's not even just the hardware stocks. I mean, Microsoft catching a bid too, which you love to see.
I do. I'm long Microsoft, so I love that.
Aren't we all? I did actually close that Microsoft position, or most of it. So I made a bunch of closing trades today. Microsoft, I went through the order chains. It was a $1,400 winner right around there. But it was a number of different trades that all started with this Super Bowl we put on. So Jamal and I had this 380, 370 put spread to finance the 15-point wide call spread. So we took advantage of the call skew here, and we went. Initially, it was an 80-day expiration trade. So just taking advantage of the call skew, 10-point wide put spread to finance the 15-point wide call spread for 70 cents. And this was before the market crash with the war. So February 24th, market sold off, made a ton of adjustments here, just rolling this short call, the 440. I initially bought it back and then rolled it to the 425, moved it from the 425 up to the 435, rolled out a week again for $2, rolled out another week up to into the earnings cycle for $5, rolled that down for $2, and then just sold out of it for almost $3. So total P&L on that, $1,400, smash winner. And I just have the 500 strike calendar spread now. So still bullish on Microsoft, and it's a long-term one. It's long January of 2027, short September. So holding on to that. Also closed an NVIDIA winner. That was a 200, 210 diagonal spread, $180 winner. United Airlines, $180 winner, 80 strike short put. And then 6J. We put this on, I want to say like a week ago or so, but it was just a small diagonal spread, long June, short May. Both of those contracts settled to the M contract. So that was a small winner, but just taking off some risk here in this wild, wild day. Have you done anything today? Or do you have plans to do anything today?
I do have an order, and I'm selling a put spread on crude oil, just a one-day option. Looking for this small bounce. And the slides we'll go into, I got some data.
Sweet.
Crude does bounce. I'm also, I did have a short gold position. Of course, the market's doing something else today that I put on yesterday. But, I'll hold on to it. I think we're going to go through the dance we've been doing for quite a while.
Yeah.
Peace, war headlines. But yeah, I mean, I am long Microsoft, long Meta, looking to get long some other. I mean, I would love to be long the chips. I don't know why I didn't get long earlier this week, but it's a great trade. They're ripping and ripping. I don't know how much more room they have, but long some soybeans. Those aren't doing good today because of the oil drop,
Mm-hmm.
But yeah, I mean, I'm going to get back in here, getting long oil. So. See how it goes. I do have a short put spread in oil at 80.81. I'm going to hold on to that. That's in the N6 contract. We've still got 41 days. I got 10 points of breathing room on that. I have a short call spread on CLM6. That's got 8 days left, and that's at 110. So I'm probably going to take that off pretty soon here. Probably today, take a little profit off of that, reduce my exposure on the top side oil so I could get a little bit more of those short put spreads. But yeah, also long the pound, and it's doing all right since I put that on. The yen, I think it was a second intervention. I'm not sure. There was the first one earlier this week where we had that big green candle. And I saw news that there was a second one. I'm not sure if it's confirmed that they were actually intervening in the market, though.
Craziness. Yeah. I mean, how low can it go before you have something like this? Like at some point, there has to be some kind of intervention, intervention, if you will. But the pound, I haven't looked at this one recently. What was your thesis for this one?
This one, it's pretty much a play on dollar weakness. Overall, I think the pound or euro is usually where I express that. You get a lot of liquidity there. I don't like trading the yen, and pretty much because of things like this happening, intervention in the market. You never know when it's going to come. You can't really fight against it. It's hard to calculate that in your trading. So I've stayed away from there and just pretty much expressing a weaker dollar view on it by the pound right now.
Love it. Love it. Yeah. I am long the dollar in the Tasty FX account and just getting bludgeoned, unfortunately. But the dollar franc position just can't stay above water there, but still getting positive yield on that one. So that's nice to see. When you're in the Tasty FX account, if you look at the swap ask or swap bid, if you're short it, if you're long it, the swap ask is if it's a positive number, you're getting paid every day to hold that position. So excited to close this position and see how much yield I've collected over time, because I've been in at least this first tranche since November 5th of last year. A lot has happened since then. But yeah, just taking some heat on some other positions. But again, the name of the game for me in here is just trading small enough to where I can withstand any and all variance. The dollar franc position has been my biggest variance against me, and I've been layering on tranches as it goes down. So you can see I started at 81, threw on another 5 microlot position at 80.5, another one at 79.5, and another one at 78 flat. So just dollar cost averaging down. This is probably the biggest position size I'll get to, 0.2, 20 microlots, but all these other ones, 0.05, even into these massive moves against me, it's $100 here and there. And I can hold these positions until hopefully they work out for me.
Yeah, it's the nice thing about spot FX. You can really, your position size, get really, what you want and get small.
Yeah. If you want to join us on the YouTube channel, we're streaming live on Tasty Live. Just head over there. You can throw in your trade ideas, questions along the right-hand side chat. This will be a truncated segment today. We're going to end around 11:25-ish. But you do have some slides for us, as you've mentioned.
I have one slide.
One slide.
Yeah, yeah. So yeah, today I've been ordering, I am getting a short put spread in the 1 day out crude oil. So it's at 92.91.5. So this is pretty much a bet that we're going to bounce tomorrow or overnight, and I'll take it off tomorrow. I think it's like $90 profit, 180 max loss, so 2-to-1 and 60% POP, pretty much right around there at the 40 delta. So yeah, let's go to the first slide. I'll just show you why I have ran the data. The top 6 biggest oil drops since Operation Epic Fury started. We see here April 8th, that's the biggest one, 16%. The day after, you get a bounce, 3.6%. April 17th, 12% drop, you get a 6% bounce the next day. And it's pretty much the name of the game. There was one day, April 14th, we got a 8% drop, and then we it was barely unchanged the next day, 0.01% gain. But pretty much what the story tells, after big oil drops, a lot of this is speculation coming out immediately on a headline, and that's what we've seen again here. And then the next day, you get some relief, like call it a dead cat bounce, whatever you want. But, you usually do not get follow through right now because, I think it's because the situation is so fluid. You get this good news, a lot of geopolitical risk premium comes out, and then traders go, wait a minute, it's the headline is being written off already, at least partially, to where you're getting that rebound the next day. That's what the data shows. That's kind of what I'm going to trade it off of. I think this is the 6th or 7th biggest daily drop we've seen since the war started. So if we keep in line with what's been going on, since March, we're going to get a relief rally tomorrow. And, with this being 1 day to expiration, I'm quickly going to, if it bounces or even stays the same, I'm going to be able to take a lot of profit out of that trade. And if I lose, it's a $180 loser. It's not going to kill me. So, it's a tactical shot here.
I like it. Yeah, and I think you can express this in a number of different ways, and this is like what we look for anyways. This is amazing data. Thank you for putting this together. But like these are the price extremes with data paired with it that makes a lot of sense. Now, you still have to keep your risk in check. I mean, crude oil can go anywhere. I mean, even today, intraday range in the micro crude contract in M6 that I'm looking at, we got all the way down to sub 90. And now we're sitting at 95. Like, to your point, this has been a massive 14-point range today, and we still have a few hours left of the trading session, so at least for the equity trading session. But, yeah, I think there's a number of cool ways you can do trades with this. So, like, the micro crude contract, I know you said you sold a put spread in the 1 day.
Yeah.
Is that correct?
Mm-hmm.
So you can go to the main big contract. You can sell that put spread. You can make it as little as 25 cents wide. So like $50 to making 50 to risk 200 with 1 day to go down at 91. You can maneuver this however you see fit. If you wanted to go the straight up spread route, of course, the 1 day expiration, you're going to capture all of that implied volatility value, and you won't be at the mercy of time value if it continues to drop. Let's say if you sell a put spread and it drops down to 93 or 92, if you got a put spread at 91 or 90, it doesn't matter because that'll expire worthless. And you can see this here. You get this trailing implied volatility as you get away from the 1 day, 2 day, and you get into next week. So I would say at the very least, if you're doing something like this to play for this bounce tomorrow or the next day, the 1 day or 2 day makes a lot of sense to capture that IV. And just make sure your risk is defined in case it does continue to slide. Micro crude, you could also do. So like micro crude, you have more limited expirations, the 2 day and 8 day, but the 2 day has way more implied volatility from a time adjusted standpoint relative to the 8 day. So what's cool about this is like, let's say you want to buy this contract and you want to sell some premium against it at like the 99 strike. You can kind of verticalize your risk here, and you could sell the 99 for $1.20, and you could buy the 91 for just under that. And you can kind of verticalize this if you wanted to. And if you get hit to the downside, let's say it continues, you could sell out of your put for credit. That credit offsets your basis on the contract that you're long, and you would get all the value out of the 99 call as well. So you can kind of manipulate this. And the cool thing about the 2 day is that you could then roll into the 8 day if you wanted to as well. Or you could buy a near term 2 day, like 94, let's say. You buy the 94 against the contract, gives you $1.30 of risk to the downside before you're protected here. And then you could go to the 8 day, which still settles the M contract, and you could sell, the 100 for a net credit. So like these are the cool things you could do, and it gives you that near-term protection. Sell the 8 day against it for a net credit by collecting more than what you're paying for the 94. And this is still a 90 cent, almost $100 net credit here in the middle. What to do? I kind of like this. Like just staggering these, collecting the premium to offset the cost of my 2 day. If we get a continuation, I can sell out of the 2 day, keep that credit. I think I'm going to do that.
That's a nice one. Yeah, that's the nice thing about crude. You got the micro contract, you got the contract. There's liquidity in both of them.
Yep.
You can structure your trade almost any way you want.
Yeah. And the nice thing about this too is when you have the micro crude, I didn't pair it with the actual. Maybe I should do that, huh? Buy the actual crude contract and then do the crude options. Let's go to 88, see if I can get filled. But yeah, the nice thing about this is, yes, you would see marked losses if it does reverse to the upside, but you have the static contract that offsets it. So you're still making money on the upside with a pairing like this because of that static delta on the contract itself. Do I really need to bring this down to 85? Lower?
Yeah.
80 is the best I can do. Okay, maybe not. Maybe they just will not let me do this. The people need it. Oh, that's why. It's because I'm dealing with a 30-cent wide bid-ask spread here.
Yeah.
Okay, fine. 75 cents. Best I can do. There you go.
Yep.
All right. So I've got a 75-cent net credit, long the 2-day 94, a point lower than where we are now, short the 8-day 100. Both of these settle to the M contract, so this is a synergistic position with the long contract that I own. If you get a rally up to 100, I'll make $500 on the contract. The short call will gain value, of course, but I'll just leave it there and I'll probably just let the 2-day expire. But if it continues to the downside, I'm protected below 94. I can choose a point at which I would sell out of that contract and use that credit as the holistic position and basically have a covered call 8 days out.
Did you see there's another unusual whale that traded this this morning before the Axios report came out? So 70 minutes before the Axios report dropped this morning, it was like 3 a.m. 920 million short. On the oil market.
Just a casual like wake up, have a coffee.
Oh yeah.
Throw some money at this thing.
Right.
Maybe it'll go down.
Yeah, and that's a time when the oil market usually never sees those kind of trades. It's a big trade, but definitely during that time. And now the last one I think was April 17th. That was a 760 million short, 20 minutes before the Reuters reported Hormuz was open. And it's happened a few times before, but it's interesting because there's a lot of attention on this now that people are looking at the insider trading and it's still happening. So someone's confident that they're just going to make this money. Someone knows something. Knows more than us, at least.
Yeah. They always do.
Yeah.
They always do. But yeah, it's wild to see. And it just continues to tend to happen, it appears. All right. Let's pop over to the YouTube chat. Thank you again for the analysis. Love to see it. Hopefully we get that crude bounce tomorrow. We'll both benefit from that position. And I'm sure it will be something. I mean, the markets are ripping higher. Crude's selling off with the ags as well, which I think is interesting. But to your earlier point, when we had you on a couple weeks ago, the ags are going to likely move with crude because of the straight creating supply and demand pressure on those products as well. One question here in the YouTube chat: what is the max loss on the SPX butterfly that Nick did with Tony at Confirm and Send this morning? So I just duplicated it from the follow page, pulled up the expiration risk graph. So it looks like they've got a call butterfly here that is a 10-point wide long debit spread and then a 15-point wide short credit spread. So the credit spread, where the risk is 5 points wider than the debit spread that would offset this in the money risk if the market were to keep climbing higher. So even though it's a 70-cent credit, you still have another $500 of risk here. So the max loss, to answer the question, is $570 if you were to get filled at 70 cents. Right now it's trading for 20 cents, 15 cents. So the risk is, the difference between that if you were to collect a credit here. So just depends on your fill price, but just know you've got another $500 of risk on that credit spread that is not offset by the 10-point wide debit spread here. And some people in the YouTube chat, like if you wanted to, you can just make it symmetrical. If you make it symmetrical, then your max loss would be the debit paid here of $1.80, and that would be reflected in the Tasty platform as well. NVIDIA trade idea. Have you been trading NVIDIA?
I haven't. I used to a lot last year. I gotta get back into it.
Yeah, I mean, this thing's ripping and dipping with AMD. It's a very similar chart if you look at both of them. AMD, of course, had earnings gapped higher. Surprise, surprise. But yeah, interesting to see NVIDIA having such a strong sympathy move here. But let's take a look. NVIDIA call crab trade in the earnings cycle. So we're looking at long July, the 220, and then selling the earnings cycle, which is the 16-day here. If you don't, the Tasty platform has the flag here after the close on May 20th. But if you didn't have that, you can see that earnings are in this 16-day cycle because you get a big bump in implied volatility. Goes from 40% up to 55. So plenty of more premium here, plenty more IV, which is reflective of that binary event in there. But 235, 250 butterfly component. Yeah, so the 235, 250, it's looking like something like this if we look at Theo. So long in July, short the earnings cycle. Comment here is if you need to roll, you can roll it, the short option components and the protective long into June into a diagonal or calendar if needed. Yeah, I like it. $7 here, playing for a continuation to the upside. And to your point, if you need to roll into it, you can. I like this. I can get down with this. Let's do it. I'll route it at, I've got it at 743. I'll bump it up to 745 and let it simmer for a little bit. Oh, didn't need to. Instantly filled. Yeah, I like that idea. Beautiful. Let's see if we can get one more question here before we head off into the sunset. Have I done anything with SLV straddle at 87? No, I have not. I've got the 87 straddle in the 43-day cycle. So the more this rallies, the more extrinsic value gets infused into this cycle. So the more it rallies towards 87, the more I'm just going to sit here and do nothing. But if you wanted to, you could consider rolling down the 87 call into this rally. So that would give you a little bit more premium. You can go inverted, but I'm just going to leave it as is because I have a lot of premium. I've collected $2,000 so far. So it gives me the flexibility to be more aggressive here. Is there a way to see break-even points of a trade in the analysis chart that takes into account all the premiums we collected with the rolls, or do you have to calculate that manually? Good question. So what I do is, so my current position, I have $2,000 of premium. I'm up $100. If you look at analysis, what you would need to do is do it straight from your positions tab, right click, go to analysis, and it'll bring up your expiration graph relative to your premium collected. So my break evens are down at like 67-ish and up at 107 with my $2,000 of premium collected. But if you don't have that or it's not looking right, what you could do is just go to SLV, go to your existing position or where you have a position, throw on the straddle here, change this to $20. I think I'm at 2008. And this will give you your risk graph, your actual risk graph with a new credit received. So maybe you rolled into a position or adjusted a position that doesn't account for the credit that you've collected or debit paid. Just go and adjust it manually and change the price to 2008. And this will give you your expiration risk graph with your position you have on. Also, just make sure you have this, just the little medallions here checked and your price correct. And that will give you your accurate risk graph at expiration if all things were to work out for you. That's it. We're out of time. Short segment today, but hopefully you enjoyed it. If you have any questions, you can follow us on Twitter or reach out to us there. I'm at Trader Mikey B. Thomas is at FX Westwater. Got plenty more content coming your way on the YouTube channel as well as tastylive.com though, so stay tuned. And we will see you same time, same place, 11 a.m. Central tomorrow. Peace.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What is going on, everybody, and welcome back to Risk and Reward. The market back at all-time highs. Why not 8,000 becomes a realer and realer question every single day. I was short AMD into the earnings call this morning, so I could be better. I'm joined as always by my wonderful co-host, Errol Coleman. Errol, how are we feeling? What's going on?
Pretty good, pretty well. Yeah, another all-time high, pretty crazy to see. Maybe 30,000 NAS. It started off as a joke of being a little facetious, and then now it's like, yeah, it might as well be. So it's insane.
I was thinking this morning that it feels very reminiscent of when we put the moon on the gold chart, and we like, oh yeah,
it surpassed it tenfold.
This would be ridiculous if it ever got up to this moon emoji up here, and then it just went flying through. That's what the broader market feels like right now.
To a T.
Yeah, we were joking about why not 8,000. I mean, literally just like 10 days ago, and that seemed like such an impossibility. And now it's like we just do another $100 every single day. So yeah, testing 7,400 levels here. We have a full hour today. We are on it until our usual departure at 12:30, so we have plenty of time to spend with you all and pick off any questions, positions in the chat, anything like that. Why not 10,000? I agree, Chuck. Why not? Why not 10,000 at this point? We only need like, I don't know, 20 more days like this, and we're pushing 10,000. So yeah, it's just so crazy. These markets, we've become so desensitized to it over the last 3 presidential terms. But like the S&P 500 is supposed to do, 4 to 8% a year, and we get 1 and 2% days like clockwork. It's pretty incredible.
I mean, if I was retiring this year, I mean, good Lord, anybody retiring this year, I mean, they just got a bonus on their 401k if they were about to pull that out tax free. So. Shout out to that. A little bit more volatility in the oil products as well. That should be doing well for any short delta that we have on in there. I know we recovered just a little bit, but we haven't recovered from where we had sold off in oil too. So another product experiencing a ton of volatility right now, but another all-time high. How are you guys feeling? What do you guys got on right now? How are you guys managing your positions? It's been a little bit boring on my end. I'm not going to lie. I mean, it would be a little bit more fun if we could ride this wave a little bit more. But if you weren't already sitting long delta, it's really difficult to not flip the cards and then change your position. But it's been a little boring if you're not long right now.
Yes.
I feel.
Yeah, certainly. And I had just barely still long bias going on in the portfolio as I rotate into a little bit of neutrality here. So slightly green on the day today, but not as green as I would like to be with how long my bias has been over the past few months. But the reason it's been moving shorter is because I'm taking profits, not because I'm getting shorter. So can't look a gift horse in the mouth. That's what they say, right? Yeah, we can jump straight into the Tasty platform here. I see Nice Boy has mentioned this Joby position. What's going on, Nice Boy? Good to see you. Yeah, Joby had a good earnings call yesterday or the day before open. I actually can't say I'm positive when this earnings call went down.
Things are looking bright.
Yes. Between yesterday's close and today's open, Joby reported very strong earnings, good forward guidance. So actually up 17% today on the underlying, but that is just like, a little over $1 move on a stock this small. But happy to see it. This is a good start, and it does seem to be holding these gains. We're not immediately wanting to give them back like stocks often will after a strong earnings report like this. In fact, we opened at a reasonable like $9 level, and it's been intraday that we've moved up to 10.22 now, pushing higher. So yeah, very happy with Joby. I didn't think that I was going to get this good of timing. I was aware that earnings were coming up, and that was sort of a factor in my decision. Part of the reason I went, super long dated was also, to take advantage of a run like this whenever it comes through next, because they do time and time again with Joby. But additionally, just to give it enough breathing room should this earnings call or the next one go poorly. But yeah, happy to see the gap up there.
These were the drone Ubers, right?
Yes.
Okay.
Yes.
Here we go.
The flying taxis.
Yeah. The flying taxis. Look, I guess things are looking bright over there. Still really curious to see how this tech is going to come out, but bright earnings call. So we got a nice pop to the upside. Can't complain.
Yeah. Certainly can't complain. I mean, I'm 20 strike, not really realistically expecting to exit this in the money or anything like that. But this is definitely a good start. I do wish I had two of these. I would scale out of one of them if I did right now. We're up something like 25% on these 20%. But because I only have one, I'm going to continue holding and wait for the really big. Are we looking at Microsoft? Wait for the really big run that I alluded to, because it'll do 100, 120, 130% runs like this with some regularity. They happen all the time with Joby, these little pops. So looking to catch one of those, but earnings certainly a good start, and it sounds like you're defined risk, Nice Boy. So yeah, very very good start for you if we can hold these levels. Aside from that, not a whole lot of excitement going on. Pelosi stock here expanding a little bit, but it's all sort of fugazi. I do have 10 of them, so $80 notional is really only an 8-cent move on the underlying, and we're still far from glory on that one. Oil coming down pretty hard today. We have USO down about 8%. I'm very short USO as has been well documented. These 50 puts, these 317 DTE 50 puts, actually did a pretty good job at catching the top with. Those are green right now, but long way to go on the 226 days. But just looking for some continuation here. Whenever this oil thing falls apart, it'll fall apart hard. When I say this oil thing, I suppose I mean whenever shipping actually resumes, we look to be back at full capacity, prices start coming down at the pump, all those good things. That means that oil price has really collapsed. So I am expecting that, feeling good about these positions, and I think this is a good start. But we've definitely seen this story before with these big gaps down and fake outs back to the highs.
Yeah, nonetheless, a lot of volatility there. I mean, I know this morning, we had seen some of the lows be put in, and then I know we've given back about half the range, but I mean, it's holding. That aggressive selling is still continuing too. So the range is absolutely there for more continuation on oil if it wants it, at least.
Waiting to retire on one call in Joby. LOL. Pump to $500. Hey, if it pumps to $500, I might be retiring right along with you, Nice Boy. I would take it. Only kidding, of course. No. I'm being deadly serious. Joby to 500. Let's see it. Let's see what happens. Hey guys, hit my limits in UAL and IWM first thing in the morning. Good times. Nice. Happy to hear it, Ranch. I assume you mean your profit targets when you say limits and not stop limits. If you mean stop limits, my condolences. But I'm interpreting that as a genuinely positive good times. Yes, UAL. I put on some UAL longs not too long ago. No pun intended. Did catch a nice move up today. It's the falling oil prices are driving UAL a little bit higher. Cost of jet fuel coming down.
Did you hear what Spirit said about why they cited one of the reasons why they had to shut down?
What about the oil?
Yeah, they had cited fuel costs as one of the main proponents in their documents, which was interesting as well.
I did see that. Yeah, I mean, it's just tough to when your entire business model is being affordable. Raising prices is never going to go over well. So. Yeah, it makes it really tough whenever you have to. But just such a shame for Spirit. I mean, they totally could have survived. The JetBlue merger gets blocked. The Frontier merger gets blocked. It's like you just have nowhere to turn.
Yeah.
And the government acts like they want to bail them out after they were the ones who blocked the two mergers in the first place.
Yeah, no.
It's like,
I think there was a little bit of I think there was a little bit of politics behind it because I think, they very well understood that if they don't allow this merger to go through that, a budget airline would suffer, kind of like how we had seen it. So, I mean, I don't know what the reasons are. I don't know what conversations had been had, but I think it was pretty predictable that, if rising fuel costs is a thing that knocked them out of the market, they were already teetering right on the edge. So, hence why they were having those conversations about merging in the first place. So, it almost seemed like a little bit of foreshadowing at the same time.
Well, yeah, I mean, they declared bankruptcy twice.
Right.
Like,
Yeah.
Usually that's sort of a one-strike you're out situation. They managed
Right.
to make it to a second bankruptcy declaration. But yeah, the other budget airlines reaping the rewards of Spirit exiting the market. Frontier up another 10% today after a great day yesterday. And JetBlue is the other one. JBlue also logging a good day here, up 3%. But really not as much as you would expect to see, especially with JetBlue. Not as much upside as you would expect to see. Frontier has kind of done its part over here, and maybe higher highs. I mean, really, I would have expected something a little bit more aggressive from Frontier. I mean, you're talking about a market that had 3 players in it that has now gone down to 2 players. My public school math tells me that that's a 33% decrease in market competitors.
Yeah, that's a massive share that you to pick up, right?
Yeah, I mean, that's a giant share of the market, and Spirit was, at least in terms of like brand recognition, they were the main player.
Oh, 100%
in this market.
100%.
I've in the past when I've flown budget airlines, I've taken 1 or 2 Spirit flights ever, but I have flown Frontier a good amount.
Yeah.
Difference between Spirit and Frontier, and it sounds like a small thing, but it's a big one, is that the water is free on Frontier.
Okay.
On Spirit, nothing is free. They want you to pay for a water on the plane. Yeah. Oh yeah. Okay. It's nickel and dimes everywhere. That's how they can keep it so low. Yeah. You got to pay for everything else. But Frontier, they'll give you water. And I feel like water is like a baseline. I mean, I always thought with Spirit, how long can you legally trap people in this tube and not give them water?
Right.
Like
there's got to be some type of regulations around it. I don't know. I mean, you're in the air, so I mean that's a good point.
Yeah.
I'd say so the same.
Yeah, that would always that was like the main thing that threw me off on Spirit flights. I was like, I knew I was going to get nickel and dime for everything in the world. I knew there wasn't going to be some complimentary pretzels or anything like that. But water, you're not going to give me a cup of water?
You got to go to the bathroom.
Yeah, for real. But yeah, so I'm a Frontier bull as it pertains to actually taking the flights. Although I will say, good experience on all of them. And Spirit, now that it's formally gone, we can say never in its history had any documented safety incidents.
I mean, what is the main difference between I did see that headline as well. But what is the main difference between Spirit and Frontier? Like honestly, I know Frontier less leg room when you compare them to Delta, American. But like, what is the main difference? I feel like it's like almost the same.
Yeah, but between the two, it's really not much. Okay. It's pretty much identical business models.
Because Frontier was just always my go-to. The first plane that I ever took was a Frontier flight. I think back when I was like maybe 15. And I thought those were just the regular planes. That was the first time flying. And then since then, it was kind of just a go-to. So I never really noticed the main difference. I just noticed the leg room. I'm not even a very tall guy, and I feel like I don't have much leg room. So
yes, it is definitely they're getting more people on there. They nickel and dime you for everything. But yeah, empirically, not too much difference aside from what I mentioned. Frontier gives you water. I do like that. But yeah, pour one out for Spirit. If you got funny Spirit stories, feel free to let us let us hear them in the chat.
Do you think the war being over hasn't been already priced in? More importantly, do you think the war is really over? Do you think the war is really over based on optimism of a deal? Trump tells Iran to accept deal or face new wave.
Well, I think that as it pertains to that question, it's sort of layered. Because if you mean, am I sure that the war is over? No. Like, am I sure that there won't continue to be conflict, that there won't be more bullets exchanged? No. I think that things absolutely could continue. We've sort of seen this war is over fake out thing before. I am more confident now than I've been in the past. But the second question, and really what's more relevant to what we do here, is the market done with the war, regardless of what happens? I think the answer is yes, barring some crazy re-intensification of things, more troops deployed, lots more bombing, like things making a new peak in terms of violence. I think that the market is just pretty much moving past it at this point. If we were to see some small continuation of conflict, and it flares back up a little bit, I think that we would hold, but I don't think that we would see some dip, especially not a dip back to the max uncertainty lows. I think that so to answer the question, I don't know that I would say that it's fully priced in. I think a full resolution could offer some more upside, but I do think the potential for a resumption of war, as long as a new peak is not made, is priced in. I suppose is what I'm saying there.
Yeah, valid.
Fool me once, fool me 5 times as well. True. Sad Ozempic Zepbound we go. You didn't save the budget airlines. Too bad. It's true. That is, airlines are expecting to see legitimate increases in EPS as a result of the weight loss drugs. 1 in 8 Americans on the weight loss drugs at this point, which is a lot.
No, they work very well. No, I'm just kidding. I've been really trying to put on a lot of weight, so any calories are better. But I will circle back around to that in about 5 to 10 years. I may retract that statement right there. But I have noticed, a lot of the GLP-1s, a lot of the Ozempic, even within the younger generation, I feel like a lot of those products have been getting very popular. So a trend that I've also noticed, even from the young ones.
Yeah, and there's definitely there's definitely dangers to them that I feel aren't.
Oh, absolutely. There's got to be. There's the hunch. There's a hunch. Something I can't really put my finger on, but I'm piggybacking off of that as well.
Well, yeah, it's like, I don't know. You just often, I feel like there's one side of things where people who are too skinny in the first place to be taking these things are taking them. And that's an issue to begin with. There are people who,
if I take that, I'm disappearing.
Yeah.
I'm disappearing.
And lots of people are just disappearing. I mean, celebrities, and also just, at least anecdotally, I know people that I went to college with, mainly women, who are on these things that absolutely should not be and look bad, look malnourished as a result. And this isn't presumptuous. I know empirically that they are taking these drugs. But the other side of things is, even among people who do need them, if you're overweight and you're not eating a good balanced diet to begin with, then you start taking these things, they will just suppress the hell out of your hunger, but then you're just going to become malnourished because you weren't eating a good diet in the first place. As your hunger goes down, it actually becomes more important that every meal has the nutrients and the protein and everything, the carbs, everything that you need to get through a day. And if you weren't getting those things in the first place and then just become less hungry, you're just going to be even worse off, like health-wise, though your weight might go down. So I don't know. That's my small soapbox on the.
No, it's a good point. I think it's a combination of social media because weight loss drugs have always been extremely popular, number one, and then number two, extremely profitable over the last few decades. And the one thing that's new, the one variable, is that social media. You know what I mean? And I think that older individuals, weight loss, those things have always been popular with the older crowds, but I've never seen it so popular with young people like I have now. And this is our first time being young people, so it's not like I have that much data, but I think that combination with social media is rapidly increasing these trends. And it's interesting to see. It really is.
And it's sort of a constant pendulum with weight in society, if you want to get a little more
back and forth all the time,
esoteric with this. But yeah, it's like, late 90s, early 2000s, it was like it was really just a lot of pressure to be as skinny as possible. Poor Britney Spears, they destroyed her in the tabloids because she was eating a not even that crazy diet and was not overweight. And then, it swings all the way to, like 2020, kind of the peak of like body positivity and like full acceptance. And then now it feels like with the weight loss drugs, that pendulum is just starting to swing back a little bit, and there's this pressure again to be as skinny as possible.
I'm curious where the influence is coming from. I know a lot of times it was celebrities, especially in the 2000s and maybe 80s, 90s, celebrities, a lot of that influence came from them. But in today's age, I feel like celebrities are actually losing a lot of relevance for the most part. And you see a lot of celebrities collaborating with other people that aren't celebrities to gain relevance. So I'm curious where that really is coming from. Is it a herd mentality? Is it a single celebrities that are kind of pushing, some of these trends forward? I don't know. But even anecdotally, I've seen that as well. With
you can look at the Kardashians. The Kardashians are an index for this. Yeah. However the Kardashians are looking is like what's being accepted in society at any given point.
Right.
They're all
crazy.
skinny in the early 2000s. Suddenly they all have BBLs, and then suddenly they don't. They get rid of the BBLs. It's like there's the trends that they're an exemplification of what's going on. So
we're morphing out here.
Yeah, there's my brief anecdotal soapbox.
Here we go. Viggy confirms there's a difference. No, I'm just kidding. Look at the photos and movies of Americans in the 70s. Jaws, for example. Before the sugar was introduced to the food, mostly high fructose gloop. You know what's really funny about that? Whenever I cut out sugar, I can tell a notice in my body and just a fat percentage, especially around my face when I stop eating sugar. So I'm like, wow, I wonder what's in a lot of these foods because noticeably different.
Well, yeah, and sugar. There's levels to sugar, as Nice Boy is alluding to here. Like good, like real sugar.
Yeah, natural sugars.
Yeah, isn't really going to hurt you. Like pure glucose.
But those banana nut muffins, bro.
But yeah,
I love those things. And those aren't good for me.
Yeah.
They're amazing. They taste great.
The longer that ingredients gets, as you start to get into the high fructose corn syrup, the partially hydrogenated oils, all that stuff.
It tastes amazing though.
Not every gram of carbohydrates, not every gram of fat is created equal.
Give me my red 40.
Better than others.
Give me my red 40. We'll call it a day.
Yes, let's do some red 40 maxing. Anyway, back into markets here. I actually haven't looked at Novo Nordisk since they reported earnings. Live look in here, slight move up, not exactly the move back to 100 that I was looking for. I guess suppose they didn't say that they've found a cure for cancer. Honestly, you know what? You want to have another broad society esoteric discussion? If a cure for cancer is discovered, do pharma companies move up or down? Somebody riddle me that, because there is certainly a lot of money that these pharma companies all make by treating cancer. So if one of them cures it, how badly does that hurt the others? How badly does that hurt the company that cures it? These are real questions. Other movers I have going on. I mean, yeah, it's really not a whole lot of activity. UNH moving up a little bit alongside Novo Nordisk, something of a sentiment move there. And Meta logging a good day, even though I am hurting these 710, 715 short puts looking more and more dangerous by the day. So monitoring that closely. But yeah, I mean that's pretty much all the action that I have going on here. You got anything going on your end?
Honestly, not for the most part. We can jump over here to the Tasty platform. We can do a little dive and hop on our soapbox when it comes down to Micron a little bit here. We still got a little bit of time left in these positions, but I mean this thing is one of the most resilient underlyings I think I've seen in a while. Once again, Micron trading at its lows at the beginning of April at around 315, and right now it's trading at 652. Once again, this isn't a meme stock. This isn't GameStop. We'll circle back around to GameStop and the CEO here in a quick moment, but some moves I don't think I've ever seen before. It feels like a lot of these products are at their highs. But no, once again, the fact that this is looking a little bit steeper and it's not the indice trading at all-time highs, I think entertaining some short deltas soon will definitely be warranted, just because we haven't really sided in too much of this Micron position. But good Lord, the train is still running. Kind of similar story with SNDK, hoping that one of these will pull back, hoping that both of them will pull back because they're highly correlated towards each other. So whenever one's going up, Micron's going up as well. Whenever one's pulling back, the other's pulling back. And I mean, the difference between these two is really just going to depend on which liquidity you like better, which options chain you like better. But for the most part, tomato on whichever product that you want to choose. But the train hasn't stopped yet, brother. Can't stop, won't stop. You bought some positions in Lunar and Fly. Let's check that out.
Yeah, these are some space companies.
Got the space companies on the map.
Yeah. Oh, I guess space stocks is what we were saying. Rocket stocks.
Here we go.
I see what you're saying. Mostly because it was May 4th, Star Wars Day, commemorating Star Wars Day with some space stocks.
Yeah, it looks like $34.50 per share on Fly. Decent IV rank, decent amount of volume traded on it. I don't think I've traded this one in a while though.
Yeah, Fly is another one a lot like Joby, where I feel like if you just buy calls and wait, you will inevitably catch some giant run. This is a super volatile one. It makes these giant moves up and down with regularity. So. Yeah, this is another one where it feels like if you just buy year plus leaps, it's inevitable that you will find some spot to exit them. Not as confident in this as I am with Joby, because Joby is truly just a flat line that spikes every now and then. But
I'm actually very interested in the whole idea of what Joby's building. Like I don't know if that's gonna be adopted by the public, but like getting that tech down in an Uber taxi in the air, I think that's like some things we would see on like a very futuristic type cartoon. So the idea is really cool. I think the brand behind it is really cool too. And they mentioned the partnerships with Uber, right?
Yes.
Very credible company too. So yeah. I'm pretty locked in on the story, at least for Joby. So I'm hoping that thing goes to the moon.
I think it's crap. I think Joby and Archer, I think these air taxi companies, I just don't know that it could ever actually come to fruition. And I guess I shouldn't say ever, but I think we're a long, long way from it.
I don't think
longer than
that's not being adopted by the public for sure.
Yeah, I think it's a much longer time horizon than what the market is actually pricing in on these companies. Maybe there could be some light integration, like some integration just for the ultra wealthy, something like that in the nearer term. But I think, before we're in a Jetsons world where we're just outside looking up at these air taxis zipping around everywhere, I think we're a ways from that. I think that there's just so many regulatory hurdles with all of this. And also, as I forget who it was, apologies to whoever I'm forgetting in chat. Maybe it was you, Viggy. Somebody said the other day, it was money wandering. Said, they're one crash away from a crash, and that's true. Also, if we even get to the point, a decade down the road, where the regulatory environment is starting to accept the Jobies, the Archers of the world, and these things are becoming more commonplace. If one of them crashes with people in it, it is just wraps. I mean, it would take that would be so impossible, not necessarily impossible, but very, very difficult to recover from, and the market implications would be extreme, I'm sure. I'm still on Rocket Lab shares. That one's been pretty wild as of late. Yeah, Rocket Lab, another one, RKLB. All these space stocks just they move so crazy. It's interesting too. I mean, this is just a very emerging sector. I mean, like this year with the SpaceX IPO coming up, I feel like all these companies have become so much more relevant. Rocket Lab, Planet Lab, Lunar, Firefly, you name it. I'm missing a big one there. I always do. But yeah, so many space companies, and they all sort of move together, and it is an inherently volatile sector because launches do fail from time to time. Oh yeah, ASTS is the one that I'm forgetting. That's been another fun one this year. But yeah, it's like they've all slowly started to merge together and move as one. And anytime one of them has a rocket blow up, it hurts all the others, and vice versa. ASTS, yes, thank you, Colonel. Appreciate. I could see a handful of them flying between the Hamptons to New York City. Beyond that use, not much. Yeah, exactly. I mean, that's sort of the type of situation that would be in play here. It would be flying, Kylie Jenner from one part of LA to another. It would be replacing, like, whenever you see these ridiculously short private jet flights that billionaires take, that Kylie Jenners and Taylor Swifts and Elon Musk's or whoever take, where it's like they'll take a 5-minute private jet flight. Travis Scott's certainly guilty of it as well, just rattling people off here. But it would be like replacing those. It would be when you need to go, 10 miles, and these people who are rich enough to just take their private jet would choose to take an air taxi instead. Haven't you heard? AI makes humans dispensable. True. It's true. Recently heard there was some accident where one of these small companies accidentally put a satellite into the wrong orbit. Yes, that was ASTS, and it was actually Blue Origin's fault, which Blue Origin, obviously not publicly traded, that's Jeff Bezos' space company. But yeah, ASTS has a contract with Blue Origin where ASTS makes the satellites and Blue Origin puts them into space, and Blue Origin put one into the wrong orbit and then lost it, which... yeah, has to be hard to completely lose it. Has to be hard to put it in such a wrong orbit that you lose it, because I would imagine that these satellites have, the most state-of-the-art tracking technology possible because of how difficult it is to track them when they're in space in the first place. But yeah, ASTS took a big hit on that, and it wasn't even their fault. And the satellite was insured, so did they really deserve to take that big hit? I don't know, but nobody can trade Blue Origin. And I believe I talked about this on air as well, but I think that whole situation is interesting because suddenly it makes ASTS tied to Blue Origin's performance. Even if a Blue Origin has a rocket explode, even if there's not an ASTS satellite attached to it, you bet your bottom dollar ASTS is going down, because that just gives further credence to the fact that they might lose more satellites in the future. ASTS has nothing to do with Joby or Archer. Yes, correct. I'm bouncing topics rapidly here. They're not even same sector.
Yeah, no, we'll see what we get out of that. I can see some influencers like Speeder, Kaisana hopping on one of those Uber Airs. Uber Air. I can, Uber Air sounds fitting.
Yes.
Also read that China has developed some way to move satellite into different orbits, robotic arms.
Interesting. I'm not surprised by that. We're living in the future. Joby, if I remember correctly, isn't talking about mass use. They're talking about hauling 1%ers from Manhattan to JFK. No, yes. Yes. In the short term, yes. That's their idea, and that's sort of what I'm getting at. Is I think that I could see that practical application somewhere, in the semi near future, in the next 5 to 10 years, becoming a fairly commonplace thing, and you would, start to see some of these things flying around. But yes, in terms of any mass adoption or integration, or Joby really becoming like a massive company that's very involved in the cultural zeitgeist, I think that we're a long ways from that.
Yeah. We'll see what we get. It's an interesting story. Very interesting that Uber is entertaining it. So we'll see what comes out of there. But looking at the high options volume list, it's looking like we got ANET down the most on the day. 16%, 13%. We barely even have on the high options volume, we barely even have any underlyings that's down over 10%. And if we look at what's up most on the day, AMDL, I don't think I've looked at this underlying massive gap up. We ran to the highs at around $50. Now we're kind of pulling back around to 46.5, give or take. No earnings, no dividends. Okay, decent so far. I don't really like the options chain. We're running at a strike prices on the call side, but this one's a runner on the day. What else do we have over here? Joby. Shout out to Joby, man. Again, that partnership with Uber, even if it doesn't pan out, they were smart for that, just to get that name in there, just for people to believe. And maybe they have Uber on the nameplate just to get more potential investors excited about this for whatever reason.
Well, Uber does helicopters now. Like, this isn't really outside of Uber's purview. To do this.
Yeah. Anyways, I was looking at
satellites for what?
AMD as well. AMD gapping up on the day. Once again, running towards the highs, and these products have finally been pulling back a little bit. We got INTC, kind of same story over here, not as aggressive as AMD, but one of those products again at its highs, but very, very, very difficult to catch a runaway train. Maybe some short deltas warranted, but we'll be patient on that end. Phone services don't want to run landmines for internet.
Yeah, that's the reason ASTS exists pretty much. Satellite cell service and internet, and they're going to partner with all the major phone service providers. They've partnered with some already. I think Verizon is one of them. If you have Verizon, you might connect to an ASTS satellite every now and then if it's the best connection for you. And then also, surveillance. Like Planet Labs is basically the same, conceptually the same as ASTS. Just put as many satellites into space as possible. But Planet Labs has surveillance satellites that they have contracts with the military and mapping companies and all sorts of private companies as well who want to survey land for whatever reason. They have all kinds of packages. Planet Labs is an interesting one in a stock market context, sort of a scary one in a surveillance state context. But Planet Labs maybe has the most promise to me in the stock market of any of these space stocks that are at our disposal right now. Tried to go long shares in Lyft recently. That didn't go very well. Sorry to hear it. I use Lyft. I pretty much always use Lyft. I very, very seldom use Uber. So I'm trying my best for you, Ranch, to push this higher. I'm a contributor to Lyft revenue.
That indeed. Riot on the board a little bit. I know Riot was kind of moving alongside a lot of the crypto products earlier on in the year, but they definitely detached mostly, but gapped up and running on the day. Very liquid product, decent IV rank, no earnings in the way, no dividends in the way. Decent product, not something I really want to get involved in. Some short deltas seems a little bit attractive.
Surprised to see that kind of rally out of Riot with nothing super groundbreaking going on in the broader crypto space. It is edging higher, but obviously nothing that correlates with that.
Yeah, kind of see. Yeah, especially because it gapped up and then it continued on a run to the upside. So we'll see how these pan out. The options chain doesn't look too attractive on the premium side, at least. It is a cheaper underlying. This is something that undefined risk could be in the conversation, not too expensive. But not too much on the high options volume watch list. It feels like a lot of these names are up on the day. A lot of things trading near all-time highs. Haven't looked at Disney in a while, gapping up and running towards its highs as well. Giving back some of its gains, but holding most of it. We got earnings. That's what, this morning?
Yes.
How the earnings went.
Yeah. Disney also said, and this is, I have like half this story. I've skimmed this, so somebody can fill in the gaps that I'm about to leave in the chat for me. Thank you. But Disney is overhauling Star Wars. The Star Wars fandom hates the new Star Wars stuff a lot. So they are shutting down their Star Wars experience at Disney World that cost them billions of dollars to set up and patrons pay $5,000 a night for. And then additionally, they're going to do a full plot pivot with the upcoming Star Wars properties. I think I've hit the high points there. Somebody can.
Star Wars is the high point.
Give me more details.
Yeah. Star Wars is a high point. Right there.
But yeah, it's a whole thing. Everybody's unhappy with new Star Wars. I haven't watched really any of the new Star Wars stuff. I haven't seen Mandalorian. I certainly haven't seen whatever that one is right now. It's like Ace. There's like Archelaus. There's a Y in there somewhere. Acolyte. Is that it? I think I got that.
Sounds familiar.
I'm Star Wars adjacent. I was into it a lot more when I was younger. Tried to go on shares in ALP today. Set to close only. ALP. E. That. Alpha Compute. Oh, yeah. What the heck? Is this, what is this?
Yeah. Kind of reminded me of Apple a little bit there. Again, Apple kind of screeching towards its all-time highs. I know we have an all-time high in Apple sitting at around 288. Apple trading at 286 right now. So, that's right around the corner. Maybe a lot of traders positioning for that potential breakout to a new all-time high. I love using the options chain feature to see how I've done in the past with a particular ticker. It's very helpful. Yeah, 100%. Always very useful to be able to do that. And even check to see what kind of underlyings you did trade before. I kind of forget. Silver helped me this morning. I haven't checked recently in like the last hour. What did you do over there in Silver, Stan? Or Rets Media?
Yeah, silver is working up a little bit.
It's been so quiet, man.
Yeah, not quite dicey for me yet on my verticals, but starting to get there. Happy I exited one of them yesterday.
Yeah, I'm not a big trend line guy. But my geometry is showing us that, we're kind of funneling into this range here. We're kind of making lower highs and higher lows. So it'll be interesting to see where this thing wants to break from. But if we do end up breaking to the upside, it'll be really attractive to be able to get a little bit of short delta on, whether that's in gold, whether that's in silver. But if we keep moving to the downside, I think I missed the train. That's what's tough with some of these products. Whenever they make a directional move, they make such a decisive directional move. It's really difficult to catch.
Rhett, I cannot, I don't understand. I cannot for the life of me decipher this comment. Caroline and Guy and that guy saw CNBC Guy. You're Gus. Hey Gus. I'm like confused. I'm a little confused here. What's going on? What's going on though, Rhett? Hey, good to see you. Yeah, there's like $3 there. Had to get out. Yeah. That makes sense in the context of that position.
Would you choose Google or Facebook for a long position?
Facebook, throwing around the OG tickers. Oh,
I know.
He got you.
I was gonna say, big deal. You had me type in Facebook. Meta.
I would certainly say Meta myself off the top of my head. Just much more attractive spot. Meta, another one of these Mag 7 stocks that's just continued to lag behind the broader market. Feels like it's going to have to play some catch up sometime. I'm very bullish on Meta in general. I've been long Meta for some time and have some time more left on all these contracts. But yeah, Google trading off the highs. I would be a little uncomfortable getting long Google. Even though we have seen across the entire market that highs do not matter right now. I mean, the memory stocks are the most clear example, but Intel, AMD right alongside them. A lot of these AI companies just continue to log higher high after higher high. So not necessarily the scariest time to get involved with Google off highs. But, I mean, we're talking in the last 5 days, it's made an all-time high in all but one of them. And the previous high was 350, currently trading at 395 after logging those 4 out of 5. So, I don't know. It's a sketchier spot for Google. Meta beaten down, gaps to fill. Feels like Meta has some catch-up to play. I would certainly say Meta.
Yeah, no, I would probably say Meta as well. I don't think I've traded Meta in quite some time. When's the last time we traded some Meta?
Got the Alphabet going in.
We traded Meta. Last August? We had sold something for about $2 we collected in credit. We were in there for about 13, 14 days. So I could imagine around August 13th. What happened in Meta around August 13th for us to exit that position so soon?
Yesterday, Google was the most valuable company in the world for a bit. Yeah, that's a great point, Nice Boy. And quietly, some shakeups happening in the top companies in the world right now. Samsung is now over $1 trillion market cap. It's bigger than Walmart. It's just flown up the charts. SK Hynix, also coming out of South Korea, getting close to $1 trillion itself. I think it's at like 800 billion right now. But yeah, those South Korean companies starting to emerge a little bit, and yeah, some shakeups at the top too. It feels like every day the top 5 top 3 really more so are shuffling.
Yeah, we haven't traded Meta in a while. Not opposed to any long delta. I know we've been selling off a little bit. Let's look at 590s. It is giving us $5 wide. Sitting around near the 30 delta, it's giving us $1.67, a penny over, a third of the width, almost exactly to a T. Maybe that's a sign that we got to get in this position. Get a little bit of long delta. And because we're going to be pretty quiet on the NASDAQ end for some time, until we finally start to consolidate on NASDAQ or have a decent pullback, we're probably going to be sidelined. So with that being said, we can use that time and not let the capital just sit in the portfolio just collecting dust. So deploy a little bit of capital here. We can do 595, get $1.80, 43 days left to expiration. But I'm really liking the $1.67. Give ourselves a little bit more room just in case Meta wants to take in, or just in case Zuckerberg comes out wearing, some new clothes again. I did like the rebrand. I dig what he's trying to do, where he's trying to get. He's trying to reel in that younger generation. And I'm already getting very used to Meta as a rebrand.
I miss when billionaires just said, if you wear a black T-shirt and jeans, you can be a billionaire too. That was the philosophy for so long.
It was. Times have changed a little bit.
Warren Buffett retires and everything goes to shit. Any choice right now in defense stocks? Interesting question, big deal. Yeah, defense stocks are sort of a pain point for me right now because I'm so mad at myself for getting short oil and not defense stocks. What a boneheaded move. It's so clear that the defense stocks would dip before oil because of how quickly everything moves. I should have gone short defense stocks, taken a bunch of profits, gotten out and rolled that into short oil a week from right now. I don't know why I didn't do it. That said, not really. I don't know. There does seem to be some uncertainty here. If you think that there may be some resumption of war, it might be worth taking some lottos on some of these because they have fallen really far from the highs. Like Lockheed Martin just straight up trading at pre-war levels again. Raytheon close to right alongside it. Oh no, yeah, pretty much back at its pre-war levels as well. Pre-conflict, that is. So if you think that there is some chance that those things might happen, maybe some lottos into the next 60 days could be viable. But objectively, no. I feel like we're really at a decision point with these defense stocks. I do think there could be slightly lower lows coming through if we get a full resolution on the conflict here. And even if there is some small resumption of conflict, I think we would only see marginally higher. So I guess maybe I'm sort of expressing a neutral sentiment here. Perhaps there could be some neutral angles to take advantage of here, in which case I would say you should just do whatever has the highest IVR, Raytheon, Lockheed, pretty much in lockstep there. And then what's the other one? L3 Harris, LHX, that is. 53.7 on LHX. So maybe a neutral angle on something could be a good idea. Sorry, guys. I have an aggressive Bluetooth headset that steals the microphone. I had to make an adjustment. Oh, I see. That was why the comment happened. Makes sense. Not the ServiceNow CEO, David Bowie look. I have not seen the ServiceNow CEO, but I would if production wants to find us a picture and pull it up, I'd be very, very intrigued to see what kind of David Bowie look we're talking about here. I've done well in Palantir every time I've traded it. Gives me confidence in the put that I just sold. Nice. You're the Oracle of Palantir.
Speaking of Palantir and Michael Burry, I know Michael Burry came out and spoke about how he sold most of his GameStop shares, almost, just right after GameStop came out talking about how they want to purchase eBay and whatnot with the weird CEO interview. So it was kind of funny to see that headline. Maybe him using a little bit of that liquidity to exit some of that position. But if that was a very bullish statement for GameStop.
Oh my goodness. Look at that guy.
Is that that's a leather jacket? That's what, some leather sleeves? It's a bomber jacket.
Yeah, this is.
The shades.
Who does... He looks like Will Ferrell in that last picture we just looked at.
Yo, full head of hair at 85 is crazy.
This guy's had some real work done too. This is a plastic looking fellow, I feel.
Okay, he's got a little bit of aura.
Yeah.
Anybody that doesn't know what aura is, go ahead, look that up in the Urban Dictionary.
I rock with it. I rock with it because he's not like crazy overdoing it either. It's just just wants to have a cool vibe.
Yeah, he's got the bomber jackets on lock.
Yeah,
the bomber jacket.
Look at that. I mean, he got that shit on.
No, he put that on for real. He put that on.
Yeah,
he did.
I'm with this. It's I mean, really, this isn't too dissimilar from how I've seen Jensen Huang dress.
I would say the same. Yeah, absolutely. That's exactly who I was thinking about as well. I would say Jensen Huang has a lot of influence on CEOs in terms of how they've been dressing lately, because this conversation is brought up all the time.
It's true. And we're at a point where legitimately, as silly as it may be, the amount of aura your CEO has is actually priced in to your stock.
Yeah. Well, speaking of Mark Zuckerberg once again.
Yeah, there we go.
Like,
that's
there we go.
Loosely the same thing.
Same color hair.
Yeah. Leather jacket. Yeah, he's just missing the sunglasses. That's how ServiceNow guy is differentiated.
No, it's because he's inside. When he goes outside, it changes to shades. I don't know if he has those ones on. Rod Stewart.
That's a jacket there. Is that alligator? What that was crazy. That last picture of Jensen we looked at. Okay, back to business. CEO aura, it matters. Okay, it's why Palantir ran for so long.
It does. It really does. Though.
Palantir had no meaningful increases in revenue for like the last year when they did 600%, and it's all just because their CEO has a little bit of aura.
I mean, I really think it really does, because I think people are really pricing in the vibes that they get from certain CEOs, and I think that's why Alex Karp tries to come out acting one of the most arrogant people I think I've ever seen in my life. No joke. And, I think that's a level of confidence he tries to, try to price into his company in terms of how people believe. Because confidence is huge. Like, if people don't believe in your company, they're not going to park their money over there. So regardless of if they're bluffing to the level of their arrogance or not, it's an interesting take. Mark Zuckerberg, once again, like, this is the first time we've seen in our generation CEOs putting their face on the company like that in a video format, and allowing the public to really learn their personalities. So I like it. I think it provides a little bit more transparency behind who's really running the business, and you could imagine, the type of people that they would hire. So I kind of like the new shift. It adds an extra level of transparency. At first I used to think there was like spokesmen for companies. Now the spokesman is the CEO themselves. So let's see Paul Allen's card. Paul Allen. Who's Paul Allen? Heard his aura has a bit of whiff to it.
Your name. I feel like you have just prompted 6 or 7. You don't know who Paul Allen is? Comments.
Paul Allen. I might have.
I feel like that's
sometimes I know.
I don't either.
Yeah. Well, sometimes I say things and I know I'm going to get that pushback. Like, you don't know, but it's like I'm waiting for that so I can get more information so I can kind of figure this out. But yeah, Paul Allen. Who is that? Carl Aiken. I just heard that he owned a casino a while back. I was reading up on him.
I'm not sure. Is he related to Clay Aiken?
That's exactly what I thought.
I'm loosely familiar with Clay Aiken.
But no,
Aiken was good on the Celebrity Apprentice. I'll throw that one out there. Celebrity Apprentice was a good show. I know everybody's all jaded because of Trump's presidencies and stuff, but it's a good show. I enjoyed that show. Nothing like some B-list celebrities screaming at each other.
Paul Allen isn't even a person. Paul Allen is a movie.
That's a movie, man. Oh, I see.
That's funny.
I have to return some videotapes. Oh, you guys kill me. There were some good questions up here. Bluetooth headset, Andy Warhol. In SLV, when it's up, I sell a call and whatever expiration I can get between $2 and $3 a premium, and then I buy it back at $1. Try to take $1 out on the contract. I think that's a fairly replicable strategy, especially with how the relative stability that we've seen with SLV as of late. But it's not real stability. It's like it's really well suited to that strategy. I think you've hit a good spot with that, Rhett, because it's sort of stable. It's stable like in the context that you would evaluate a normal company through, but at the same time it moves. It's not stagnant the way that you would expect a metal to be. I'm curious how you put like a long put on a technology stock and then scalp daily. But if we take a dip and tag, let me try again. I'm curious how you put like a long put in a technology stock and then scalp daily. But if we take a dip and tag, wouldn't volatility go up and not make so much on my long position? Are technology stocks and oil a good pairs trade? Interesting. That's a very interesting question. Perhaps. Oil, I'm just so uncertain on oil right now. It's scary. Like technology, I feel like I'm pretty certain that we're just going to continue to see upside in technology as unsubstantiated of territories we may be getting into. I think we have at least a few weeks of this of juice left to squeeze out of this. But oil is just so tricky right now. I feel like that would be a little over-engineered, a little over-ambitious to try to go oil for the pairs.
Seahawks owner.
Yeah. Gus, you're fired if you don't know who Paul Allen is. Paul Allen co-founded Microsoft with Bill Gates. I see. Oh, Paul Allen. Okay. Let me get. Do we need a picture of Paul Allen? Why am I fired? Why am I fired specifically? Does Paul Allen look like me? Do I look like
Is
Paul Allen?
Paul Allen a person or a movie?
Oh, okay.
Is Paul Allen a movie or
I've confirmed he's co-founder of Microsoft.
Okay. So Paul Allen isn't a movie.
Yes, I've definitely seen lots of pictures of this guy before.
Yes, Paul Allen isn't a movie, or?
Oh, he's passed away in 2018.
Oh, 2018. That's fairly recent.
Rest in peace, Paul Allen.
Yeah, rest in peace.
Production is not pleased with our lack of ball knowledge here. One of the richest people in America passed in 2018. I see.
Yeah, no, I had no idea. Actually, I had no idea.
Paul Allen is Jared Leto. Yeah. The beard pictures are the ones that are.
Oh yes, him without the beard. They kind of look alike. He kind of looks like Bill Gates without the beard. To be honest, they kind of have the same kind of style going. Yeah. But yeah, beard is very very recognizable.
This is aura though. I'll say he's got this going on.
You know, that's pretty interesting. It does seem that around that time, right? Because I think Jeff Bezos has a very similar image where he's sitting behind the desk, a wooden desk with a old style computer sitting on the desk. That was like that core CEO entrepreneur picture to take, you know, around those ages. So it's kind of cool to see those circling back around.
Yes. Gus equals Paul Allen's doppelganger. I don't know about that. If I could grow a beard that impressive, I would, but I can't, so I won't.
Hey, you could do the stash a lot better than a lot of people could. So
yes,
there you go.
The stash is just the only place where it grows this full. It's why I got.
I'm just waiting one day for you to be like, shh, the whole time. I knew it. Be like, who is this guy?
No, that would validate too many people. I'm too deep in this lie now with my fake red mustache. They both have eyes, ears, and a nose. That's true. That's correct. Yes, gamma scalping. Yes, big deal. In response to your question, I'm sure that this means wouldn't volatility go up and hurt your long position, is basically what you're saying. Well, I mean, it depends on what side you're on. Maybe I'm misinterpreting the question, but I mean, if you're positioned for volatility expansion, like if you're long a call, obviously volatility, if volatility went up as you're moving to the upside or vice versa. But if you were on the short side or defined risk, volatility could hurt you a little bit. So it's all just about how you skin the cat.
Yeah, most definitely.
We love rabbit holes, Jackie. Don't worry about it. It's what we do. It's why we have the full hour today, so we can rabbit hole at anything that we want. You know what they say about red facial hair?
What do they say about red facial hair? What do they say about red facial hair?
Well, I mean, it's there's I don't know if I can get into this discussion on air. There's implications that he's making.
I'm colorblind.
I'm not gonna answer these questions.
I'm colorblind. Volatility down on the day. Interestingly enough, again, you know, markets make. Josh,
Paul Allen had it. They're telling me in my ear.
No, volatility here kind of flat on the day, which is really interesting because once again, NASDAQ and the S&P 500's making another all-time high. We can kind of see volatility flat on the day. You would think that volatility would be down a little bit more, or at least be sitting at its lows. I don't know what the market is trying to tell us right now, but I'm starting to see a little bit of a disconnect. I think all sense has pretty much gone out the window, but the market can stay irrational longer than you can stay sane or solvent. So it's really going to be a waiting game. But VIX still sitting at 17 with a new all-time high is pretty surprising. That wouldn't have been in my deck of cards for sure. Buy the rumor, buy the news. I'm rich with my new strat. You know what? If you would have told me that 6 months ago, I would have 100% be down. But this is probably still hackable. You know, we probably have more all-time highs under our belt. And you know what's so funny? The data and statistics had told us that whenever we put in an all-time high, we're more likely to put in another all-time high whenever we do that. And this is just further confirming that. So whatever that data was, I think it might have gone up like another percentage in favor of that actually happening because this run we've been on, boy.
There's so many good things in chat here. I'm overwhelmed. I don't even know where to start. To Errol's point, yes, it's almost time that I'm really heavily considering legging into some long VIX. But it's just, I don't know. I would want calls because if VIX starts to move to the upside, obviously the calls are going to expand, which is the situation that I want to position myself for. But the expected moves are just so high that I would really have to outlay some serious capital for something I'm not very certain is going to come to fruition. So I'm laying off of VIX for the time being. In response to the chat, is the bull market in metals over? How can silver go to 120 and just die? Well, because it never should have been at 120 in the first place.
That's a great response.
Yeah, is the easy answer there. Yeah, I think, because when you step back and look at the market in metals and silver especially, like this still has been an incredible run for metals, which are supposed to be a very stable hedge against inflation. We're talking about, pre-run we were in like the mid 40s, and now we're at 69. Nice. So there's we're talking like 50% upside there at these levels that we're currently holding. It just doesn't feel that way because of how aggressively we ran up to begin with. So yeah, just a tricky situation. But yes, I do think the insane bull run up to 120 is over by this point. By the rumor, by the news. Okay, I don't know if I'm being gaslit here. Obviously, we just saw a bunch of pictures of Paul Allen with Bill Gates. Paul Allen was a character played by Jared Leto in the movie American Psycho. Important scene comparing business cards, like comparing CEO jackets. I see. Okay. Well, is that also true? Are we talking about, are there two Paul Allens? This is too common of a name. You guys are frying my brain right now. I don't know what's happening. I don't know who Paul Allen is, guys. I'm losing my mind.
I don't even know who I am anymore.
I've never seen American Psycho. I've seen lots of clips of it. I might be familiar. But I don't. I feel like I'm being gaslit. Speaking of red hair, do you know what? Oh, there we go. Okay, there are two. There are two. Okay. Thank you, production. This clears up a lot. Yes, I know that guy. I've seen this guy.
Everybody in chat's like, you don't know who Paul Allen is? Everybody's talking about 3 different Paul Allens. That's hilarious.
Do you know what RCH stands for? I don't. I'm scared. I've sat here trying to pick that apart. I was thinking perhaps the C means curtains. But then there's not the corollary to that, so I'm not too sure. No, perhaps shoot me a DM on Twitter if it's not appropriate to share in chat. I'll look it up in Urban Dictionary after this. Don't worry, it's in my mind now. Who's Jared Leto? Interesting to know, G&E, what your investment portfolio consists of and the strategies you use. Oh, generally speaking, not the tasty portfolio. Yeah, I can answer that really pretty quickly. We do have to wrap here shortly, but yeah, I try to stay. I say. In my long-term investment portfolio, I go 70% ETFs, 20% speculative growers, 10% dividends. That's my allocation. So pretty much have an equal split among that 70% between SPY, QQQ, IWM. Those are just the 3 vehicles I choose. There's lots of different vehicles you could choose. I also will sprinkle in some, if I'm buying dips, like when I was buying in the middle of the Iran stuff, I will lean into some leverage SPY and some leverage QQQ just to take further advantage of the upside if I feel like we're in a downtrend. I did the same thing surrounding Liberation Day. Speculative growers is like what I have the most fun with. Those are things that I play around with and really take some shots. And then dividends are keeping it simple, just building a little bit of income. Coca-Cola's, AT&T's, what else? Ticker O, I forget what that is. Realty Income or whatever. JPEQ, things like that in the dividend part.
Yeah, on mine for the long-term investing, if you're talking about mostly just index funds. I have a little bit more of a slightly different approach, but a lot of the times it's index funds and adding to those index funds for the long term. Yeah.
You guys need to teach the old heads how to filter through chat like Gen Z. This is all we know. Every stream I've watched in my entire life, they're filtering through the chat. It's I'm hardwired this way. But you're right. We could bring it to some people's attention. Yo, QCOM up 5%. Oh, interesting. I wasn't even aware. That slipped me. So many movers. What can you even do? Qualcomm. What is this run out of Qualcomm? I don't even know if I was really privy to any of this. I remember the first gap up, but this is insanity. We've just ran straight from 130 to 194 in like a week. Holy cow. Anyway, all right. we're at our time for the day. Anything else top of mind from you?
No, that'll be nothing top of mind for me. I think that'll be it.
All right. Well, that'll do it for us today. Thanks so much, everybody, for hanging out with us for the full hour. We really appreciate you taking the time out of your day. We never take it for granted. Appreciate the fun chatter today. This was a fun one. Lots of laughs. Aaron, I'll be right back here, same time, same place tomorrow, 12 o'clock noon at Central Standard Time. Be sure to come hang out with us. Be sure to stay tuned for Futures Power Hour coming up next. See you guys next time.
Peace.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
We're back. It's still Wednesday, May 6th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host today, Ilya Spivak. Ilya, thanks for coming on. Giving Thomas a little break. He was on OTC earlier to cover for Jamal. But it's a good day to have you on because we're getting ready for the second half of the week where the macro calendar comes a little bit more into focus after a first half that's really just been all earnings and Iran war headlines. We had another interesting coincidental oil trade this morning, 920 million notional that hit the tape 70 minutes before the Axios report. Trader banked a quick $125 million worth of profit potentially. There's going to be a signal versus noise special edition today out on that. Check our YouTube page for more. But Ilya, who cares if someone knew or didn't know ahead of time about oil coming in this morning? It's pretty clear by how the market's trading and how it's reacted to news this week, including the missiles that were lobbed at one another on Monday, that we're in the end game now, at least as it comes to the war. We're trying to get to the end game now, maybe would be a better way of putting it, because Iran has been saying that the news that the U.S. has been putting out all day is nonsense. The market, of course, wants to believe that the war is coming to an end.
Sure.
One of the ways in which we can interpret how the market's viewing this, of course, is through the lens of the Fed futures curve. And right now, the market has a little bit of a difference from where it's at yesterday. Yesterday, Ilya, the market was telling us that we would have no cuts or hikes for the next several months. We would get to March next year, we would get a hike. Level would stay 3.754 for about 3 months. And then you get to September 27, where you get your cut. And then by December next year, you finally get the rate down to 3.2535, which is where the market thought it would be by this June before the war had started. Today, though, shift across the curve. No hike needed, apparently. No hike priced in. It was above 60% yesterday. As we make our way through March, today it's at 23%. I guess that's a bit of good news here. But also, why did we get rid of our cut? That's perhaps the more fascinating story.
I mean, as you look at all of this today, looking at oil, looking at the dollar, looking at gold, you get, again, this kind of pulse into the war narrative. Stocks are off on their own. Volumes are even lower again today, lest you think that whatever's going on in the front contract maybe is giving way to building of volumes in further out contracts. It isn't. Volume is falling there as well. And so as you look at the kind of overall picture, it's the war trade everywhere outside of stocks. And there you got this announcement. We talked about it. I think we all but foretold what Marco Rubio told us, which is, of course, that Operation Epic Fury is over. That is to say, we do not need a 60-day extension deadline. We do not need to go ask Congress for a war powers resolution because the war is over, everybody. Now it's a maritime enforcement and freedom of navigation action. And even that is on pause now because apparently we're just this close to some sort of one-page memorandum, whatever it was that Axios thought they dug up, which may be real and maybe isn't. We've had lots and lots of twists and turns in this thing.
How many times has Axios released a news report recently telling us that the war is about to end?
Any day now, everybody.
10.
Any day now.
12, 14.
Right? Right? It's like the National Enquirer of the war over there. But as we look at the bigger question, right? Does it matter? The bottom line from this war from day one was what? Higher oil equals inflation, equals higher interest rates, equals everything that follows from it. Stronger dollar, weaker gold, all of it. That has been the market's read from the first day of this war. The markets never dragged down growth expectations or anything like this. They said, oh, inflation, look. That is still the story here. Yes, we lost yesterday's feverish rate hike. And yet, where are we? We are likelier to see a rate hike than cut from now until, what, October of next year?
Just about till through July next year, even though nothing's expected.
Right.
But the fact that we're clipping off the cut here, right? I mean, I think that's one of the interesting, it's not just that we've gotten rid of the hike, it's that also the cut that was due in December is no longer forthcoming. So the Fed is going to be in a wait and see mode for the foreseeable future. Higher for longer, is it? Maybe. You know, the fact that the hike is gone, probably good news for today's stock market, just at the margin, given everything else that's happening right now. We have a lot to talk about with the dollar. There was another yen intervention today, it looks like, this morning, given the reporting that's coming out of Japan. The dollar, despite the Fed cuts that are priced out and the booming U.S. capex and the energy shock, the dollar is still down year to date. Probably doesn't.
Take a look at the Wix today, though, and you might get vertigo. Because if you look at what the euro looks like today, Aussie, pound, that intervention can't even last a few hours. I mean, the yen, of course, looks the most dramatic, but the dollar comes roaring back and basically erases all of the key breakouts that were attempted against it.
Before we get to the dollar, we're going to take a look at equities, which are still bulls on parade here, Ilya.
Yes.
Volumes are back
Oh, yes.
a little bit more today for what it's worth. Yesterday at this time, we were looking around 700,000 contracts traded or so, which is a very light session. We usually look for around 1 to 1.1 million for an average day here by the time Futures Power Hour begins, and that's where we find ourselves. So a fairly steady day, but it is a higher volume day than what we've seen recently as now the market's pushing into new highs. Maybe that helps soothe some of your concerns you've had about this breakout, but it's all about the chips.
I don't know about that.
But it's all about it's all about the chip stock still and the momentum that we see in the tech sector. Semis are up another 4.3% today with that huge gap open higher. Everything related to the data centers, the telecom seems to be doing well. DTCR is the data center ETF that we've been tracking and talking about. That's up another 2.5% in today's session, Ilya. Who knows where these things start and stop, but what I can say is that since March 31st, we have not closed below our 1 week moving average. It has been a momentum market, and using that as a guidepost for avoiding getting short, at least from my perspective, has been a fruitful endeavor, if not outright staying long.
Well, I mean, I think we can see very clearly here. All of the things that you've just described have been a narrative that's been with us basically since the beginning of the year. If you consider the equal weighted NASDAQ is actually down for the year. The Mag 7s are only up net since the start, about 3.6%. The index.
Most of that's coming today.
The index at the headline, that's right. The index at the headline is 12%, 13. SMH is 51. So this is a one-story, heavy concentration kind of a thing. And so I think the question you have to ask yourself, and by the way, yes, it looks like we're going to have a little bit higher volumes today than yesterday's lowest since Christmas or some such thing. But
that matters.
The trend has been unmistakable. The trend is down. And in that volume trend, really from the beginning of April, you see, as we've said before, as we've shown before, two regimes. Up until the 17th and then after. And that, of course, is the beginning of earnings reporting season for the names that we care about. So when you
done pretty well.
Sure, indeed. Sure, indeed. And yet, a one-story market. All about the $750 billion, it seems like, in CapEx that the big hyperscalers have announced and what all of that is going to do. Sure, the first quarter GDP numbers confirm. We have a non-residential investment component, which is only 14% of GDP, adding more to growth than consumption, which is 68% of GDP. And it's because it's growing at 10 times the rate, almost.
Did you see what Google CEO said yesterday about their earnings? That they could have made more money, but they just don't have enough compute build out yet. So they can't they can't capture the demand.
Well, exactly. And so what we have now in these reports, I'm sure are widely circulated at this point, is about 40% of current active construction of data centers is getting punted to next year and as far as 2028 because of bottlenecks, because of cost overruns, because of local opposition to their construction. And so you have to, I think, ask yourself, okay, it's a one-way ticket sort of a trade. Volumes are not there. is this building going to happen like it is being extrapolated in an almost straight line? Or are these earnings going to be disseminated over 3 years longer than is currently being priced in? Best case.
We're probably going to need more compute by the time those data centers that were scheduled to be built this year are finished in 2028.
Well, in this creates a bottleneck.
It's a perpetual money machine, Elia. Right?
Well, so I heard a really fantastic argument yesterday. I was talking with our good friend, Mr. Dimitri Zabelin over at PitchBook. And he pointed out, he said, well, look, if there's bottlenecks, that just means people can live the dream longer. People would much rather live the dream than confront reality. And
of course.
And it rang so true for the current market conditions.
Yeah. You know, Ilya, if I were to have quizzed you ahead of this, maybe I should have done so for the sake of content. Given what the market's done recently, do you think that the Mag 7 PE ratio has gone up or down over the past 2 weeks? It's gone down.
Yeah.
Even as the stock is, it's now 26.1. We were up at 27 a few days ago.
Yeah.
So that's just to give context for how good the earnings have been. Even though the NASDAQ is up 5% over the past few days, the PE ratios are coming in because the earnings are so strong, despite the price moving upwards. So, Ilya, what does a world look like if we get back to a 32 PE in the Mag 7? That's a question I keep asking myself, because a 32p in the Mag 7 at current levels would be like $86 on the share price for the ETF right now. And if you're at 86 on the Mag 7, does that mean 30K NASDAQ in the near future? Probably. I was able to cash out at some of those 7,300 calls with this move today. I'm still nursing some that are, thank goodness those rang true, because it's helped offsetting the losses in the short iron condor positions that have not been rolled off. But what else is working, Ilya, and this has been one of the reasons why I wanted to take a step back a few weeks ago during the war, knowing what was happening with earnings and not wanting to be jaded by the day-to-day headlines, I put on the 8,000, 8,200 call spread here. And that was 500 points ago or so. So we're almost halfway to the target with still 239 days to expiration here. I could take this off today and sell it for a decent, it's like $16 debit, or rather credit, I should say. That would be nice, but there's still a lot of time here. And given the way the market's behaving right now, I see no good reason to give up long exposure. If it's short dated, long dated, if you're trading it short dated, wait for a break of the 1 week moving average. That has been the only thing I've been saying for the past 2 weeks. It has kept me in the game, not on the wrong side. Once that breaks, we can talk about a correction. But until then, Howard Marks, better to be an optimist and wrong than a pessimist and right. Dr. Strangelove, got to stop worrying and learn to love the bomb. And it feels just so good to be an idiot again, Ilya, and just be.
No, if you caught a seat on this thing, to get out of it now would be a bit silly. I mean, clearly. And where I am not going to go is sell any more of it. My exposure to this on the short side was contingent on holding levels we've long since surpassed, which is why those positions were risk defined, have been at their very modest max loss. It'll be, if they expire, worthless in another month or so. It'll be about a 2% hit to equity overall, which would make my shorting of the stock market so far this year a profitable endeavor. And the reason is because it's all been very risk defined and insistent on 2-to-1 risk reward locked in or better. And so I am not going to stand in front of this thing. What exposure I have is going to expire worthless in the worst case and is going to be a lotto ticket if this momentum cracks. Okay, that's fine. I'm also, of course, participating on the long side of risks because I'm still long Bitcoin and adding. So I'm not standing aside in a risk-off posture altogether. I do see the things happening in every other market but the stock market as having diverged significantly. And those trades, again, BOJ notwithstanding, are working, although Japanese authorities keep fighting them. And the question for equities about volume and participation, and whether you can really look at this thing and say what this is genuine optimism about the AI future to come. I mean, I think you have to look in the mirror and go, well, then why isn't anyone buying it? Why aren't volumes growing? Why aren't volumes growing?
Low.
Why haven't they
Everyone's
grown for
in.
weeks?
People panic sell.
Well, and there we go. And
they don't need to panic buy. Well, you know what? 73.68. I'm just watching this market here. I'm going to take a little stab. I'm already watching this fade away for the risk reward I want. Maybe I can get filled. 73.75, 73.90, 0 DTE today. The market looks like it's strong. I would like to get filled. Thank you for getting filled. Looking for a swing to the upside by the time we get to overtime. I don't think that's too much to ask. I'm not really a scalper, but this thing looks like it's good and it's continuing to run today. Plus, we're getting some headlines out about Iran.
Probably get that.
What's 6 points between friends? I'll take more than that. But continuing just to lean long in this market, Ilya, at least short term right now. I understand. Like, if I want to call a top here, you're catching a falling knife. If this chart was
you would be crazy. You would be crazy
over
to want to initiate something against this momentum because you think something along the lines of, oh, well, surely it can't keep going higher. Yes, it can. Of course it can. Of course it can. This is a low volume melt up. It can do preposterously stupid things the lower the volume goes.
Maybe we're getting into that summer trade. Ilya, it's been such a long year already. We've had the tariffs. We've had the Iran war. We've had the stuff with Powell. Getting into the middle of May here, Trump is going to Beijing. We're going to China, I should say, in a few weeks.
This should be a very, very big story.
He does not want this war going on while he's there because then he's going with...
Oh, no, it's already over, though. It's just a maritime action now.
Yeah, even so. The negotiations with Iran have to be in full swing. He doesn't want to have to go there and ask China to do a favor to help move Iran, right?
I don't think he wants to ask the favor. And one of the more interesting takes I've heard over recent days is you have to go there with the knowledge that you've just spent all of this military kit and you need to restock, and a rare earths, magnets kind of a kerfuffle is not what you're after now. No. You might be going there to play real nice and cuddly.
Yes. So I would think that we're probably going to get some of these headlines. May 15th is that meeting. We have 9 days to get something stitched up here on the path towards a nuclear deal. For the sake of making it easy, what we've seen so far is the JCPOA, a watered down version of Obama's deal. But that's what the administration's now going for, reopening the Strait of Hormuz and reinstituting effectively the JCPOA, both of which were in place before Trump did some things, which is not the point. The point is that that's what we're angling for right now. So, maybe we're in a buy the rumor, sell the news type of the cycle here where we're ending the war is good. The war is staying on. Well, it means we're getting a ending the war headline tomorrow. So that's probably good for stocks. Just keep an eye on the momentum as far as I'm concerned, Elliot. It's the simplest filter right now to make sure that you're either on the right side of the trade or avoiding the wrong side of the trade. Again, every session since March 31st, this light blue line here, your 5 EMA, we have closed above it, held above it on a closing basis, and it continues to be a fairly decent guidepost. The Russell 2 is participating, though, which, not for nothing. It's off the highs. Some of these stocks are off the highs. S&P, NASDAQ are holding on to their gains thanks to the tech considerations. The Russell looks interestingly more like the other markets today, where they had their the war is over burst and then got long wicks. Oil off the lows, dollar off of its lows. You see the Russell here a little bit more sensitive to these type of things, but nevertheless, it's a little bit more macro-ish in its response here today. It does, but volatility is sticking to the downside here. Although 17 seems to be a floor right now, given everything that we know that's in front of us. We've had a few days in the past few weeks where we've tried to make a run below 17. We had it on the 17th, 1687. We had it here at the end of last week. Not that we're doing technical analysis on volatility, of course. Never would do such a thing. 17 seems like the market's content here with the pricing in terms of the geopolitical risk. Until this thing is really over, we've arrived at a floor. It doesn't mean I want to get long vol, but expecting the VIX to collapse into 14 or so again, I think, that happens during the holidays.
And under the circumstances, difficult to envision how that happens. I had a conversation, a great conversation with Peter Bookvar yesterday, and you guys can see the video on Tasty Live YouTube. He mentioned something interesting, which was that sentiment-wise, and of course I'm going to paraphrase here, nobody wants to miss the war is over trade. And so you get these kinds of jolts where basically, and because nobody has any confidence in what to chase, they're chasing this. And this is me editorializing now. They're chasing the trade that makes fundamental sense, because the SMH trade makes fundamental sense. I mean, the Q1 GDP numbers are telling us that story. It's in the data. It's not like you can say, well, this is pie in the sky expectations.
Micron has a forward PE of 6 right now, even after it's run. Right? I mean, that's just incredible. That's incredible.
It's incredible. And the question,
it's trading like a utility. It's trading like Con Ed or NYSEG stock. It's trading like a utility valuation. Ilya, financial brokerages are not seen as growth engines. Most of them have PE ratios between like 8 and 10.
This is what I mean when I say in low volume, the stock market can do all kinds of things.
Did you see their income numbers recently? They had net income of like $4.1 billion on $4.5 billion of revenue. They're keeping 80 cents of every dollar they're making right now.
Well, if 10.4% is the growth rate for non-residential investment in the first quarter GDP numbers, 10.4 against consumption's 1.6 annualized, of course. How quickly is this thing growing? Now, one very interesting aspect of this equation is that it feels like it's all data centers, but maybe it isn't. Because we just saw in the PMI numbers out of ISM and out of S&P Global, all of basically the surge in manufacturing activity over the past several months is really all about stockpiling. It's front running what this ended up becoming. And so, because of course, we see crude oil started to creep higher already in January. So how much of this is sustainable, we'll see. But obviously, I think the fundamental narrative is very much there. It isn't a question of whether that narrative is right or wrong. It is a question of why are the equal weighted indexes down? Why is there no volume? Is this really the tide that lifts all boats, when in reality, it seems to be a wave lifting a boat, one? And that's the part of the supply chain for the great and wonderful AI future that is the most sensitive to input costs. These are the builders of it. And where do we have the biggest problem in the current environment? Just look at oil, look at gold, look at the dollar, look at the bonds. The problem is in this exact thing. It's bottlenecks of inputs and the rate hikes they demand.
You recall when DeepSeek Monday happened last year, we had a conversation about bottlenecks.
Their latest model came with a whimper. Nobody cared this time.
The headline risk there last year was, there's a new chatbot that could take out the leading. People don't care about those headlines now. It's like, there's none of these chatbots actually matter unless there's the compute underlying it. But Ilya, I want to make a case here that, I like to look at sector performance and look at how those pieces line up to get a sense of how the market is thinking about allocating capital longer term. I'm looking at IYT here, which is the transport ETF. This is a 2-day chart just so I could get it to fit on the screen in the right way, but it's still Same thing if I did the weekly, just going to be a little bit more compressed. Either way, left shoulder, head, right shoulder. You have your breakout here that gathers pace. We're kind of basing above the trend lines, the former highs, right? We're coming back in. We're finding support. We're consolidating now. It looks like a flag is forming up here. So transports, that's something that you usually want to have in the equation if you're thinking about legitimate economic growth playing out. I think about XLI, the industrials. They've seemingly made a pivot through this 175-ish area or so that has been instrumental, and they've reclaimed that uptrend from April, November's lows, and they use that 1 month and 50-day average over the past several weeks as support before we ultimately broke out after consolidation. We could look at the chip names, of course, but I think between industrials and transportation, you got an interesting enough story about the economy. Then you really need to see the reemergence of banks. And this would probably be the final leg for me, thinking how far can this market run? There's a reason why I'm long the 8,000 call still. I think the market's going there, to be clear. But I'm looking at the pieces right now, and I'm thinking that we're definitely going to 8K at some point this year. Just because of the rotation is just so growth positive. We went from 0.5% growth in the fourth quarter, 2% in the first quarter. Atlanta Fed GDP with their most recent update is tracking at 3.7% for the second quarter here right now. I know that the labor market may not be having a lot of turnover, and the data center build out doesn't exactly invite a ton of permanent jobs. I mean, like to wit, in my congressional district, it's a big deal right now that a grant was given out for $77 million for a data center and has produced just one permanent job. $77 million of taxpayer money for one permanent job. I'm very optimistic right now. I wish I was more optimistic earlier on. I wish I was paying more attention to the earnings story earlier on. But the dynamics of the capital allocation to me still scream so bullish. Telecom, discretionary industrials, transports, and we just need the banks to join the party. We're golden.
Every single chart that you just pulled up is at resistance. Every single one of them. Now, does that mean that we're not going to break that resistance? No. But every single one, IYT.
This is consolidating a bull flag. XLI has just started to break out
at resistance
today into the next leg up. We got to go make some more progress, but broke out of this one.
Right. So every single one of them is at a point, and the banks, frankly, might be the most interesting because they actually seem to be consolidating into some kind of a triangle pattern that does, in fact, look pretty bullish. But every single one of them, including this one, against the lows in February, is at resistance. I think, again, the biggest question you have to have here isn't, does the story make sense? Because it does. As we've just said, you can see it in the GDP numbers. But of course, the flip side of those GDP numbers is that consumption is so weak that it is only growing at 1.6% annualized, slower than GDP itself. And it is the biggest component by far at 68%. We're not going to get a whole lot of first quarters like this if these bottlenecks in the AI build out are what they are. This rabid demand is why, alongside a war and tariffs, is why we have all the, again, 40%, almost half of all the data center build out pushed out by 1, 2, maybe even 3 years. So that delay means those additions to GDP don't happen. Meanwhile, consumption is trending down. And we haven't even seen the impact of the oil shock in CPI yet. That's next week. So as we look at what's shaping up here, how many more first quarters are we going to see like this, where the boom, because again, remember, this is very backwards looking data. How long is that going to be able to cover for a consumer that's flailing and that isn't even paying the costs of the war yet?
Yeah, the cost of the war is still, listen, it's all going to come. It's all going to happen.
It's all coming, and it's all coming with higher interest rates.
Are stocks priced in nominal or real terms? I'm such a pain in the ass.
I mean, clearly, we see that stocks like the story. The question is, again, who are quote unquote stocks? Because that number of people pushing around this market has been diminishing for a month. And so
that's not unreasonable to say.
And so the question is, well, if you have thin liquidity, basically no sellers, only buyers, what do you have? You have a market that can jump Olympic level heights. Of course, there's nobody on the other side of the market. There's no volume in it either. There is no offer, essentially.
You know, if there's one place that I'm feeling as a positive read-through from today's war reaction, it probably has to be the bond market, which, again, this is now day 19 in a row where the directional move for bonds by the end of the session is going to be in line with the directional move for oil at the end of the section. So the days where oil's been down, yields have been down, bond prices up. But the days that oil's been up, yields have been up, bond prices down. So yesterday you had that 4% collapse in oil and bond prices didn't exactly jump. Today it feels a little bit more real where, okay, can we talk double bottom down here now? You really have to have faith that oil's not going to be making that much more of a move to the upside, but we did clear out some of the recent swing levels we had here. We cleared out this almost bearish engulfing bar from 2 sessions ago on Monday. We're back to the 1 month.
We're right in that sort of axis where we seem to constantly get stuck with bonds recently. Yes. And we just had the false breakout through it in April. And we gave up the ghost, and now we seem to be grinding back against the underside of that range. And so you're starting to get a little bit better bearings around where the levels of significance here actually are. But I would not be betting that this is a rally that's got legs here, because this could just as well be one of these, we're back to our grind zone here. We're going to grind here for a while. But where have we consistently resolved every time? Lower.
Sure. And so a mistake on my part, I mean, I was 2 days ago, yesterday, do we want to sell puts down here? Of course not. Why? It's just an inside day. You're calling in the low, calling the top in oil. It would have worked. Mistake not taking the trade. The other side of this, though, Ilya, is like for something like ZN.
Yeah.
This doesn't look like it's out of the woods yet at all.
No.
And it probably
even closer kind of former support turn resistance kind of thing with recent levels.
And if you're getting back to I'm very much on the same page as you, right? If now the war's over, but you still have this inflation risk in the system and the Fed is stuck and they can't cut, they can't hike.
Yeah.
You're not going to get recession, but you still have this strong growth. Like economy's growing at 3.7%, unemployment rates below 4.5%, and inflation's north of 3%. What world is the Fed cutting there? You can't. They're not going to cut. But also, you're not going to get recession. So bonds go nowhere fast again. And you say that we're getting back into the chop zone. 113.5 for ZB is basically the chop zone.
Yeah, I mean, we're there. In ZB, we're basically there.
Maybe you get up to 115 or so. There's kind of, these steps, 115 down to 113.5, 113.5 down to 112. About a 1.5 ranges that we've seen it trade in since mid-March.
Yeah.
I suppose you could scalp it up to 115, but at a 10.5 IVR, selling puts down here to call the low is not the way to do this. If you're going to do this, it's really looking for volatility expansion or price movement to the upside. Just as a case in point here, if let's say we wanted to sell the put spread underneath the recent lows, that's worse than a 6-to-1 risk to reward. It would maybe be prudent to do something like a long in the money call spread, right? Against the lows. You could go 110, 115 here. Again, this becomes a big position. You could go 112, 115, risking 1 for 1, or you can just go out of the money. Coin toss, right? But you go a little bit out of the money, look for a move back towards the top side of the range. You're not looking for this to run through 115 per se, but a little bit of an expansion. And even then, 3-to-1 at a 40%.
Not bad.
Not bad, not great, but bonds probably aren't.
But a lot of capital to tie up on what is essentially
single trade.
Yeah, on what is essentially tinkering around the edges of a range. I like having put verticals here for the long end, just for the idea that inflation is going to be stickier and the issue is going to be longer lasting. And I have tons of duration in it, and I'm just sitting. Because really what we're learning here, and I mean, you can see it if you look at the way, for example, the out months in oil have performed. The backwardation in oil has contracted significantly. And it's been contracting for a couple of weeks now. To tell you that as this thing starts to calcify, the inflation is starting to get put later down the futures curve.
Yes.
Prices are going to be higher. This thing is going to be sticky. We already have, as former Chair Powell told us, my God, that feels terrible to say, in the last press conference, he outlined, like, look, everybody wants to talk about the Middle East. We had an inflation problem before this war because we thought the tariffs were going to rebase out, and they were not doing it. Core inflation was going up. So hang on a minute now with this Middle Eastern war. We'll get there.
Speaking of which, Trump just has comments hitting the wire right now. Trump optimistic about the framework with Iran, according to Fox News. Fox News asked him, how long will it take? And he says about a week. Always a week. Ilya, if there is one thing to do, I would point out that
I have to wait to buy crude oil for another week. I guess it's a good thing I couldn't find a fill yesterday.
We are basically halfway in the trading range that we've been in over the past 60 days, not quite, almost 2 months. But this is 115, it's 112. If we wanted to trade anything here, you could go for the directionally neutral. This thing isn't going to make a move outside of its recent highs or lows over the past 7 weeks or so. 111, 112, 116, 117, just basically on the other side of where the market's traded. If you really want to go just through there, you can line up a 2-to-1. Better than that risk to reward type of trade. It's going to be less than 50% probability of profit because it is a pretty tight trading range. You're talking about 5 points wide between the short strikes. That's all I could really justify right now. I have such a hard time developing a belief around bonds staging a meaningful rally here unless there's recession, and the data just do not point to recession right now in the short term.
They don't. They don't.
We find ourselves taking a look at oil again, as we typically do on the show here after bonds, although maybe it should be moving up the pecking order. There's a lot to unpack here, including last night we had that move lower in oil. The moves really start happening this morning. Now, what happened this morning?
Just take a look at a daily chart for a second just to visualize what kind of a neck spinner this was today.
Drop to the 50-day again, just like April 17th. Find support at the 50-day again, just like April 17th. Market's not, there's a floor here. Forget the headlines for a second. There's a floor here for the various supply reasons, but I want to look at that.
Maybe Axios Capital just really likes the 50-day SMA.
It's possible. Do you notice that there's this candle here right around 3:40 a.m. this morning when the selling starts?
Yeah. You can see it very, very clearly.
Funny thing happens on the way to the forum this morning. About 10,000 futures contracts short hit the tape. $920 million of notional value. 70 minutes later, Axios releases a news report saying that the U.S. and Iran are coming to a memorandum of understanding about ending the war.
A one-pager, apparently.
Iran releases a rebuttal around 7 o'clock this morning, and oil then has a bounce from underneath 90 back to 96. It's currently trading 94.68. I have received so many tweets today. Is this another inside trade in oil? I don't know if it's an inside trade in oil.
Who knows?
I do understand that there is a pattern of behavior here, though. Coincidence again that right before a major headline, someone's laying out significantly short oil trade that's highly levered. What are the odds? I understand that completely. But that's not something that I think any of us could have acted on given the timing of this. I was asleep still. You were asleep still, Ilya. I think actually you were
very
still
much so.
awake. But when we're looking at the markets falling this morning,
Even I have to sleep sometimes.
it's true. The market does get the bounce back when Iran denies.
Yes.
I don't think people should be concerned with whether or not people are acting on insider information or whether or not that's true. That insider trading has been happening in a variety of ways for a number of years. It's gross, it's corrupt, it doesn't speak to, the health of a system long term, but that's not our problem here as traders. Our job here as traders is to figure out how to operate within the system, fair, unfair, seemingly tilted or not. I don't think it is. I think this is a coincidence to a large extent, but there's too many coincidences to ignore at this point in time. Big picture right now, Ilya. Monday was the tell. Iran is launching missiles at UAE, at ships transiting the strait. South Korean vessels hit. And Trump says it's no big deal. No appetite to go back to war at all.
But we saw the strategy unfurl over the weekend. We've discussed it here a few times. The president said over the weekend that the action was terminated. But of course, what he meant was, I am not going to go and seek war powers resolution now that I have to. I just have to call this thing not a war. And because we couldn't have said from the get-go that the Strait of Hormuz was an objective, because it was open at the time we went to war, then the things that were the objectives could not have been it. So congratulations, we've achieved our objectives, which were to degrade Iran's missile launch capability and the nuclear effort. Those were the only consistent things that appeared in the early pronouncements. And lo and behold, those things are easy to declare after all this bombing. Whether, by the way, it sets Iran back 10 years or 5 or 2, who knows?
Not at all.
But we can certainly say that there is some amount of setting back as a consequence of this bombing that has occurred. And so the president gets to come out, and again, it happens over the weekend before any of this, and says, right, our objectives were met. And then Marco Rubio does it to make it official. And so now this is a naval exercise, essentially. This is a maritime enforcement action of freedom of navigation. Okay, that makes it indefinite. That's not a good thing, it's a bad thing. That's not cheaper oil, it's more expensive oil.
With you. Oil can stay up here, but also oil today is doing that same thing that it did yesterday.
Yes.
Which is on down days, the Z6 contract is down less than the M6 contract. This entire week, if you were long the Z6 and short the M6, you've made money Monday, Tuesday, Wednesday so far.
Exactly right. Exactly right. So the market knows this, but again, perhaps to Peter Bookvar's point, nobody wants to miss the war is over trade. And so the trigger finger is itchy. And also, again, volumes are low. Everybody's looking at a familiar bogey. And not surprisingly, things are jittery. But to your point, it would be silly to lose sight of the big picture in all of this noise. And the big picture is simple. There is a very big wall for growth to overcome, a wall of expensive inputs, broken supply chains, and higher interest rates. And what the market is having to decide is whether the internationalized, globalized AI supply chain can grow fast enough to overcome all these things. That's really all it boils down to.
Oil staying up to me seems like it's an obvious bet longer term. Getting back to pre-war levels anytime soon, unlikely. So selling puts better than buying calls, although up until today, buying calls have been working over the past few weeks. That envelope between the 1 month and the 50-day here for several weeks now has been a catch point where oil just does not want to fall through it. I'm thinking about what $70 oil looks like in CLZ6. on these pullbacks, I cannot wait. We were talking about this earlier this week.
I mean, I've been trying to get filled.
Sell puts.
I've been trying to get filled.
I couldn't get filled this morning.
Market doesn't want to give it to me.
I couldn't get filled this morning either, for what it's worth. And not sure why you're doing that right now, computer. Because dips below 90 to me, we get a chance to sell $70 puts here. Absolutely, that's the cut of my jib. The good news is,
I like that way of expressing it better, because what you want is not a bet that there's going to be explosive wartime fireworks. You want to bet that crude oil is going to calm down at higher levels, because this thing is now soaked into the fabric of the pricing structure.
Today, I took off 2 short call spreads in crude, the 111, 113, which earlier this week it was at a loss. It was able to flip into a profit with today's move, so that was good. Same thing for the 148, 150. I wish I had sold more of you. I can't believe the market gave us 3 to 1s on 148, 150 call spreads at a point, but you got to take it when you can get it. I am waiting to redeploy capital on the downside now here. I do have the short iron condor on that we were talking about yesterday, Ilya, when the market was rallying.
Yes.
That I executed on overtime, because what are the odds that we break 119.48 given the news environment and Trump basically saying, like, a few missiles between friends, who cares?
Come on now. Who hasn't broken a ceasefire every now and again?
Small tells when you sit around the market long enough. That has been one of the tells in the war. I'm still short the 74, 76, 75, 77 put spreads down here, but I cannot wait to add more. I will be looking to add more across expirations as the curve comes in. Maybe we get a little bit more weakness here on another headline that's proving the progress that Trump is touting, because obviously the market's up $6 from the low with the Iranian denial.
Yeah.
But this is the next big thing for me. It's not adding incrementally on equity longs. It's give us a print below 90 on oil and start looking into the mid to low 70s to start selling those puts. I can't wait to do it. I'm very excited, as you can tell.
I mean, I am very much with you there. I would love for the market, and maybe it shot its shot today. I mean, that's a crazy wick. Maybe we stabilize even right here. I'm not prepared to say that I know that enough to, or feel that enough to put a trade on, but I'm watching very, very closely because.
Speaking of, that little scalp that we did earlier is coming together nicely here. Now up to new highs, 73.80 on the chart. I'm not ready to take this off yet. We'll probably take it off during the last call or overtime, but a quick $200, not bad. Not bad at all. And you think we're not scalpers here. Maybe that's how you know this market is reaching a peak. I'm changing my trading style to chase it.
If ever there was a tell, folks.
We can get off of oil real quick. And we'll go over to the metals here, which gold is
the source of my agita today. Whereas I'm very copacetic about what's going on in stocks because the P&L in my trades hasn't moved in weeks. The situation in gold is mightily annoying.
We may be turning a corner here again, right?
Yeah.
All right. I just want to point out in silver.
I just added some shorts.
With respect to silver here, there is a downtrend in place, okay, from the highs that we had at the beginning of March and again here in the middle of April 17th. So when we get the spike high after the war starts and then when we get the turning point when oil has that big collapse. I think those are two important points in the market, Ilya. We've seen that the reaction low in silver on March 3rd and a number of times in recent weeks when we go to that 4-hour time frame, this 78.5 area or so has been both support and resistance. Let's kick this chart out a little bit more so we can capture that. So support, resistance, support, resistance, resistance. Here we are today. Resistance at the downtrend from the war highs. This looks like we may be at a corner turn again. We've been very patient. I've been very patient in silver. I haven't placed a trade in weeks. In months since the end of January. I want to see a little bit more here, though. And if I can get a 79 print on silver, the next thing that I'll be doing is going up for an 85, 87 call spread. It's currently on the watch list. It is a big position in SI. This may be better suited for the average retail trader, even myself. in something like SLV and using the smaller product to fine tune my exposure to build up a decent convexivity in the trade, but not have to lay out $2,500 worth of buying power. But the market looks like it could be turning a corner here. You mentioned gold turning against you. We'll get to gold in a second. Copper,
not loving it, Bob.
The copper's the trade that we've had here on Futures Power Hour recently, following Mr. Westwater with the short put spread, looking for a break of 6.2 at some point. It appears that our decision to hold through and respect the fact that this is a market treating the 1 month 50-day area as a turning point recently, it did catch here in recent days. And so now this is back to 6.2. Ilya, I really like the idea right now. And although this is now at 20 DTE, so I rode it through the expiration window here to try to get a little bit more profit. I am going to take it off here now for close to $200. I'm going to go then look at the recent swing low that we had this week at 582. And that's where we're going to square up our next trade. At 50 days, we can hold 580, 575. We'll just go 5 points wide, risking 3 to make 1 at 73% probability of profit. It is the Yeoman short put spread trade. So rolling out in copper here, taking some profit, getting in the next leg. We may be looking at a breakout right now if we can get through 6.2.
Could be. Just need to get through these levels because like a lot of the charts that we've looked at here, they're on the line. And you kind of have to, in my view, see first with these kinds of things because who knows? And
I've got to get.
This is really my frustration with gold.
Copper, no matter what.
Sure. Well, and this is my frustration with gold. Is it's unclear what this is because it looks like a breakout of near-term momentum, but not necessarily a turn. And so when you look at this, you go, right, okay, that looks like it's a breakout higher. But then you look at this on a daily chart and you look at where the trend is and you look at where the underside of the range is where you previously tested and you go, well, it's just grinding in chop zone here. Is this a reversal? Maybe not. You're right in your right exactly thing. Exactly.
March, April highs, same exact downtrend, and that's what
it's same exact thing. And so were this a convincing breakout higher, I would like it better. I would take my L. I would flip the trade over, probably in the same size, and just look for the upside and ride it the other way around. Perfectly fine with me.
But we haven't crossed that Rubicon yet.
It's inconclusive, and I'm sitting on inconclusive losses that I have to wait for confirmation on. That's annoying.
Ilya, we need to wrap this up because we're coming to the end of the session here and we got to make room for Dr. J. I want to get your thoughts here. Maybe this is a hook for the chat to think about when you and I reconvene later today on overtime.
Yes.
It does look like the dollar, I say dismal. It's not bad. It's just been meandering. It was off. It's now back up a little bit.
It was much worse. It was dismal earlier.
4 things to consider. Fed rate cuts are priced at. AI CapEx is crushing expectations. There's a global energy shock and the relative U.S. growth outperformance compared to the rest of the developed world. And yet the dollar is still down 1.5% year to date. That's something for us to chew on later. However, this is not the calendar for Wednesday, May 6th. This is the calendar for Thursday, May 7th. That's why it says May 7th here. Note to self. Initial jobless claims tomorrow. We have non-firm payrolls coming up on Friday. Then we basically have a free calendar for weeks until you get to the NVIDIA earnings report. CPI, I suppose, will be along the way, but initial jobless claims tomorrow and lots of speakers from the Fed and the ECB talking about forthcoming plans. Ilya, maybe that moves markets, although everyone seems to be focused on what Trump is doing and this memorandum of understanding. So we'll tune in later. But for now, we're done here on Futures Power Hour. Dr. Jim Schultz is coming up next with From Theory to Practice. So go get some coffee, some water, a sandwich. Come back. You're watching Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Wednesday edition of what it is that we are trying to do. This is it, guys. This is it. The first time that we won the U.S.-Iran war, that didn't really do too much. That third time that we won the U.S.-Iran war, that didn't do too much either. But man, here on the 9th time that we have won the U.S.-Iran war, this is it. The market absolutely loves it. So welcome to the show. I'm glad that you are here. If you are watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the program. Man, you can celebrate if you are a bull. You can commiserate if you are a bear, but I can assure you that it will be a good time had by most. Now, a little bit of housekeeping. So number one, we have an extra long show today, tomorrow, and the next day because Tim Knight is out. So we get to go for the full hour today, tomorrow, and the next day. But then number two, I am actually feeling like the stomach bug may have finally gotten me. So I'm powering through today. I hope I can power through tomorrow and Friday. But if you don't see me, now you guys know why. And then number three, man, we've got to pour out a little something for this AMD earnings trip. But remember, guys, I got you. Don't you ever forget that my number one goal on this show, my number one, I mean, it might be in the top 10, is to find ways to make your earnings trades better. And the easiest way to do that is, of course, to be on the opposite side of all of my earnings trades, sight unseen. So, Josh, bring us into the market. Let's do it, man. We're going for a full hour. Man, it's going to be something. EMI S&P is up 92.75. Risk-free instrument, also known as a NASDAQ futures, extremely high risk. Product up 498. Man, you got the boomers up 629. Give me my 50,000 Dow hat. Give me the shirt. Give me the bumper sticker. Man, give me a keychain at this point. Can I get a keychain? Dow Jones, 50,000. Crazy stuff. Russell 2000 up 37. Up to 2,900. Russell 2000. Nah, man, that's 2,000 and late. It's the Russell 3000. As we are just about there. You got the bonds up 30 ticks. You got notes up 14. I've got oil down $7. getting smacked around pretty good, but it was actually under 90, I think, this morning. And so it's down 7, but it was down like 13, 14 just earlier today. You got UB40 obviously doing pretty well. And then the shifties, they are indeed celebrating. Gold up 130. You got silver up $4. So the shifties excited. The Hunt brothers excited. The cheese and pepperoni sales along with the silver performance. Man, they really got a good thing going over there in Hunt brother land. You got British pound is up. Got the euro is up. Got volatility. You know, this is so interesting. So volatility futures are down 60 cents. I mean, that makes sense. The volatility will be down on a day like today. But the VIX, so the VIX is only down 30 cents. This doesn't really feel like a down 30 cent type of VIX day, does it? I mean, EMI/S&P is up 100, NASDAQ up 400-500, Dow up 600-700. That feels like volatility down to $1. Like that feels like the VIX getting smashed to pieces and just absolutely, taken out behind the woodshed. That's not the case at all. I mean, it hasn't even been taken into the backyard at this point. Like it is still in the screened-in patio, only down 33 cents. And so the VIX is actually a little stronger than I would have expected on a daily today. But, we'll have to wait and see what that means in the marketplace. I don't think I can help you with what that means. I think we can just offer up a little bit of market commentary and kind of describe what is happening in the marketplace. That doesn't necessarily make you a better trader. It doesn't make me a better trader, but it does eat up 2 to 3 minutes of our lives that we will never, ever get back. So, all right, so let's look at, I know if you have a question for me, drop it in the chat. Today would be a great day to do that because we are extra long today. So I will spend more time in the chat today. We'll try to get to more questions. I see Josh has already Amazon Primed me a question right to my front door. Thank you there, Josh. He's usually pretty late on the Amazon priming of the question. So Josh is overachieving today. That's how you know you're in a strong market. Right? Like when the EMI/S&Ps are up 100 and the VIX is only down 30 cents and Josh Fabian is overachieving, you are in the strongest market on the board. Like everything is working out, and that is indeed the market that we are trading here today. So, all right, let's go ahead though. Let's take a look at what's going on in the portfolio. And I see you guys, man. Look at you guys. Look at RZX is here. Grumpy Mike is here. E-Media is here. Mr. Pillow is here. Weiss is here. RML is here. Man, you guys are pumping that algo. Man, Russell Ponce is here. Man, I'm surprised and delight somebody early. Russell Ponce, what's going on there, my friend? I don't recall you having been in the chat. And I think with the blueberry intake where it is, I think I'm right on that one. But Russell Ponce says, I picked a bad time to short the market. Yeah, you did. But hey, man, it's always obvious after the fact. Like it's always clear as day after the fact. And so you got to cut yourself a little bit of slack. Right? I mean, you're certainly not selling the low. Like you're certainly not selling the bottom. And so, I mean, when I look at this, and this is essentially going to be the KOD for the shorts out there. So, Russell, my express apologies on what is about to happen now. If I had to take a directional bias on this market, I would have to be short. How could you possibly be long? How could you possibly be long this market? I'm going to get in S&P 500 at 7,400. I'm going to get in the NASDAQ at 28,700, whatever. I'm going to get long the Dow at 50,000. I'm going to get long the Russell 3,000 at 3,000. Like, I don't think so, man. Like, get me some shorts. And so, Russell, you and me, we will be seated in the pain cave together. But thank you so much for being here, my friend. I'm glad that you're here. But man, I see the rest of you guys. Look at Rets Media is here. Man, Point B is here. BBB Fine is here. Sam L. Edward Lond, Ash Fan. Man, you guys are doing some work. Man, keep doing that work because we got a long way to go. 55 minutes, and then it will all be over. So, okay, let's start with AMD. I mean, guys, I don't know what more I can do for you. I really don't know what more I can do for you. We spent like 14 minutes on this last night. We spent like at least 11 and a half minutes on this, and I felt so good about this trade. And again, I'm not going to doctor things up. I'm not going to try to cheat the system. I'll let you guys know when we get into the George Costanza, I'm going to do the opposite of what I would naturally do. We are not at that point right now. I'm giving you guys my genuine, authentic place. I'm going to give you guys how I really feel about these stocks because I do care about you guys. And I do want to try to take at least 6 to 9 months off of your pathway forward to financial independence. And the simplest way to do that is just be on the opposite side of all of my earnings trades. Yesterday, I couldn't possibly have been more convinced that AMD was going lower. And here you go, AMD up $70. Here you go, AMD at $422. Right? We even talked about it yesterday about AMD being essentially a shoe-in now for 400. And here you go, AMD at $421. And some changes. So we are long a put butterfly. And yeah, that It didn't work, man. It did not work. Now, thankfully, Disney did work, and so it did kind of soften the blow quite a bit. But we'll get to that here in just a few minutes. We got so much time. We got the extra wide lanes, Elaine Bennis here on the show, and so that is some really nice stuff indeed. But AMD, it didn't work. But all kidding aside, or maybe kidding aside, or maybe no kidding aside, I don't know. Either way, it doesn't matter. Here's the great thing about expect to move butterflies. Here's the great thing about defined risk strategies. You guys know I don't love defined risk strategies. I've been very clear about that. I've been very open and transparent about that. And I think, when it comes to consistency and sustainability and repeatability and all those things, it's undefined risk that is going to get you where you're trying to go. I've been super clear about that. Essentially, from day one, you can go back and check the tapes. Just like my Buffalo Sabre fandom from the very beginning. I've been super clear, super consistent on all these things. But when it comes to earnings, sometimes you don't want to do undefined risk, and I can respect that. I can certainly appreciate that. But you want to take a shot. You want to take a little shot. You have a directional bias in the stock, whatever. I think defined risk certainly has a time and a place around earnings for sure. And it has a time and a place other places as well, especially if you're just starting out, you're just getting going, you just started trading, maybe you just found the show. Welcome aboard. I hope that you stick around. You should only be doing defined risk at that point. You should only be doing verticals. You should only be doing iron condors. You should only be doing diagonal spreads. And now at a certain point, you want to graduate. At a certain point, you kind of want to, move forward to other strategies and maybe do some more undefined risk and maybe exclusively undefined risk at a certain point in time. But when it comes to earnings trades, this is the great thing about a defined risk strategy. If you're wrong, you know the maximum worst case outcome. If you're wrong, you know the most that you can possibly lose. And so with AMD, we couldn't possibly have been more wrong. Like, we quite literally could not possibly have been more wrong. And yet, we're only going to lose about $5 on the trade. Now, I mean, it's 5 option dollars, so that means it's 500 actual dollars. So it's not insignificant by any stretch of the imagination. But this is where it's all relative, right? It all has to be kind of taken within the context of your own portfolio. So in this portfolio with about 35,000, that's what, 1.5% of the account? Which, again, not insignificant, but also not like, okay, we got to shut the lights out. Like, okay, now we got to furlough the employees. Like, we're not at that point either. And so you just have to, pass everything through the appropriate filter in terms of, what is my account size? What is the position size? Am I small enough? Is this trade going to put me in the pain cave? Like, is this trade going to put me in the hurt locker? And again, Jeremy Renner is not going to save you. He's not going to save me either. Right? That was 20 years ago. That was 17 years ago, whatever. Those days are long gone now, my friends. So AMD, unfortunately, did not work. Now, we do have 2 days to go. And one thing we have learned is that markets move and things change. And one thing we have learned is, man, you are always just one tweet away. Like, you think you're far away, you are not far away. So Russell Ponce, again, you are one tweet away, my friend. One tweet and then a retweet. You get a Trump tweet and an Elon retweet, it's over. It's over, Johnny. We are back in business. So that is what we're going to bank on here for AMD. But I have a feeling it's not going to work. So if you happen to have a banana natty nearby, pour a little bit out for this AMD position. But the good thing is you can refill it right back up, because take a look at Disney. So Disney, because I would just imagine you guys have banana natties on tap, right? Just grab the spigot and just fill that guy right up. And so Disney, if anybody has a banana natty on tap, please let me know. I need pictures, I need videos, I need all that stuff. I think it would have to be one of those deals like, remember when you would get ice cream from like the ice cream shop and you would get like the chocolate vanilla swirl, but it wasn't like chocolate vanilla together, which just made like a lighter brown or whatever. Like they had a swirl of vanilla and a swirl of chocolate, and you did them together, and then it looked like, absolute, just tremendous magnificence. I would imagine if you're going to set up, like if you're going to DIY a banana natty, on tap, like down in the man cave or down in the basement or wherever, and just put it at the kitchen faucet, you're going to need two different spouts. I think that's the only way to do it. That way you can get the ratios right, because sometimes you want a bit more banana, sometimes you want a bit more natty, and you gotta see where the wind blows you. But Disney, man, this thing blew us right into a profit, which is nice, because that doesn't quite offset AMD, but it helps a lot, man. Like, that obviously helps a whole lot. So we were able to pick up about $3 on the Disney trade. So we lose 5 on AMD, we pick up about 3 on Disney, and so net. We are in a situation where, Josh doesn't know about banana natties. It's not a morning show thing. Banana natties is this show, Josh. So Josh literally doesn't pay any attention to the show. Like, he counts me in and then he goes off and does whatever Josh does. right? He just has no idea what's happening. And so it's just me and you guys. And so you guys in the chat, bring Josh up to speed on the Banana Natty, because not only would Josh like to know, but the algo would love to know, and the new people. Like, let the new people know what a Banana Natty is. I'll let you guys take that over for me. And so, yeah, so Disney, we picked up $3. You got AMD, we lost $5. And so net, we're down $2, which, yeah, again, not the end of the world, right? And this is what you're signing up for with earnings trades. You got to remember, this is not going to be the bread and butter. This is not going to be the oatmeal and peanut butter. And this most certainly is not going to be the tuna fish and applesauce. This is not going to be the staple. Right, the staple is going to be the 45 to 21. The staple is going to be, the slower moving trades where you got the theta in the first half of the cycle and all the things we talk about all the time. It's all over the market measures. It's all over the options jobs. I've been talking about it for 10 plus years now. And so the earnings trades, I think you might be able to get a little extra around the edges. Maybe not. You can make a case that in the end it's just kind of a net zero, and I think that's probably a fair point. And so you would naturally ask, well, Jim, why even do it? Well, then don't do it if you don't want to do it. I think that's totally fine too. But to stay engaged and kind of have some fun, you got to have a little bit of fun with this stuff, man. And so if you don't want to make earnings like a big part of what you do, I think that makes a ton of sense. But to take some shots on some of the main players, like AMD, like NVIDIA's coming up here in a couple of weeks, Amazon, Apple, what have you, like I can respect the fact that you may not want to trade like Ford earnings, right? If they're still in business, I'm actually not even sure. You may not want to trade like General Electric earnings. Like I understand that, but for the main players that we're all trading every single day, yeah, it makes some sense to kind of get in there and kind of sling some money around. But Disney, we picked up a few bucks. AMD, we did not. Let's close out of our Disney trade though, because I'm really, really happy with this trade. Obviously, we made about $3. There's another $1 left to be made, but there's 43 days to go. Huge rally in Disney. They probably just came out and said, yeah, we're gouging people even worse than we were at the parks. We had them on like a 300% markup. We just cranked that gap to 400%. We were doing like $11, $12 for a soda. Now we're doing 14 to 15. We were doing like $9.75 for a corn dog. Now we're going $12.75. And so that makes sense because they got you, man. Like you're there. What are you going to do? You're going to not eat? You're going to bring your own? That's what the tuna fish and applesauce is actually for. And so I would consider that. But for Disney and our short put position, I'm pretty happy with where we're at here. So we were able to pick up about $3. We'll buy it back for a little bit over $1, and then that'll be that. So let's go ahead and be done with this guy, and then we can just move on. Like we can move on to greener pastures. Let's see where the wind does indeed blow us. All right, so Disney, we bought it back for about $1.10, and by about $1.10, I mean exactly $1.10. And so we made $3 on that trade, so that's good. So AMD is not going to come back, right? But we'll give it a couple more days. There's no reason to close it. We might as well leave it on, right? We're banking on the retweet combination, which most likely won't happen. But if it does, that'll be kind of nice. But still, I just want to point out there's literally no reason to close it right now. Like I understand, and I'm saying this in all seriousness, I understand, people like see this on their board. Like they see the P&L day. They see the P&L open, man. Where are my P&L open bros at? You guys watching the show? I know you guys like to throw shade at me for my P&L open and come at me because it literally does not matter. It's all made up. It's all 100% made up. Not unlike all the things coming out about the different wars and all these kinds of things. The wars are very real, but the commentary around the wars and the narrative and we signed this and we did that and whatever else, that is 100% made up. But when it comes to P&L open, P&L day, like I understand you may not want that on your board. Like seriously, like psychologically. Like from like a mental standpoint, it may actually help to have some relief to take it off, to just be done with it and not see it on your board. I can respect that and I understand that. But still, there's no reason. You just got to wait 2 more days. 2 more days, it's all going to be gone. Like 2 more days, this AMD position is going to float off into the ether and it's going to be 100% gone. And so I understand, though, getting those things off your board so you don't have to see them. It's actually not completely insignificant, and I recognize that. But for AMD, we're going to sit tight and do nothing. And because there's nothing more to do, we've essentially lost the most that we can lose on that trade, I think. And so, all right, so that is, let me see here. AMD, we did AMD. We did Disney. Oh, let's take a look at, so Snapchat. Look at Snapchat up 5 cents. So this is Josh's trade. Josh brought us in, so Snapchat. And we are basically at a scratch now. We're up 11 cents on the trade. Well, we're up 12 cents on the trade. So again, if you convert that into bonefish meals, like if you use a bonefish equivalent unit converter, which you guys brought to my attention, thank you guys again. We're about a third of the way there, right? For a single bonefish meal. Because again, you're dining alone when you're at Bonefish. We all know that. So you don't need to worry about paying for other people. Like this is a solo operation. And so we're about 1/3 of the way there, I would say. And so that's not too bad. Like that's not insignificant. And now, if I'm not mistaken, Snapchat has earnings tonight, do they not? Snapchat has earnings tonight. Look at that. May 6th after the bell. Look at that. Snapchat is tonight. I mean, that's pretty amazing. Now, we're not going to do anything in there because there's nothing to do. I mean, you could go into the 2-day cycle, right? And it's like, what am I going to do? I mean, am I going to sell the 6 put for 33 cents? I mean, I understand from a BEU standpoint that is also not insignificant. But again, we have to apply a little bit of strategery around the edges here when it comes to what we're trying to do. So I don't want to buy more shares. I don't want to do any options in there. Now, we could go to like the back month, maybe go to like June. And now, I mean, you're selling the 6 put for, 58 cents, maybe. You could buy we could buy the 7 call for, 40 cents. Like we literally won't even know it's gone. Like we literally will not even know that it is missing in the event that Snapchat crashes 30% on earnings, which I would imagine that's the most likely scenario, just given the fact that they're Snapchat. So we're going to sit tight though. We've already got the position on. This is our core position, of course. And that's a joke, by the way, if you're brand new. That is a very weak attempt at internet sarcasm. But we're going to sit tight. We got 100 shares, and then that's going to be that. And so, all right, let's go ahead and, man, Josh is Amazon Prime. Me all kinds of questions. Man, good job there, Josh. I appreciate you. So let's go ahead and let's see. So no Snapchat. I just wanted to mention that it did have earnings tonight. So Starbucks. So look at Starbucks ripping along with the rest of the market. Even the S&P is up 90, NASDAQ up 504, Starbucks up 231, up over 107. Now, again, the other day, let me actually delete all those circles. The other day when we made this adjustment in Starbucks on the covered call, so it was right here. So if you go back and you watch the May 4th show, May the 4th be with you, you'll see when I rolled up from the 100 strike to the 105 strike, I paid $1.80 debit. This is a worthwhile show to actually take a look at. Most of our shows, you could probably do without them. But May 4th, I think that was actually worthwhile. I think, if you go back, we made the adjustment at 258, so we probably started talking about it around 235. So go back right after the show started. We got right into this guy. And then I really wanted to outline and kind of analyze the different pathways forward through the forest. Kind of talk about all right, this is what it looks like if we do X. This is what it looks like if we do Y. And the basic decision was trying to decide, should we stay at the same strike or should we roll the strike up to try to recapture some of that intrinsic value? And, the main point that I made at the end there was if you think Starbucks is going to stay here or rally, then rolling up is the move to make. And at the time, I think Starbucks was just over 105. So if you're bullish on Starbucks, then rolling up to recapture that intrinsic value is going to be a worthwhile endeavor, and it's going to put you in the best possible position. If, on the other hand, you think Starbucks is going to go down or you want to have that downside protection kind of baked into the strategy, staying at the 100 strike is the move to make. Now, of course, nobody knows what's going to happen. So if you think it's going to go higher, that literally means less than nothing. If I think it's going to go lower, that literally means less than nothing. And so, it's important to remember that nobody really knows what's going to happen. But still, just like earnings, we have to layer on our biases. We have to layer on what we think about a stock, what we think about the market, and what have you. And so for our purposes here, it's worked out really well that we made this roll because Starbucks has been strong since May 4th. So just the last couple of days. Now, again, I didn't know what was going to happen. I did feel like rolling up was a good move because we hadn't done that yet. I don't think in the 18 months we've had this trade on, I don't think we've rolled up an in-the-money call to recapture intrinsic value because we haven't had that many opportunities. Starbucks hasn't really been particularly strong for the 18 months that we've had the trade on. There were a couple instances early on in the life of the trade when we could have rolled it up, but I chose to do nothing instead, which, if you've been following the show for any length of time, that is my default setting. If you haven't been following the show for any length of time and you are brand new, again, welcome to the show. I hope you stick around. The do nothing strategy is my default setting. The DNS, as you guys brought to my attention, is indeed the numero uno strategy. So for Starbucks, I'm glad we rolled up. But again, it's worthwhile to just kind of check in on this guy from time to time because it's been a very, very interesting little project. And then, we're obviously hemorrhaging cash in MES. It just goes on and on and on, man. It's so funny too, because I talk about, it's easier to hold short calls than the indexes, like much more so than like individual stocks and what have you. But it certainly doesn't feel that way in a day like today. Like it certainly doesn't feel that way in a day where the even S&Ps are up 90. It feels like, man, this is a pretty tough day to hold a short call too. And that is true, of course. But again, even the S&Ps up 90, that's only just over 1%, which is a little bit crazy, of course. But Starbucks is up $2.30. That's like a 2% move. And all these other stocks are up, they're up a bunch. I mean, but like McDonald's. Got McDonald's. Well, McDonald's is down today? Wow, look at that. McDonald's is down. What's Apple doing? Got Apple up 1%. So that's about the same as the market. What's Amazon doing? Amazon up 1%. It's about the same as the market. What's Google doing? Google up 2%. So that's more than the market. What's Tesla doing? Tesla up almost 3%. So, when it comes to short calls, I still think it's a tougher trade with individual stocks because they can just move so much more wildly than the overall index. It still hurts when you're on the wrong side of the trade. And that's exactly where we find ourselves right now with MES. But we're going to sit tight. We're going to continue to battle it out. And that is one of the more redemptive qualities of a short call in the indexes. It's easier to hold for a longer period of time. Now, that still could prove to be, the worst decision that you could possibly make. I mean, this still could prove to be the worst decision that I could possibly make when the S&Ps are 7,600 next week or 7,725 or whatever. I will wish I would have gotten out at 73, 78. But still, much easier trade than an individual stock, in my humble opinion. And so there is some MES commentary. And then the last thing I want to do, and I see you guys, look at you guys in this chat, man. I mean, the work you guys are putting in, I mean, it should be studied. Like, they should do a case study on this. They should absolutely do a case study on this. And, man, look at Point B or Denu. Man, Griffin Jones, man, I appreciate you guys so much. Look at this, man. Wow, I got to find some more people to surprise and delight, but I'll have to look for that in just a few minutes. Let's go ahead and I want to do a new trade today. I was looking at some XOP. So, I mean, I was looking at the Tasty Default watch list. And I was just looking for things to do. And there's nothing to do, man. I mean, you've obviously got volatility is down. Earnings season is essentially over. Other than you've got, obviously, like Baba is next week. I'm not going to trade Baba. Man, I'm done with Baba. I don't think I've traded Baba. It's been years, man. I'm all set on Baba. Cisco, right? I don't really feel like sipping on too much scissor anytime real soon. Got Baidu. Not going to touch Baidu for the same reasons. I'm not going to touch Baba. Got Neo. Obviously, I thought he went out of style about 20 years ago because I'm still pretty sick of love songs. But we might trade that for June. I don't know. But the one I'm really looking for, obviously, that everyone's looking for is NVIDIA. NVIDIA is May 20th, I think, right? Is that May 20th? May 20th. Oh, that's crazy. Oh, you know what? That's crazy because that's the week I'm going to be out. So I am going to be out the week of May 18th. So again, we've got to use it or lose it like policy. And so it's like, hey, I'd like to use it because I want to take the kids to Legoland, maybe do the aquarium, like whatever. And so we're going to do all those kinds of things before it just kind of goes off into the ether, kind of like my AMD butterfly. So I know I've been out a lot. I was out a few days last week. I'm going to be out a lot later on this month. I'm going to miss NVIDIA earnings, which is crazy. But that's coming up on May 20th. And so I'm pretty confident you guys can keep it above zero for me in my absence. But that's the main earnings play that is on the docket. Like, that's the main one that's coming on down the chutes. All these other guys, your Babas, your Baidus, even your Neos, it's like, nah, I mean, is it really that big of a deal? Do I really have that strong of a hankering to engage in the market? I don't know. Probably not. And so, all right, let's go ahead, though. I'm going to go to XOP. So the one I was looking at was XOP because this is an index. This is one of your X indexes. You've got XOP. You've got like XLF and XLE and XLU and all those guys. These can be really great opportunities because, A, they give you a slightly different exposure than the overall market because these are going to be sectors of the overall market. But then also number two, or B, whichever way I went a couple seconds ago, you have a situation where these can oftentimes have better IV ranks than the overall market itself, which is the case right now. I mean, XOP is at an IV rank of 50, whereas SPY, it's like under 20, right? Oh, 35. That's actually not too bad. Wow, SPY is 35? Okay, hold on a second. What is MNQ at? 53? Wow, these IV ranks are super high. So sometimes I kind of get lulled into sleep by just looking at market-wide volatility, and I kind of forget about what the individual stock volatility looks like at the stock level. And so this is where it's so helpful to make sure that you go through your process of looking for stocks or looking for whatever. Use the Tasty Default watch list. You can use the artist formerly known as Tom. You can use his watch list. Either one of those is fine. We're still working on a Dr. Jim watch list. It should be out there anytime in the next 18 to 36 months. And so when you look at these watch lists, it's nice because it gives you ideas right away, but then go through the process and kind of take a look at where things are at from an IV rank standpoint. So when I look at MNQ, I'm like, man, let's do some XOP, but I'm going to do some MNQ as well. Because again, let's see, XOP, if I go to the June cycle. So I'm kind of thinking with this guy, I'm kind of thinking about doing a ratio spread, man. We did a ratio spread recently, in a couple of stocks. I think we did one in like GDX, and we maybe did one in another stock. Well, we just did the one in MNQ. That was kind of the 111. I think Danish Dynamite brought that one to our attention. So thank you again there, Danish. I appreciate you. If I do this guy, though, if I did like a 165, 160 ratio spread, I'm going to get a few bucks for that, right? Yeah, $1.99. It's not too bad. It's not as great as I would have liked. I mean, you look at the probability is 80%. The P50 is 90%. Those are super duper high. One thing you can do is you can go with like an at the money strike on the long put. You're going to sacrifice some probability. So you see my pop drop to 73. My P50 dropped to 86. But now my credit collected is 283 instead of being $1.99. So that's really nice from a credit collected standpoint. Obviously, my break-even point's not going to be nearly as nice on a 171 65 relative to a 165 160. Because at 165 160, my break-even point's going to be way down below 155 because you got to get through the long vertical spread and then the extra $5 that the long vertical spread taxed onto the short strike before you even get to the credit that you pick up on entry. And so it all depends. I mean, that's why the probabilities are so much lower when you move the strikes up on the chain and now you're kind of at the money level for the long put. And so 170, 165, I kind of like it, man, for XOP. So let's do this. Oh, wait a second. Wow, they're getting us on buying power. Look at that. Man, they're getting us on this buying power. That's about 8.5%. Nah, that's okay. We can still do it. It's not that crazy. What could possibly go wrong? So let's go ahead and let's put this guy on 283. So we got filled at 285. So we got improved there a little bit. Let's go to MNQ now because I want to get to you guys, and I'm right about halfway done with the show, and I want to do a little something with you guys. So let's go to 42 days out. Man, I mean, I don't know. We can sell a naked call, I guess. Are we going to do that? Have a naked call on MES and MNQ? Man, we are just asking to be in the pain cave permanently, like a permanent residence in the pain cave. But I kind of feel like I got to do it, man. I kind of feel like I got to do it. I mean, what could possibly go wrong? Just use common sense, guys. You don't need the technicals. You don't need the fundamentals. Just use your brain. What could possibly go wrong? Let's sell this 36 delta call in the market. Buying power wise, I mean, it's only about, that's what, 7% of the account, thereabouts. $2,500. That's not too bad. We're going to pick up about 440 points on this guy. My pop is 69%. That's pretty good. The P50, it's not available for the futures options, but we know it's probably around 75 to 80. And so we can round that up to 100 for our mental records. And I like it, man. A lot of positive theta. The maximum profit is nice because you use the MNQ multiplier, of course, which is $2 per point. And then the maximum loss is negative infinity, which, could have happened theoretically, yes. It has been a minute since I have checked in on the Tasty Trade platform and saw infinity bid, infinity plus one offer. So I don't think it's going to happen, but theoretically it is a possibility. And you have to make up your own mind when it comes to that. But let's go. Let's play the market to the downside, just as I said I would. And so that way, if you are a bull, you are welcome. So, all right, let's go for 440. No takers on that guy. Let's try. Oh, we got a taker. Look at that, man. Nice. We got a little something. Okay, there you go. So we did MNQ to the downside. We did XOP ratio spread. And so now that's good. We got a lot of theta working. And all right, awesome stuff. Let's go ahead and let me see. Well, I see Michael Ellison is here. What's going on there, Michael Ellison? I appreciate you. I see that you are here, and I appreciate you just surprising and delighting some people in the middle, just kind of surprising and delighting the new folks that have wandered onto the show. And so thank you guys so very much. But Josh has Amazon Primed me a couple of questions. So let me go ahead and let me get to that because we got Russell Ponce. We got Michael Ellison. Let's see here. Okay, so BBB Fine says, on your MES short call, why didn't you do a strangle or sell a put along the way to help your short call? Yes, great question. And you can do that. You can 100% do that. And it depends on how much directional bias you want to have in your position, right? This is a great question. BBB Fine. It's all about trade-offs, right? It's all about exchanges. It's all about gimmies and gotchas, right? And so one of the trade-offs you have to make is how directional do you want to be and how much extrinsic value do you want to have working for you? Now, a lot of traders look at that and they say, that's kind of an easy decision because you're the one who taught me, Jim. Nobody knows, right? The markets are random. The markets are unpredictable, blah, 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 blah. So I want to have more extrinsic value working for me because that's kind of, directionally indifferent in a lot of ways. It's just going to, move in my direction as time goes by and all those things. And that's 100% true. But when you add a short put to a short call, it does slow things down quite a bit in terms of, like in my situation here with MES, how bearish I might be on the strategy. So what that means is, yes, if the market keeps running up, just as it has, I'll be really glad I added that short put. That's definitely true. But if the market comes back down, if the market does retreat, now all of a sudden I might find myself tested on the put side. I mean, if you follow the show, I can't think of any examples. Maybe you guys can in the chat, but this has happened to us on the show. Like that whipsaw risk, man, it is real. It is 100% real. And that doesn't mean you don't do those things. It just means you have to go into these things eyes wide open. Like, what am I signing up for? What am I signing up for, and where do I want to put my chips in the middle on this position? Do I want to be more directional, or do I want to be less directional with the potential for whipsaw risk, but now I have more extrinsic value working for me? Because the run-up has been so incredibly extreme, I want to be a bit more directional now. Now, it's been dead wrong. It's been completely wrong. It couldn't possibly be more wrong. And so right now, obviously, the play looks like I should have added the short put, but that's why I didn't do it, because of the extreme nature of this move, that if we get a snapback really quickly, I didn't want to find myself in the lurch with having a short put that is now tested. And again, the important point here is A, knowing what you sign up for, but also B, or two, I can't really do like a B, you want to make sure that you are small enough on order entry such that you have the flexibility and you have afforded yourself the luxury to make these choices, right? To where if you want to be more directional, one time or another, you can, because your position size is in check on order entry. This is just a one lot in MES. On a $35,000 account, that's plenty small enough to essentially hold this as long as I want to hold it and absorb as much pain as I want to absorb. I mean, we are comfortably situated in the bathtub of filth. Now, I don't see us getting out anytime soon, but we could, we could stay, we could exit, we could do whatever we want because of position size. So whatever you're going to do there, BBB fine, which is a great username, by the way. I would just make sure you're small enough on entry. And so I think was there another Amazon Prime? There was. So Mr. King says, I have a naked short call in Micron. Whew, man, that's brutal stuff. With a 980 strike expiring in December. With Micron moving up recently, my position is currently down 4,000. How can I mitigate the risk? Well, let me bring up Micron really quick. Thank you there, Mr. King. I'm sorry to hear that you're in this situation. You're not alone. Somehow we've been able to avoid the Micron situation, but I know that we are in the minority. A lot of people are kind of in a similar spot as to yourself with some Micron pain. So here's a couple of things to keep in mind. Well, everything I just said, related to the BBB fine question on my MES position, it applies to you here too, right? Because you have a short call in Micron. Now, again, remember, as I kind of alluded to a few minutes ago, or even just outright said explicitly, it's harder to hold naked short calls in individual stocks because today you've got Micron up $17, which that's actually a pretty small move for Micron. I mean, this thing's been moving 40, 50, 60, 80 bucks a day, whatever, for like the last couple of weeks in a row, I think. I mean, it's been some pretty wild stuff. And so you don't typically see that in the indexes, which makes it a bit of a smoother ride. But the same mechanics and the principles are going to be the same, regardless of whether it's individual stock or index. And what I mean by that is this. If you want to remain directional on Micron and stay bearish, then you hold the short call and you stay bearish. But if you want to neutralize your direction, kind of take a little bit of sting out of some continued moves higher, but allow you to stay in the trade so that you can benefit from the stock coming back down, this is where you maybe consider adding a short put into the mix. Now, you're all the way out to December, so this is already a super long-term play. That's good in some ways, but bad in other ways. It's good because you have a lot of time, you have a lot of extrinsic value, and a lot of theta. It's bad because it's not going to decay very quickly from one day to the next. I mean, you're several hundred days out into the future now. This is not going to be something that's going to decay super rapidly. But also remember, you've got Micron is at 650. You're still 300 points away from being in the money on the strike, which again, this is Micron. It's not McDonald's. This is not Procter & Gamble. Right? This is not Nike. Like, this thing could move 300 points in a week or 2 weeks. Like, that could 100% happen. But you still do have some room. Now, being down $4,000, that's obviously a lot of money to pretty much everybody, but it's also going to be relative to your account size. I mean, if you're down 4,000 on a 30 or $40,000 account, that's a quite sizable loss. If you're down 4,000 on a 100,000 or $200,000 account, that's a lot more manageable. So it is all relative to however much capital you have in your account. And so when it comes to actually like the nuts and bolts of what you're doing here, even the S&P's up 100. Wow, that's crazy stuff, man. Crazy stuff. Look at the Russell 3000. It's doing it, man. It is 100% doing it. If I go to the trade page, so Micron has earnings on June 24th. That's 2 days before my wife's birthday, I think. Yes, that's right. I know that's right. I'm 65 Delta. That's right. So if you go to December 18th, you know, like if you wanted to sell a put against your 900 call, you said 900 or 950? 980. Okay, 980. If you want to sell a put, I mean, what I would probably do, because the 980, you know, that guy is, you know, you're looking at about a 38 delta, right? If you look right here, your 980 call is about a 38 delta. If it were me, I would not want to sell the same delta strike on the put side to neutralize my directional bias. That's just how I look at the market. You may look at it differently, and this is what makes the market. Everybody has to blaze their own trail. I want to be short-term contrarian. So, excuse me, if something has gone up significantly, I want to be on the short side of that. If something has gone down significantly quickly, I want to be on the long side of that and play for the market to kind of, you know, continue to search for its equilibrium point somewhere in the middle. And so I would probably be looking to sell. I mean, you could sell maybe like a 15 delta put or something like that. And this would be if you wanted to match the same cycle where, you know, you could sell, you know, if you sold like this put right here with the 420 strike, you know, you're only picking up $40, $42. I mean, I say only. I mean, it's still pretty significant when it comes to, you know, the premium that you're bringing in. And so that's, you know, that would be one option to consider. Another option that just popped into my mind, actually, you could actually, so you have this 980 strike that's in the December cycle, right? You could actually go into like, you could calendarize the strangle here. You could go into like, you know, you could do like the June 18th, like a 43-day cycle. And now you sell, you know, you sell like a 15 delta put against that call at the 510 strike. So you basically start treating this like a covered put. Right? Like if I have a covered put on, whether it's a poor man's covered put or like a regular covered put, I'm basically short stock or you know, or I'm long some put option, which you're short a call. So it's kind of the same thing, even though your short call's out of the money. It doesn't have that many delta. You could still kind of grab and borrow from the spirit of that strategy and utilize it here to maybe start to whittle away at your basis over time. Now, again, you're going to be exposed to whipsaw risk. Right? You might sell this 510 put and Micron crashes 200 points tomorrow, and all of a sudden you're going to be in the lurch. And so you have to understand what you're signing up for. You know, if it were me and I were small enough, I would just stick with the naked short call because you're still 300 points out of the money. Believe it or not, the stock has not beat you yet. Now, it may not feel that way, and you may say, Jim, this thing is beating me to a pulp day in and day out. And I understand that, but it's still 300 points out of the money. So I personally would not do anything if I was small enough. But if you really want to minimize your directional bias, you could do it in like a nearer term cycle, or you could do it in the same cycle if you just wanted to match them up and keep it a little bit simpler. Man, wow. We only have 20 minutes left in the show. Wow, this is crazy. And there's too many. Look, I don't even know where to begin to surprise and delight you guys. I see Live at Large is here. Man, I mean, Luminous is here. Away from the Numbers is here. N1C, look at Shawshank showing up. Superstar is here. Man, you guys are really showing up today. Man, I appreciate you. Chris Conley is here. I appreciate you guys so very much. Let me go all the way back to the beginning, though. Man, look at you guys. See people calling for all kinds of stuff in here. Man, like DMZ is here. E-Media is here. Joel James is here. Man, let's go. Joel James. Oh man, you guys are the best, man. And by the best, I mean you're very, very below average, right about B-. And so you guys are my people. But Joel James says, Dr. Jim, new 3x leverage BEUX. 3 times the bang bang. I'll tell you what. So is BEU taken? Hold on, we'll get to the beginning in a second. Is BEU taken? Guys, what are we waiting for? Like for real? Like what are we doing? What are we doing? We've been trying to figure it out for 10 years. I think we finally found it. What are we doing? This is it. We need to be pooling our funds together. Guys, the ticker is there. The ticker is waiting. It's waiting for us. And we're not going to just do a regular stock or a regular fund. No, Joel James is 100% right. We're going 2x. We're going 3x, man. We're going 4x leverage. This thing is going to be amazing. And by amazing, I mean you're going to lose all your money in one session, maybe two at the most. But BEU is there. It is 100% there for the taking. Wow, that's really funny stuff. But let's go to the beginning. Where are you guys at, man? Let's go to the beginning. Show's almost over. That's unbelievable. Orgdanu's in the house. What's going on there, Orgdanu? I appreciate you, my friend. Hello, Dr. Jim. You do long verticals like straddles. Well, long vertical and a straddle are different strategies. Could you show us how to set it up? Like, could you use your arch enemy's Chipotle? Oh, man, Chipotle. I did see the Chipotle CEO came out and said, just ask for more food. Like, if you're in line and you're not happy with the portions, just ask for more and they'll give you more. And I have yet to put this theory into practice, but you guys let me know how that's working out for you. That's a bold move, man. That's a bold move. I am trying to create a forma mentis to trade this strategy. So I'm not sure if you mean a long vertical or a straddle. I'm going to go with the long vertical just because you put it in there first. But I'll tell you what. So Orgdanu, the simplest way to do a long vertical, this is very, very straightforward. We typically do it at the money. We typically do it where we're straddling the stock price, and maybe that's kind of what you meant there by the straddling of the stock price. Just go into a 45-day cycle or thereabouts. Even the S&P's up over 100 now. Man, look at that. That's really something. So Chipotle, wow, look at these strikes in Chipotle. Look at that. That's all janky. I don't really want to mess with that. Can we get a cycle with less janky strike? That's a little bit better. So I'm just going to use the 9-day cycle just because I don't want to deal with 20-cent wide strikes and things like that. But you basically just straddle the stock price. So if you want to play Chipotle to the upside, maybe I do a 32-34 long call spread, right? You got the stock at 33. It's right there in the middle between my strikes. And so I buy a 32 call, I sell a 34 call. You pay about half the width of the spread. And it becomes essentially a 50-50 shot. And then you could do the same thing on the put side too. Just flip it over and do it on the put side. And, you buy, so in this case, I would buy the 34 put and sell the 32 put. And now I'm essentially doing the exact same trade, just on the other side of the market. And so long verticals straddling the stock price usually gives you around a 50-50 shot where you're paying about half the width of the spread, whatever it is. And this is a great way to do long vertical spreads. There's other ways to do it, of course, and we kind of splash around with those ourselves here on the show from time to time. But this is a really good starting point. And so N1C is here. What is up there, N1C? Eventually, the Gulf countries will leave America's bosom as they become disenfranchised. That might be true. That's probably going to be on the 13th or 14th time that we win this war. So Sam L says, Dr. Jim in the house, the fade doc strategy like advanced moneymaker. That's it, man. That's it. That is 100% it. And so the fade doc strategy, I mean, again, I don't know if I can do more for you guys. I'm going to try to figure it out. I'm 100% going to try to figure it out, but I don't know if I can do it because I'm pretty much maxed out at this point. Wolf is here. What's going on there, Wolf? I appreciate you. Send my best to Mrs. Wolf. And again, send her my way if she has a problem with you growing out the lettuce because we got to stick together, man. We can't let them tear us apart. And so SC Golfer is here. I'm in for the algo. Everyone have a great day. You mentioned your birthday is coming up. When is it? It's May 19th. So I'm going to be gone. I'm going to be out on my birthday, but it's May 19th. I actually share a birthday with our very own Beth. So we have the same birthday on May 19th. And so, yeah, I'll be 45 in a couple of weeks. So I'm super pumped about that. My kids are very excited for I don't know what they've got planned for me, but I have a feeling it's going to be pretty fun, and because they're all super creative and it's going to be great. It's really fun too because they're all so different. As kids are always different, and so it's like Penelope's thinking about it in one way, Eli's thinking about it in another way, Amelia's thinking what can I personally get out of this, and so it's good. It's good that they've kind of diversified how they're going to attack Daddy's birthday, and so I'm excited. I think it's going to be fun. But let's see. Point B is here. What's going on there, Point B? Appreciate you, my friend. N1C. We're talking about more disenfranchising and weapons and stuff. I'm going to skip over that for the purposes of this show and maybe all shows that follow. But just because we only have about 12 or 13 minutes to go. And I know so little about it. I really don't follow it other than the fact that a lot of it's made up. The narratives are 100% made up. And so MP is in the house. What's up there, MP? I appreciate you, my friend. Edward Lond is here. What is up there, Edward Lond? Tea time, sip with Dr. Jim. Yes, my friend. Thank you so much for being here. Sam L, dear Algo, it's all made up. That's so true. What are we even doing here? Yeah, I don't know, man. But I think we found it. And it's right there. Look at our recent symbols. Look at our recent symbols. What do you see? Chipotle, it's there. MU, it's there. MNQ, it's there. XOP, it's there. But what is not there? Just look at the glacier freeze. What is waiting to be plucked out of thin air? BEU. It's beautiful. It's so beautiful. Oh, it couldn't be more beautiful. And so it's just too funny, man. It's just too funny. And so you guys are the best, man. Point B is in the house. My SPX Iron Condor is hurting as it is testing the call side with June 18th expiration. Should I do anything? My put strikes are 6780 and 6800, and the call side is 7400, 7420. It looks like that's all out of the money. So you know what I'm going to say there at point B. Oh, yeah. No, you don't do anything. Like, you haven't even been tested yet. Like, you're about to be tested. And again, it looks like it's a foregone conclusion. Like, the path is clear. Like, I understand it always looks that way. And by always, I mean it's like 50-50, 60-40. But a lot of times, it does look that way. But things can change very, very quickly. Again, you are one tweet away. You, Russell, myself, like, we are one tweet away from greatness. And by greatness, I mean maybe we can get out for a scratch. And so I wouldn't do anything, though, all kidding aside there at point B. It's still out of the money, and it's an iron condor anyway. So even if it doesn't work, that's where the position sizing comes into play. And so I would do 0. So Ashfin is in the house. What's going on there, Ashfin? Appreciate you, my friend. Thank you so much. SCPBB Fine is back. So we made it to the first Amazon Prime question. That's a good little checkpoint, Charlie, for us. Griffin Jones is here. What's going on there, Griffin Jones? I double-checked CL on the morning fall. Yeah, Griffin Jones, man, he's been slanging those CL options. Just kind of scalping those guys left and right, man. That's some big dog stuff. Nicely done, my friend. Closed my short calls. There you go. Near the bottom. I sold some short 70 puts. It bounces up. And I sold the 150 calls, staying small, theta grinding. Man, I'll tell you what. So you're kind of legging into your strangles. That can make a lot of sense, right? Like, intuitively, that makes a lot of sense. I mean, the Tasty Research has looked at this a million different times. Legging into strangles, legging out of strangles. If you guys could afford me 8.5 minutes, here are my thoughts on that. Like what you did, Griffin, right? It's amazing. It's amazing when it works. It's amazing when you can do it. And here's what I mean by that. Like this morning, your short calls printed, so you took them off. Of course, that makes sense. And then you wanted to play the contrarian play, so you sold puts. That makes sense too. But a lot of times, when you do that, it doesn't necessarily mean, and I know that you know this, of course, but just for everyone else's benefit, you need the market to rally up to be able to get into that short call. Now, that may not have been your intention all along. You maybe just wanted to play the short puts. It was working out so well, and you kind of had a hanker and you had a feeling you want to play it short, whatever. I mean, there's a number of different reasons. But for people that trade strangles and they're trying to figure out, should I put them both on at the same time? Or should I maybe leg into them and I use, down days to sell my puts and up days to sell my calls? It all looks great on paper and it all sounds great in theory. But the problem is, in practice, you sell that put. If the market keeps tanking and goes right through your put strike or towards your put strike, not necessarily to your put strike or even through it, but it starts moving in that direction, that's when you will wish you had that short call on to kind of buffer against the blows that your short put is having to absorb. So personally, I don't like legging into my strangles that much. I typically go with an on as a package when it comes to a strangle. Now, on as a package typically pairs up with off as a package, of course. Okay. What about legging out? This makes more sense to me personally. The research has looked at this. The Tasty team has looked at this, and there's not too much of a discernible advantage over time. But when I just think about it intuitively, I'm like, okay, maybe it's not showing up in the numbers, but research. Oh, I mean, even the best research, even the greatest research coming out of the Tasty team. I mean, it's amazing stuff. It cannot replicate real life. No research can. Like, that's one of the limitations of all research. I just did a calculated risk today. I just recorded it today. It'll probably air tomorrow. It could be in the drive home slot. It could be in the morning slot. They could put your boy back in the infomercial spot. You got to stay on your toes to see which slot it's in. But I talked about the Black-Scholes option pricing model assumptions, and I'm like, man, this is one of the most important pieces of mathematical modeling to ever be developed. And it has assumptions that don't make any sense. Like, it has assumptions to make the model work that literally makes 0 sense in the market that we all trade. So all research has limitations. So for my purposes, when it comes to legging out of a strangle, that makes a good amount of sense to me. Like, if you got one side that's completely dried up and there's nothing left, there's not much of a reason to leave that on anymore. And so whether or not you want to take it off completely or you want to roll it in to kind of bring in more premium, that's obviously up to you. But even the S&P is up 102. And so, man, that's crazy stuff. MP 50 at 50, N1C. Oh, here we go. We got some more blockades of the blockages. There you go. Sam L, Algo, all-time high. Or is it like everything else, completely made up? It might very well be. It absolutely might be. Rets Media is here. Yeah, Dr. Jim, preloading the chats. They are good. They are good job, Dr. Jim. I'm going to short some SLV today. Please don't go long. I do have a bit of a bullish bias on SLV. And so you're in good shape, my friend. That puts you in some pretty strong hands. Let's see. Weiss is in the house. What is up? Hey, Dr. Jim. No, long time no chat. Marcus to the moon. No need for SpaceX. Isn't that going to IPO pretty soon? I think that's going to IPO like really soon, and that would really be something indeed. But RML is here for the algo. Appreciate you. E-Media. Hey, Dr. Jim. I just grabbed a Starbucks drink, and your CC is in the money again. I know. But now we're not going to do anything now. Like now we chill. Now we got to wait and give this guy a chance to work. I mean, we still have a ton of extrinsic value in this position. You can see that right here. We've still got a couple $100 of extrinsic value. Now, what's going to be very interesting is what happens if Starbucks goes to like 110 or 112 or 113 early in the cycle. So when there's still like 40 days left or 37 days left or whatever, well, you just got to stay tuned. You just got to stay tuned because your boy needs that watch time, and we'll talk about that when the time comes. And so Brian, let's see, Brian Rakuten is in the house. What's going on there, Brian Rakuten? I appreciate you. Or Denu. Dr. Smoke Column. I could see it all the way from Italy. There you go, my man. I had to call the fire department. They told me it was old. It was Dr. Jim burning the AMD Polycast. Indeed, my friend. Indeed. 100%. And so that's pretty good stuff. And there's Joel James with the BEUX, the 3X leveraged BEU fund. That's 100% what we need to be doing. I wonder what the core position would be. Because it can't be Bonefish, obviously, because Bonefish is like part of a family of stocks. It's like Darden Restaurants or whatever it is. I don't know what it is, but you can't trade Bonefish directly. And so maybe that, I don't know what the exposure should be. Like, is this going to be like a long short strategy? Is this going to be like a premium strategy? Like, I don't know what it's going to be. We got to really think through how we want to set this fund up. Like, what is the prospectus going to look like? Like, what do we want to send to potential shareholders and potential investors? We got to think about this because we have a big opportunity on our hands. Sam L says the algo tired of all this winning. Certainly not in my account. We're not doing so hot, but we're hanging in there. Mr. Pillows, full hour of Dr. Jim. This is amazing, man. I appreciate you. It's almost over now. And it's funny because I'm still on the comments that probably came in before the show. And so you guys are the best though, man. I appreciate your patience and I appreciate you guys just kind of, this is the way we do the show and you guys are the best, man. You guys are 100% the best. Let's see. E-Media, Dr. Jim, go for the vitamin C. I'm going to try to do something, man. Yeah, we're kind of going down a little bit. We've rallied a little bit for this show, but I don't know what's going to happen afterwards. And so I'm going to do my best, but I'm taking all the stuff. I'm taking the vitamin C's. I'm taking the zincs. I'm taking the elderberries. I'm doing all of it. And so, but thank you there, E-Media. Appreciate you. Anta's in the house. Give my best to Uncle, though. You know what they say, ninth time's the charm. That's correct. It's kind of like trading Fed. It's kind of like trading FOMC. Like only the suckers think that the first day moves are the actual move. The ninth move is the real move, right? It's not until you get to that 13th move that it's where the market is actually going to go. Everybody knows that. RZX is here. What's up there, RZX? Grumpy Mike is here. Extra Dr. Jim today. An Amber guest host tomorrow. And that would be Autumn. But yeah, maybe we'll have her do the show because she's kind of recovered now. Like we've kind of met each other, I guess. Like she's on her way back to recovery, still not 100%. I'm actually going down. And so like our energy meters are probably about the same now. We should have her come out and do the show. That would be amazing. Because you can bet you bottom biscuit I'll be in that chat. I will be 100% in that chat with my people. I gotta be with you guys, man. To be on that side of the fence, oh, that would be so amazing. Maybe we'll make that happen. Let's see. N1C. There's some more. Yeah, just talking about the unwinnable nature. That might be right. Griffin Jones. How many BEUs is the full hour worth, man? I don't know. Maybe 2.5. I'm not sure, but we're almost done. We're almost out of time. DMZ is here. What's going on there, DMZ? Greetings from Argentina. What is up, my friend? Learning a lot. Thank you so much, man. I appreciate you so much. Samuel Doc calls it calculated risk. Stomach bugs not avoided. iPod Touch front ran the move. Yeah, iPod Touch is gone, man. He is gone. And I mean, from everything that I understood from iPod Touch, I mean, he got out of his positions. Like, I don't think he's absorbing this like I am, like Russell, like you are. And so I think iPod Touch he's off somewhere in some remote location, just enjoying all of his winnings. Viggy Zags is here. What is up? Oh yes, lots of liberation, tons of winning. Yes, that's true. In a not really kind of way. So Jason should be a permanent 1 hour show. Man, I appreciate you, Jason. I'm going to send you that cash that we talked about for you putting this comment in the stream at this very time so that the powers that be can see this comment and my supervisors and my overlords can see that this comment is in there, I'm going to send you that $8 that we talked about. It is on the way. And so let's see. Grumpy Mike Anton is local. He could take over Jim's backyard studio. That's true. He probably could. He's not that far away. I don't think he's only like maybe a half hour away, 45 minutes away. Grumpy Mike or the cat. Yes, we have 3 cats, so you can take your pick. You can get Henry, you can get Huggins, or you can get Barry. And I don't mean Barry like Barry White or Barry Sanders. I mean Barry like Blueberry, because she's a female, and Henry and Huggins are both male. And so those are our 3 cats. And let's see. Josh is giving me the rope. I'm hearing the music. I'm hearing the acceptance speech music. I got to do it. But I see you guys, man. Look at you guys, man. You guys did some work. Man, the algo is going to be so confused, man. It's going to pump this out to more people. Man, I appreciate you guys. I appreciate you guys so very much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have last call coming up next with whoever's on last call today. And yeah, in the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. I know that. Don't say I'm...
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring the person speaking to you. That's at 7:53 on Friday, and I don't want to say it, but I got bingo! Sazla bingo! I won, John. Can you come in and validate this, please? I would like to have. I have the times and the references.
Yay!
Good for the good guys.
Woo! We got a winner.
Pounds
Winner,
and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. You take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Chris, my friend, we are back for the last call, and my God, you can't contain the buying. The dip buyers are foaming at the mouth. You've got E-mini S&P 500 futures up 99 on the session, 73.86. The NASDAQ at 28.6. Just a parabolic move, an unbelievable move. You got the Dow up 688 and the Russell up 38. Everything up between 1% and 2% here. You've got oil futures down $6.85. They've had about a 12-point intraday range today, or 14-point intraday range today, courtesy of our friends at Axios. You have volatility future down 52, 19.26. Bonds up almost a full point at 113. They were in the 114 handle for just under 114 handle for just a second there. Gold up 140, silver up $4.35, and Bitcoin basically unchanged here, down 400. My God, what have we done? We are getting ready to get to 8,000 in the S&P 500, Nick. 30,000 in the 40,000 in the NASDAQ. What am I saying?
40.
Everything's good. What's the problem? The war's over. Iran doesn't have nukes. We're printing money. AMD always minting dollars, had great earnings yesterday. What are people worried about?
I hear you. I had Marty chatting me earlier this morning, and we were just talking about just some of these moves that have just happened, Micron, all these other things. Like, yeah, man, like momentum, it kind of feeds on itself. You get the fervor is back, the YOLO, the buy the dip is back. You probably get a awful employment number at the end of this week, which means rate cuts are coming because you got to save the plebes and print more money. What more could you ask for? Equity's higher.
Micron's really fascinating too, because I've been harping on this with Ilya. Do you know what its forward PE is right now?
Yes. 6, 8, 7. It's nothing. It's nothing.
We're not in bubble territory yet. If you took the PE ratio of the market on January 1st and you applied it to earnings where they actually are right now, the market would be trading closer to 76.50. So if we're getting to the other side of the Iran war and we're going to focus on 27% earnings growth, how much further can this run? All I know, Nick, is that since March 31st, we've been holding above our 1 week moving average in both the S&P and the NASDAQ on a closing basis. We haven't turned lower through it since then. Until that changes, there's no reason to get off this ride.
Usually you're my voice of reason. I hear no reason from you. I hear no subjectivity, just pure facts. It's nothing to worry about.
I jumped in myself this afternoon on Futures Power Hour for a 0 DTE scalp for 73.75, 73.90 here, and it's working out really nicely right now. It's a slow tape. Volatility is low. There's positive technical drifts. Volumes are low. Not necessarily an environment where you need to do too much thinking. And the thinking is what got me in so much trouble in recent months. So less of that.
The great one, Mr. Dylan Radigan, do not think, as he would say.
Just do it. It's crazy though, Nick. These memory stocks. DRAM is a new ETF from Roundhill that looks at the memory stocks. That's almost doubled since its inception a few weeks back.
Yeah, 30 days ago less.
Right. Mag 7 names are up on highs, but there's legitimate good rotation throughout the market. You can look at semiconductors at highs. You can look at telecom, which is holding up at highs. You also have industrials starting to break out a little bit today, not quite through their highs just yet, but there's a recent consolidation in the past few weeks. XLI moving up. You could point to something like XLC nearing the top side of its range. I'm also looking at the Dow Transports, IYT, the ETF. That's been consolidating for a few weeks. Looks like a bull flag. So there's it's not just memory. Breadth needs to improve still. It's still the biggest problem for this market. But there are other groups of leadership that are starting to emerge. And when you have many sectors sitting near 52-week highs, you can't exactly say it's a rally that's built on stilts.
I agree with you. I'm there. The numbers have gotten jarring. I find it hard. I mean, I trade it, and I'm willing to FOMO in, take my scoopies and move on. I don't love, $150 range in SanDisk. I don't love SMH opening 3-4% higher every single day for a month. It seems like that a little too fast for me. Am I overthinking? Is that just what markets do?
Sometimes they do that.
Sure.
Right? Mag 7 ETF today, Nick, is lower than it was 2 weeks ago, even though the Mag 7 ETF is 10% higher.
Mm-hmm.
So, you look at the market right now, the S&P 500 is at a lower valuation than it was on January 1st, despite being 5% now higher than the open for the year. So we talk about the market moving very quickly, but it's had to adjust out of the reality of the Iran war into this all-encompassing earnings environment right now. Mm-hmm. So I'm not going to try to call the top. Again, simple technical filter, 5 EMA. It's the only thing holding this thing up. As long as we stay above the 1 week average, long stocks looks good. And that's how I'm trading it.
So are we believing this Axios report?
No, I don't believe anything from Axios. Why would I believe anything from Axios?
So is the war over?
The war's ended 12 times over the past month, according to them.
And I'm excited for next month when we end the war again. And we get another 5 or 6% every single time we end the war. Should just do it have it as a monthly holiday or something. But so does that matter?
Daily.
So we get an Iran couple missiles at a ship or whatever, machine gun, whatever they do.
That was so important. That was actually so important for the market on Monday, Nick. We were talking about this in overtime yesterday and part of today as well. And think about this. There's a ceasefire going on. If Trump wanted to go back to war, he had the pretext to go back to war. With the news on Monday, there are missiles flying at ships, flying at the UAE, drone attacks.
Yeah.
And he's like, just those scamps. They're just having fun out there. It's not a violation of the ceasefire. And so the tolerance threshold, the bar to clear to get us to go back to war is high. Israel is bombing southern Lebanon again. And Trump's like, no, that's not a violation of the ceasefire. Don't you worry about it. I mean, so clearly we're in the end game now. If Trump is right about there being no nuke in Iran, then, we'll see how the market reacts. But right now it's higher.
Oh, I see in a past time that would have spooked you. It doesn't spook you. That for all intents and purposes, me and you, we're smart guys, right? We know exactly what's happening there. Everything that was happening a month ago is still happening, right? Nothing's really happened. Nothing's really changed.
Except for earnings, which have gone from 12% expectations
the
to
earnings,
27%.
Yeah, I'm with you. That picture, I agree with you. I hear you. But the war stuff, it's not, we rally on the ceasefire for the 15th time. We agree it's not really a ceasefire, right?
Oh, the war is over. Technically, Operation Fury has officially ended. This is now a maritime enforcement operation.
Got it. Got it. See, I feel like sometimes, they're spitting in my face and telling me it's raining, that kind of thing, But the market,
that's what's happening.
That is what is happening. But the market, usually I turn to the market, I say the market's always right. Market's always right. Price is the price. There it is. You buy it, you sell it. You do it at basically the same price. Market's always right. That's where it feels like, feels a little, I still question. But I guess that's how markets rally. You got to get the wall worry.
We have the wall worry right now. There's significant risk premium in the market still. I mean, oil prices for all of their volatility today, they're still holding near 95. You mentioned they basically cut their losses in half over the course of the session. And then still for a third day in a row, M contract is underperforming the Z contract. It was up less than Z on Monday. It was down more than Z yesterday. June is still underperforming December today. So I just think when we think about how the oil futures curve is trading, our thesis the past month and a half, almost 2 months now, has been that we would look at a floor under oil, and that on dips in oil prices we should be selling puts because there's just it's a molecular supply chain breakdown. The molecules just aren't moving. I missed getting filled this morning around 7:00 Eastern on some short puts. But I'm still planning on doing it. And that's my next favorite trade. I cannot wait to get another headline that the war is over. We get another dip in oil. And if it's tonight during Knicks Sixers or during the Mets Rockies game, I guess I'll be looking to short some puts in oil because that just to me seems like the easiest trade on the board still.
I hear you. And I still have some long delta in oil. Oil volatility coming in nicely today, down to 72.45 right now. Certainly not at the lows. You've had it creep back pretty much since that report came out. The report came out, you touched like 88, 89-ish, 88.66 was a low. It's been steadily rallying back. Volatility is in a pretty decent contango right now, but is not like in the dumps. You have the VIX at 1733, basically unchanged on the session. The vol futures 1923. I think some of that is being, pushed up because of the way a lot of these stocks are moving. The semiconductors, volatility is measured on both sides of the distribution. It is not just one side. People forget that. We talked a lot about that this morning. When people are out there YOLOing call options and, skew is through the roof on a lot of these stocks on the upside, that is going to reflect in volatility futures. You are going to see that sort of bid in volatility. So that is something there. I have a hard time,
I'm out, by the way. I just took off my 0 DTEs. So that
Chef's
was
kiss, baby. I love it.
Quick little 20 points.
Into the 10-minute window. Oil doesn't matter anymore. Price.
Yeah, you remember the conversation we had at the start of the war about the Minneapolis inflation calculator? Like, what would oil have to get to really feel the pain?
Mm-hmm.
And if we went back to 2006, when oil gets to $141 a barrel, that in today's dollars is basically equivalent to $220 a barrel.
Yes.
So, at 85, 90, 100, we're talking about oil priced in like the $2006. It's closer to $60 or $70 a barrel. Real incomes have doubled since 2006. I'm not happy paying, and you're not happy paying more at the pump, but in terms of an economy that can bear the burden, we can burden it a little bit better. Oil going up or down from here, it's not going to derail the U.S. economy. Maybe it prevents the Fed from hiking or from cutting rates. But Nick, I've been fighting about this with Ilya. Just how much is the rise in oil going to take off S&P 500 earnings?
Nothing.
2%. Well, let's be generous. We'll call it 2%. And then let's say the Fed cut's not coming. That takes 1% off. So that's -3. Well, we just had earnings go from 12 to 27. Let's just say that 3 has to come off. So we just went from 12 to 24. Earnings growth is still double what people assumed it would be. Just some very cheap back of the envelope math here, assuming no other knock-on effects, which is probably faulty. But I digress. We are at a very high floor right now. So dips in stocks, dips in oil, sell them. That's it. I'm long the 8,000 calls through the end of the year, Nick. I'm not going to try to, trade an out of this too much. Thing looks like it's going up.
It's all up. I will say there are a handful of earnings after the close today, just to mention them so people have them on their radar here in the next couple minutes. You have ARM up 28 and change here, 13%. It reports earnings 5 minutes after the bell. You have APP, that's AppLovin. INQ, if you're interested in getting in on the squeeze that's going on in some of these quantum stocks. Coherent, which is one of the stocks that just got added into the S&P 500. I've had some people throw my way. Fastly, which is FSLY. Not a stock that I trade very often. It also has earnings after the close. Snapchat, you have Axon in there, AXON, I'm sorry about that. And then tomorrow morning, a couple names as well. You've got McDonald's near the lower end of where it's been trading. Celsius, somebody gave us a trade idea we didn't get filled on for fast market this morning. You've got VST in there if you want to play into some of the energy/data sector names. Unity is in there, another stock that's had quite a fall from Gray. So are still a handful of earnings there on the docket. What's the most interesting to you here at this point? So you've had, unbelievable rally in the indices themselves. Are you picking stocks? Are you looking at specific sectors? Are you looking at commodities or grains? I saw like wheat and corn and soybean were all limit down this morning. Like, are those interesting? What's your number one spot here? To quote my boy Ludacris. I'm coming for that number one spot. James will give me my props for that.
Where in what area codes do my trades lie right now, Nick? I really like wheat still here. We haven't seen fertilizer prices come in meaningfully at all. And just having traded through this environment in 2022, there has been a lag in terms of the knock-on effect. So longer dated exposure here on the call side to me would make a good deal of sense. We know that we're now in the middle of sowing season here in the United States, and we just do not have enough fertilizer in enough places. Mm-hmm. So some of the crop yields have been down too. Generally speaking, though, I don't think playing idiosyncratic or these trades on the other side of the Iran war may be the best bet. If we are dealing with inflation, there are asset classes that tend to outperform on a more durable basis than trying to catch up a commodity that's going through a snake eating its own tail cycle, because food prices go up too much, demand subsides, prices come back down. So you're not banking on things staying up. Whereas with the equities, right, they can capture that demand and that surplus and hold on to it. So I'm much more interested in thinking about an equity market that has inflation sensitivity to it. What would stand up against that backdrop? That could be food producers themselves. It might be the fertilizer companies like CF or Intrepid or Mosaic. And Mosaic's had a really tough run for what it's worth. But on the other hand, it could be REITs. It could be existing real estate holdings. It might even be just stocks themselves. And the bottlenecks in memory and chips and all that jazz, that's outperforming inflation right now. Yeah. So in a world where we don't get recession and nominal prices are pushing up, that is historically good for the stock market, even if it means, prices at the grocery store going up too.
All right. E-mini's up 99 here. Just sold off two handles. Sorry about that.
That was me.
A fat finger mistake there going into the 10 minutes. Does the volume situation mean anything to you? It's been exceptionally low volume for quite some time. I guess going back to that whole CTAs are buying thing, that was really the last time where there was any sort of volume in this market. Little deal, no deal, any deal on that? E-mini's just rallying 7 handles just to give you back your couple dollars. I'm sorry.
I'm thinking, Nick, what does a market look like during that? That's a huge bump there. Oh, I'm looking at the 1 minute chart. Never mind.
Yeah.
It's like, whoa, what has happened? Summer months are typically defined by lower volumes, and Memorial Day is not that far away now.
Yeah.
So Memorial Day through Labor Day, that period of time, find another window of 3 months like that. You're not going to find another window that has lower 3 months, or another window that has a lower volume over a 3 month period of time. So not surprising. Volatility is also in, Nick. Isn't the great Jesse Livermore quote, "The way that I made my money was not by overtrading, but by sitting on my hands"? Something like that. Mm-hmm. So if you've been long this market, or if you're a zero DTE kind of person, you put your trades in the morning, this thing just starts going up. Why do you need to do any adjustments or trade? You kind of just sit back and go fishing. Yeah. It's really nice to have another summer like that, like 2003 and 4 and 5, where you just get long and let the market do the heavy lifting for you. But low volumes, low volatility, and positive technical drift, that's what you want if you're a bull, and we've got it.
You think that market is even possible anymore?
Yeah, I think we're going to go through a lull. If we get through the Iran war, I think people are exhausted. It's been a really long year already, Nick.
I agree with that.
I have a newborn, so maybe my view's different.
That's true. You have more than I have, but I think as a trader, I think a lot of people feel that way. I was having this conversation with my dad earlier this morning. I was like, 100 points, it's a huge move. It's 1.5%. It's, 5 points back in his day, 10 points, and the market gets bigger and just the numbers get bigger. And that's just like what happens. 50-point move in the E-minis, That's like what a 16, 17 VIX is telling you. Like that's kind of what's to be expected. The question though was like, these stocks, they're big stocks and they move, 5%, 10%, 20%, and they swing around. Is that the new normal? Like, should you be expecting, the binary type nature that we've kind of been growing accustomed to? Or are we going to have that time period where we go back to the 2016, 17, 18 timeframe where, Apple is up 25 cents on the day? Market's up 10
I don't think we're
points.
going back to that vol environment anytime soon. But part of that vol environment was informed by how low interest rates were.
Yeah.
Right. Central banks were depressing interest rates, and therefore, because the rates are so low and you're not trading spreads or anything, volatility is lower. Not much can happen. Now that interest rates are going up, central banks are hiking. Many central banks are expected still to hike. Who knows what the Fed's going to do? We've gone from cuts being priced into hikes being favored, now back to nothing done at all. One of the wrinkles of today's market, we get rid of the hike that was planned for next March. Okay, so the March hike dissipates, but then the December cut and the September cut for next year, those both also dissipate.
Who thought there would be a hike? Every person, you think Warsh is going to get in there and hike rates?
No.
You think rates are going any higher? We could have 50% inflation. Rates are not going higher ever.
Rates are going sideways or lower given the composition of the Fed.
Yes.
So
they're not going to. That's why I hate this stuff, because it's like we all know that. We all know that. We're smart guys, okay? We know
we have to do the song. There's a song and dance in the market.
I know, but then you go in the market, and it's like, oh yeah, we rallied, bonds are up. Like, what are you talking about? Like, who didn't know that? I feel stupid sometimes. I'm like, it's so obvious. They've been telling you the rates aren't going higher. Even Powell.
The SR3 contracts are on the platform, Nick, right? If people want to trade this directly, you think that we get a hike priced into the curve, you can go out to the expiration cycle and trade against that.
It's fair. It's a fair point.
I think this is the move here. You got to love what you're seeing, Nick. I know. Improving today too a little bit as well. I think that should be worth noting here. I've personally been complaining about that a bit here in recent days, taking a look at like the number of stocks trading above their 20-day moving average, 1 month moving average. Yesterday, it fell down to 44.9%. Today, it's back up to 47.4%. So not fantastic still, but it's moving in the right direction. Whereas over the past 2 weeks, we went from 80% of stocks above their 1 month average to, again, 47.9%. So you had indexes going up, the average stock basically trading sideways or lower. It was the big names. More participation here would be welcomed. I really like XLF here, Nick, the financials. They've been doing this little chop consolidation above former range lows that we had at the start of the year.
Okay.
Not for nothing, but you go to that July 17th expiry and you look long like a 55-60 call spread, maybe get a little bit of a bump towards the top side of the recent trading range. That's something that I haven't done today, but it might be my next trade if I don't get anything off an oil soon.
Yeah, maybe even a JP Morgan. You look at that one. I mean, we're at 315. It's basically been sideways for 6 months. I have not looked at. Most of my focus has been the semis and tech. I have not looked at financials in quite some time. And Goldman Sachs, I was looking at that. That is on the higher end of where it's been trading. But I do, I like to see something that doesn't look like a hockey stick. That does interest me. So I put on a little bit of long delta.
Economy's going at 3.7% right now, according to the Atlanta Fed GDP growth tracker. So we went from 0.5 in the fourth, 2% in the first, now maybe up to 3.7 in the second. Reaccelerating economy usually is good for banks.
E-minis, as we get into the close here, the last couple minutes, you got them up 108. We're at the high of the session, 73.95, just a hair under 7,400. You got the NASDAQ up 571, the Dow up 677, and the Russell up 44. The Dow above 50K. We can bring our hats back out. You've got oil down $7.14. Vol futures down 45 here. You got the VIX at 1736, down 2 ticks. Bonds up a full point. Gold and silver both strong. Have gold and silver lost their luster a little bit despite the move today? Volatility's come in pretty nicely there. a weak dollar. Is that interesting you again?
They are. We're almost there, Nick. So close. Silver through 78.5 to me has turned a corner. It's also broken the downtrend from the March and the April highs, right? So you take the initial print high that you have in silver, you can go to like a 4-hour time frame in SI futures, and you'll see that March print right after the war starts, and then the April 17th high. If you draw a little trend line across there and then take 78.5, where markets found support in recent weeks, you'll see that we are sitting right at that confluence now. And it's a similar story for gold. The immediate reaction higher after the war near 5,500, April 17th high, we're right there too. So you can see how the market's trying to get through a turn. A little bit more it may have turned. And that's a bit interesting scenario where if you're looking at how vol's evolved with gold and silver recently, as it's trying to climb out of this like turn lower, vol's starting to perk back up a little bit. We love to see that if you're a bull. So for me, I'm looking at silver. I'm looking out into the summer months. I want to give myself a little bit more time than 45 days here. But the 85-87 call spread would be an interesting long opportunity in the event that we can get a more significant move higher here technically. But that would require an end to the war so that central banks and sovereigns stop using the precious metals like a piggy bank that they can plunder in order to pay for these higher energy prices. So I'm almost there. I haven't put on any new longs in gold and silver in months at this point in time.
Yeah.
I finally feel like if oil's down and stocks are ripping because Iran doesn't get a nuke and the Strait of Hormuz is reopening, gold and silver probably stop falling. Not sure how aggressive we want to be on the long side, but the done trading lower doesn't seem like an unreasonable view then.
Yeah, I still have some long gold exposure. I've trimmed out of it today, but it's definitely something that looks interesting to me, especially if your story of basically everything going up plays out. You got to think, the old school inflation hedge, which is code word for everything going up, including stocks, would go up as well. Final thoughts here as we get into the close. E-mini's up 106. Do we have another 100-point day tomorrow? Why not?
I hope not. I'm not long right now for the 1 DTEs. So let's just, maybe a little pullback overnight. Maybe we get a headline scare. We add a little dip to buy, Nick.
Ooh, I think it's going to be so hard to get a dip at this point. I think the jig is up.
You know what? Just follow Barack Ravid on Twitter, Axios' guy, and you'll get the scoop.
Oh, okay. All right. I'll do that. I'll find him. E-mini's up 104 into the close. You got ARM right after the close. It comes out 5 minutes after, APP 5 minutes after, INQ 5 minutes after, as well as Coherent, COHR 5 minutes after the close. Couple earnings there going into tomorrow. Looks like E-minis are going to close up 100 here at 73.90. They sold off 3 or 4 handles into the close. Mr. Vecchio, I'm going to go take a nap. You're going to have to stay on the clock and take the baton here. We're going to take a quick little 90-second break, come back with Ilya and Chris here for some overtime. We'll see you in the morning tomorrow. Peace.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. That was
This was
awesome.
not a paid, you're not getting paid for this advertisement.
Finding where markets meet politics, if you will, is kind of a passion of mine. We're changing cycles right now. We're moving into a different political complexion down in Washington, D.C. We're moving into the end of a potential Fed rate hike cycle. And as you change these economic and political regimes, asset prices behave in different manners. So I do think what's worked over the past, say, 1 or 2 years may not work so well in the future. I have like a kind of a core satellite portfolio mix where I keep some assets for multiple months, even quarters, years at a time. But then I augment that with some options trading in order to help provide a little bit more convexity to my portfolio. Risk management is the most important thing. You can't control where the market's going to go on a day-to-day basis, right? No one individual investor has that capability. But what you can control is where you get in the market, where you get out of the market, how big your position size is, and learning that the market is not always going to move in your direction. You have to appreciate the fact that you will make mistakes. But the idea is that you make enough of these trades with a consistent enough edge that over time, as you stockpile some results, then ultimately you are profitable over the long haul.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission.
More tech earnings out, and they are good. It's still Wednesday, May 6, 2026. You're watching Overtime. I'm your host, Chris Vecchio in New York, Elias Spivak on San Francisco. We're here to take you through the next 27 minutes as we wind down the trading day. Another day where stocks continue to look at the bottlenecks in the AI infrastructure build out and just push those equities higher. Semiconductors on a tear, NVIDIA up 5% or so. Pick a name in the memory space, it was probably up 4, 5, 6, 10% today. We have ARM here out after hours for what it's worth, Ilya. Josh, we can go right to the screen and get ready to share this here. ARM right now, EPS comes in at 60 cents versus 58 cents expected. The total revenues came in at 1.49 versus 1.47 expected. Incomes beat, gross profit margins beat. Their gross margin, Ilya, is 98.3%, which not bad.
No, not too shabby.
I have to wait to see what the push through for is on the guidance here. But Ilya, we finished the day with the S&P 500 up at 73.88 or so here in the after hours as we digest those ARM earnings. Yesterday, we were talking about a market where the NASDAQ and the Russell had started to break out. The S&P hadn't quite achieved that yet. And today, with a slew of news, we get there. And it's spurred on by oil this morning, which if you haven't seen the video, it's going to be up on our YouTube page about this trade that hit the tape at 3:40 a.m., $920 million in notional volume, hits the tape. And then we get the headline 70 minutes later from Axios that there may be an end to the war. Donald Trump, for his part this afternoon, said that everything's coming to an end in a week, which is less time than he said a month ago when there was 2 weeks left in the war. I suppose that's the positive lining for there. But moreover, that Iran has been is engaged and is willing to give up its nuclear ambition. So there's still, Ilya, a lot of risk in this market, but oil is off 7% today. Stocks are higher. Okay, Scrooge McDuck. What's wrong?
Can you just go ahead and put the volume chart on the on the screen there? Just go ahead and give me that good old ES trading volume.
Subgraph.
Yeah, there we go. Now, if we might take a look here at the entire way higher, you might notice here that what we're seeing is basically two things. You get a big upshift in the volume when you initially move off those April lows. And of course, that makes sense. A ceasefire is better than no ceasefire. And then on April 17th, the situation changes. You can see it best on the daily because when you look at the 4 hour, you get a little too much noise. But you can see there right on the 16th. You can go ahead and put the cursor right there. There's a regime change there. Okay. You go from high volume on the way up to weakening volume on the way up. And this has been a relentless drift away from participating in this market. Now, lest you think, oh, well, forward-looking, surely this is building in the out contracts. ESZ, ESU. Nope. Also coming down. Okay, maybe this is just a futures thing. Maybe this is just happening in that part of the space. Take a look at SPY. Our friend, the catch-all ETF. Fizzling. So my question here, as it has been really the entire way up here, is not about the great and glorious AI future. This story makes sense. It's in the GDP data. You can see it. So it isn't about that. That is not the thing to question here. The thing to question here is, if everything is so peachy, how come nobody wants to buy it? How come nobody even wants to trade it? Why are people not participating in this market?
Why trade it? Why not just buy the open and sell the close every day?
You'd see that in the volume. Why is this not attracting more participation? Why are people not participating in this market in exactly the way you just described? Is that a sign of confidence? Now let's take a look at RSP, the equal weighted S&P.
I admire your commitment to the bet, but go on.
I mean, take a look.
Sideways?
Sideways. There is no conviction here. This is a story of one thing. In the earnings season, lots of companies said lots of things about CapEx coming online and delivered astronomical numbers. And I have every reason to think they have every intention of spending that money, because they are absolutely right to say that compute is in short supply, AI is booming, there's already throttling of performance and bottlenecks, and we need more data centers if the great and powerful AI future is going to come. And we are going to spend to build those data centers oodles of money with the likes of Micron and AMD and et cetera, et cetera, et cetera, et cetera. NVIDIA, of course. Sure, yes. Again, I don't disagree in the slightest.
So when you look at
40% of those plans are delayed by between 1 and 3 years because of energy, interest rates, various input bottlenecks, tariffs, broken supply chains. Is that building going to show up in GDP where people think it is? Is it going to show up in earnings where people think it is? No.
So maybe we're not getting buying at the index level again right now, but in the sectors that are related to the AI build out.
That's right. It's one narrative, one story.
Semis just had their best volume day since March 9th, for what it's worth.
There is absolutely no question that part of it is surging. It is the only part of it that's surging. It is not a tide that lifts all boats. Clearly, we can see that in the price action. That's not an opinion. And we look at this then and say, okay, so why isn't this being extrapolated out? In the first quarter, this very clearly bailed out growth, whereas consumption slowed for a second consecutive quarter. And in any case, we only recovered about half of the growth rate that was there before the shutdown. But we did okay. If it was just consumption, that grew slower than GDP, 1.6% versus 2%. The difference maker was this AI build out. It's in the growth numbers. Could it be that the market just doesn't believe that can continue? Or at least enough people don't believe that they don't want to play in this shrinking liquidity pool where little money is banging up against itself, attempting to get higher and higher on ever juicier FOMO, but the story is priced in. And that's why more money isn't coming for it.
I don't think the story is priced in personally. I think people are tired.
We're not talking about the long arc of AI.
I think people are just tired right now. I think just people are exhausted from this market. And they just want to, how much easier it would have been if Ilya...
Nobody listened and they sold in May and they've gone away?
No, but like imagine if you were someone who back in February looked at your portfolio and then you saw the war headlines going on and you say to yourself, selling out never works. I should just ignore it. And then you check back in late April, you go, stocks are back to where they were before the war. Good thing I didn't sell. I'm going to keep ignoring it. Right. So the longer term investors, the DCAers, like there's no incentive for them to be active in this market right now. They're just continuing to stack slowly over time. I just want to keep watching the 1 week moving average. I'm keeping it real simple. The keep it simple, stupid method, the KISS method here. Since March 31st, Ilya, every session in the S&P and the NASDAQ, we've traded above our 1 week moving average. Can't close below it. We've gone through there intraday briefly, but on the closing basis, we get right back to it or above it. And so that hasn't changed here. It didn't change on Monday when we had our slight pullback. Yesterday, obviously, we had the move higher. Today, we get the extension to the upside. So for me, if we do see a little bit of weakness here, 28,088 for the NASDAQ, 7291 and a half for the S&P 500. If we're above those levels on a closing basis, on a pullback tomorrow, I'm going to have to treat it as a dip buying opportunity first blush, because that's what's been working out for the past few weeks.
I mean, for what it's worth, to your point, open interest has been looking better than volume. So we're not seeing participation from your holder types throw in the towel. But also, they never throw in the towel. This is the essence of why the stock market is biased higher. To look for that as a sign of capitulation, you're going to grow a beard longer than your height. It's just not what's going on here. That's not how this works. If this were a story of everyone saying, oh, good, this thing is on such steroids, this is such a singular technological build-a-thon, this is the Industrial Revolution. We've just adapted steam power to the loom machine. The world has changed. Nothing matters. This is just a rocket ship because we're going to build this capacity. Demand for it is bubbling over the seams. And it is. It is bubbling over the seams. Where is the money to come take advantage of this incredible opportunity? Why is it not entering the market?
Doesn't need to enter the market all at once.
What is it that people need to hear?
The war end.
Maybe.
Ilya,
maybe, except
March.
The president announced its end over the weekend, and today, and just today.
He's boycotted with himself. I know, but he's boycotted with himself. He said it's like 50 times in the past 2 months, a week to end the war.
Well, this time he said it differently. This time over the weekend, he said military action has been terminated. And this time, it's been confirmed by the Secretary of State. Ostensibly, that's why we get all of the movements we saw today, although the intervention certainly helped, it seems. At least as far as the dollar is concerned.
Yes, we did get that today.
And that probably echoes in other places because the algos are basically at this point trained to do what we do, which is to look at cross-market price action and try to pick up signals. So when you have this kind of intervention in a correlated asset to the overall macro narrative, all of a sudden everybody goes, wait a minute, why is the dollar moving? Must be something with oil. Move that. Okay, must be something with yields, because it's all one thing. It's all this oil is inflation, is rate hikes out to dollar and gold kind of a story. And so you look at all of this together and you say, okay, really it's over now as far as the war. Now, the Strait of Hormuz isn't open, and if that's the barometer by which we're going to say the war is open, again, I'll see you when I see you, because who knows when that happens. But this is now basically a maritime standoff frozen in time, where nobody really has a tremendous amount of incentive to move.
We can keep kicking the can down the road forever and pump the market higher forever on these headlines?
Pump the market higher is a stretch, considering kicking this can down the road forever is not like debt. This is
no, it's not.
This is 45% more expensive oil getting kicked down the road.
And we're going to want to keep watching those inventory levels too, because we're getting to a point right now when you look at the spare capacity in the Middle East, it's filling up. You look at the actual storage in Asia right now, it's getting lower, and they're taking steps to curb demand so that they don't hit, tank storage lows. But tank bottoms on a number of different fuel products arrive sooner than I think most people appreciate over the next few weeks. Europe, for example, has probably 2 weeks left of jet fuel. The United States gets to that point, given the trajectory that we've been on. I mean, this is one of the many reasons why Trump doesn't want to go have the war continue. It's not just the munitions that have been run down, but it's the fact that if we continue along our current trajectory and oil doesn't start flowing from the Strait of Hormuz soon, the U.S. is on pace to run out of our domestic fuel inventories and start to look at tank floors, the tank lows, the storage bottoms, okay, around July 4th.
Israel has just approved the export of spare capacity diesel to Germany. Headlines you don't expect to read.
No. Germany is obviously horribly run. I've spent a good number of years here on the network dunking on their Green Party for shutting down the nuclear programs while taking money from Russia, which then continues to put gas and coal into the atmosphere. But the European Greens are just they're the worst people. They're the worst politicians on the planet, I think. Most incompetent. I digress. That's for my other podcast. That's After Hours, complaining about
That's Chris Vecchio After Dark right there.
So yeah, the energy situation isn't going away. Maybe that's the cascading effect that gets this thing to finally break once the reality, hits the road.
I think the growth part of that is really the thing to watch. Right? Because clearly in the first quarter, we saw that the AI boom said, I don't care. I'm the big fish here. I am what matters. And you're seeing the markets react. And it's not irrational the way that they're reacting.
They did get through the 50K question again, for what it's worth. The Pam Bondi top has been officially broken. We're back to 50K.
The question isn't that, right? We saw it in the numbers. The question is, can you sustain that if you're looking at bottlenecks, more expensive everything as far as inputs, and you're delaying 40% of your data center construction by 1 to 3 years? Is that an earnings and GDP boost that's really coming when you think it is? Probably not. Well, and what does that do? And what does that do with consumers?
You're telling me this project's going to run into the future? I'm thinking about the Marina Eccles building renovations. Didn't those run longer than expected? And part of the reason why, once they started running longer than expected, then the cost of the project started to balloon because the input costs change. So
Is that a meaningful input into GDP?
Just pointing out that these data centers that are getting pushed out further in time, the economics of them might make different sense in the future. Some of these projects may not get built at all because they're going to be too expensive to build.
Sure.
Means further constraint on compute, which incentivizes more build out of data centers. So, I mean, I think this is really exciting. I'm curious though, Bitcoin, this is an area of agreement that you and I are in right
now.
It doesn't have a big move today, although it's been a leader in recent days, perhaps giving some space for other stuff. Yeah, but it doesn't fall back here right now.
It resists.
Does Bitcoin's turn does that do anything for you as it pertains to the risk on appetite in the broader market?
No. And I think that's sort of surprising, even for me. This has been its own story, which is really interesting. I mean, take a look at what's been going on since October. I mean, obviously, stocks looked infinitely better than this meltdown in the fourth quarter of last year. So this completely decoupled from the risk story there. It happens to be semi-aligned now, seemingly by happenstance. Because buying this after the sell-off that we saw at the end of last year, that makes all the sense in the world. And as far as where we've been, what the risk reward is relative to that, and the technical developments that you're seeing, which is why I'm long and adding. But so I have no problem with risk on exposure as such, but I look at where stocks are searing highs in one solitary narrative with no volume. And I go, is this the thing I want to chase? And that's probably why there's no volume, because most people are probably thinking exactly the same thing.
Yeah. Which means they're going to be forced to chase later on this year.
Maybe.
They're not properly
that's an argument. That's an argument.
Have I not been making that for a few weeks now?
It's a good argument.
And it's been working.
It's a great counter saying, well, when you get some sort of magical curtain, I don't know what possible thing else could happen to signal this to markets, but when the magical curtain on the wall on the war really comes down, really comes down, really, then
we announced
maybe the magical volume
fusion.
will come.
We announced a breakthrough in nuclear fusion. Who cares where oil is at 100 when we can produce limitless energy?
I mean, come on, baby. Why not?
You want a headline? I mean, I can get into the Bull Lab over here and give you the headline.
Which part of the simulation are we in here? Are we at the fusion part? Because that's exciting.
Yeah. Oh, remember when I was getting so excited a few years ago for the room temperature semiconductors?
Oh,
the superconductors.
Oh,
we were talking about
amazing.
Let's go back to that market cycle where it's like we're gonna have infinite everything, abundance everywhere. But that's a 32 PE for the Mag 7, not a 26 PE for the Mag 7. So, Ilya, you and I have different approaches to this market. I am chasing this thing higher.
I'm not fighting it, to be clear.
I'm making up for my sins of not being long at the lows, which no one's ever going to nail the lows. Some people did. I did not. I did not chase it to the upside until like 6,800 or so. So I'm glad that I have started, but I'm going to keep pressing my luck. Close below the 1 week average, and then I will get off this train. But until then, for me, that is the line in the sand that matters most. Ilya, we're going to take, we'll call it a 23.5-hour break here on overtime. We'll be back tomorrow, 4 Eastern, 3 Central, because overtime's out of time. See everyone later. Stick around, though. Ilya Spivak's up next. Macro Money coming up on Tasty Live. See you there.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
So I studied economics and international relations, and I wanted to do the hands-on rather than the academic version of that, and the most natural thing was global macro investing. I begin with a sense of where I think the overall direction is for the macro theme for the next 6 to 12 months, and then look at some basic response from the price action to see how it's going. I think the price itself is the purest of indicator. It subsumes within it the collective emotions of the market. One of my favorite mottos, if you will, comes from the always great Ira Harris, who said, if you're right at the wrong time, you're wrong. And so, for me, every macro narrative begins with what's the price action saying, rather than this or that economic indicator or some such thing.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Don't tell me this stock market is this or that. You might hear people screaming because it is at a record high, and what does it matter? Well, that's certainly the message that we get from Wall Street today, because, my God, there is truly no holding these equities back. They come roaring higher once again. And this time, they actually seem to have something to do, or at least something to learn from the risk appetite backdrop. So we're going to take a look here and try to figure out what's going on. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And the question first and foremost that we are going to be asking ourselves here is, what exactly is going on that is giving us the price action outcomes that we're looking at? Of course, as ever, we are going to focus on that price action because surely there is every narrative and a half out here to explain the wild price action that is presenting itself before our very eyes. We're going to try to make sense of it and see where things might be going next. Of course, with the 72-point font asterisk that we are still dealing with a geopolitical situation that, as we see today, is perfectly capable of giving us strange headlines out of left field. So, crude oil takes a nice big leg lower today. It's still very much within its wartime range, but it seems to take a step back here. Now, that follows an Axios report overnight that says that the U.S. and Iran have a one-page memorandum end of war deal that they're workshopping together. That's, of course, very encouraging, because what we saw over the weekend was the appearance of a situation where the president said, okay, Operation Epic Fury is over. This was, of course, later confirmed by the Secretary of State, Marco Rubio, and that what we're transitioning to is Operation Freedom, which is essentially like a maritime freedom of navigation enforcement type of action. And the logic seems to follow. The president saying, well, look, at what point would we say our objectives here militarily are done? Oh, we're coming up on the need to authorize war powers through Congress. What did we say we were going to do here? Degrade Iran's ability to fire missiles and degrade their nuclear their nuclear program. I think reasonably, after all this bombing, one could credibly say some amount of degrading has been had. And then, of course, it is on to the president to decide whether it's enough degrading. And seemingly what the president is saying here is, well, the Strait of Hormuz could not have been an objective of this war. It was open before the war began. So our military objective, our Epic Fury objective, that's it. That's done. And then, of course, over the past 24 hours, the president put a pause on Operation Freedom, which was the escorting of ships, both literally and through guidance, out of the Strait of Hormuz, while also putting a block on Iranian shipments coming out of it. That apparently is now on hold as we get this one-pager memorandum, according to Axios, ironed out and put together. The president signaling to reporters that maybe within a week we get a comprehensive deal that includes some sort of curtailing of Iran's nuclear ambitions, et cetera, et cetera. And we'll see ultimately what that looks like. But at least as far as the markets are concerned, what all of this conversation was translating into was a bit of a lower view on oil prices. Of course, we still are upwards of 30+% above where we were before the war started. More on that momentarily, but at least for today, that is enough of a headline. You'd think the markets will have long since absorbed what the president said over the weekend, what Marco Rubio, the Secretary of State, said thereafter. But apparently over the past 24 hours was when the news really sank in with that Axios headline. And so we get this pullback. We get a parallel reaction from the bonds. That, of course, has been the essence of the war trade since the very beginning. We had a decline here in the bonds as the war started and crude oil started to surge around the expectation that what the war would do is boost interest rates. And of course, we had a little bit of relief here with the ceasefire announcement, but unlike stocks that just kept going higher and higher and higher, we have a reassessment here, as it looks like the Strait is going to be locked up for a while with this shift from war to maritime enforcement, maybe indefinitely, maybe for a very long time, while both sides basically nurse a frozen conflict. And so today, when we get the slight pullback in oil, we also get a pull up in the bonds, and so a push lower in yields, reflecting that move in oil. It's a similar story in gold. It pushes higher, just as the bonds seem to be scraping the underside of their most recent congestion range. So too, it seems like gold is doing the same thing. It's at the underside of its range that it just broke through. So testing that level, interestingly, not actually reasserting a trend higher or doing something more convincing, but certainly getting back into this key area. For the dollar, all kinds of back and forth today, and the reaction from the dollar, of course, in line with these war trade dynamics, higher yields have meant a stronger dollar since the war trade really kicked off. And again, as we got this ceasefire and correction from early April onward, we can see the dollar has pulled back just about half of its up move. It's still net up here for the year. And as we look at where we're stalling here today, it's important to keep in mind that it was a wild session. There are some crazy wicks on the Aussie dollar, on the euro, but especially on the yen, where it looks like the authorities there took the opportunity for a little bit of dollar weakness emerging from the Iran war story to ride the coattails and lean in, because, of course, they've been attempting to beat back yen depreciation over the past couple weeks. And so it looks like there was a amplifying effort here from intervention on the part of Japanese authorities bearing down on the dollar. But when we put it all together, it is still holding these levels. Bitcoin continues to be on a planet by itself. It seems to be ignoring all of these dynamics and is pushing higher steadily. But the real story continues to be in stocks, where the momentum is just unrelenting. The surge higher here, clearly astronomical. The rally only looking stronger until, once again, you look at its underpinnings and notice all of this fire and fury continues to happen on diminishing volumes. And even though, as far as momentum indicators are concerned, the negative divergence seems to be broken at this point, it nevertheless looks like a very different momentum picture through this part of the rally than this one. And of course, the level shift in volume from even this area here to this one, which magically occurs right here as the flip occurs from the correction after the ceasefire news that happens in all markets to this point where bonds rotate and come back down, gold rotates and comes back down, the dollar stops falling, crude oil stops falling. This continues as tech earnings hit the news. And of course, as we did yesterday, we can see here, looking at the equal weighted S&P 500, the same kind of momentum is just not there. We are still sitting under the highs that we set back at the start of the year. So the level of concentration that's pulling this index is clearly off the charts. And this is a bit of a messy picture, so we'll go through it carefully, but this measures how much a given sector in the S&P 500 is outperforming the index. Now, we should say they're all outperforming the index. This is zero. But the tech side of this is so astronomically departed from everything else that we had to put it on a separate scale just to make the chart appear visible. So, what are we looking at here? Now, notice I've marked all of these with an L except one, signaling that they are on this left scale, which runs from 0 to about 0.4%. Information technology here, uniquely, I've labeled with an R because it runs on this scale, where we can see over the period here, we are looking at outperformance of between about 0.7% to about 0.9%, let's call, relative to the underlying index. Now, as far as we can see, all of these sectors that are not tech, since the beginning of the year, have been relatively stable. Here's January of this year. We can see they appear to be outperforming the index by a meager maybe 0.2%. A little bit less, 0.16. But let's be generous. So 0.2%. Over the same period here, we can see we have gone on the tech side from about 0.78% all the way up to maybe 0.85. So it's very clear what's going on here, and it is really and truly a story of one thing. Here is where that tech outperformance at the start of this earnings season and on the announcement of that ceasefire really takes off. Right there. And if we look at what's happening in the tech sector, if we zoom in now to see what's outperforming, we get essentially a three-way kind of story. There is the sector that is expected to be disrupted by AI. This is software. It is down almost 14.5% on the year. There is the equal weighted NASDAQ, which as of today, for the first time since back in February, edges up into positive territory for the year. Just so, though, 0.2% or so. Here's the Mag 7. They're in positive territory for the year, but modestly so at almost 5%. So it's not even the hyperscalers that are doing the heavy lifting here. Here's the overall index, about 13.5% for the year. Where is that coming from? Semiconductors. They're up 47% since the beginning of the year. And so this is really and truly just one thing. Not surprisingly, of course, it lines up with this earnings season where the distinguishing feature was the announcement of just astronomical CapEx spending on building more of the AI infrastructure needed to power the industry. And this is no flimsy speculative narrative. When we look at the first quarter GDP numbers, we can see how this surge in building is powering U.S. economic growth. Now, we've only recovered about halfway from the government shutdown in the fourth quarter of last year. That was a meager 0.5% annualized growth. Before that, we were averaging about 4%. That's, of course, after this tariff scare where we dipped into negative territory very, very briefly in the first quarter of last year. Then we quickly rebounded. We can see there's all kinds of shuffling around here with inventories, with imports. That's, of course, the front running of the new tariff regime with the arrival of the new Trump administration. So we can see here imports surge, so their contribution to GDP is very negative. That goes into inventories, which surge higher. We can see the same thing here where we start to go back the other way, but we even out at about a 4% growth rate, give or take. As of the first quarter, we've recovered to about 2%. In fact, exactly 2%. We can see that imports shaved off 2.6%, or 2.6 percentage points, rather, from the overall total. Exports added 1.3%. So there's a small increase in exports here, but a big jump in imports. We also see a big jump to the tune of 1.39 percentage points in fixed investment on the non-residential side of things. Actually, fixed investment in the residential space detracted from GDP by a small amount, about 0.3 percentage points. What's striking here is that this non-residential fixed investment contributed more to GDP than did consumption, at just a bit over 1 percentage point, 1.08 to be exact. Which is a striking thing because consumption is 68% of GDP. And non-residential fixed investment is only 14% of GDP. So that little bit had to grow at an absolutely astronomical speed to contribute more than the behemoth that is household consumption. And so it has. 10.4% annualized growth rate for business investment, 1.6% for consumption. The striking bit there is consumption is actually growing slower than overall GDP. 2% growth for GDP, 1.6% for consumption. What's making the difference? This. And indeed, the CAPEX spending announcements, even just from the top four, are indeed astronomical. Even year on year. The difference between what was spent in 2025 and what is expected to be spent this year is huge, almost double. And of course, it makes sense why all that spending is coming through. The traffic to the major AI tools is surging. Demand is clearly very strong. So much so that these services have had to throttle back and conserve compute resources. We've mentioned here before that OpenAI shut down Sora, its video generation engine, and Anthropic has started to throttle users for how much compute they can use per request. So we're looking at seemingly everything you'd want to see. The economy is being powered to give this bullish narrative its due in the first quarter, largely by what looks like data center building. There is a lot more data center building that is getting a monetary commitment. And it's getting it because there really is demand for it. So what could possibly be the issue? We are indeed seeing the surge in the place supplying the inputs for that building. We are, in fact, seeing the weakness in the place that is going to be disrupted by AI and therefore by what is being built. So, what is the issue? Well, it's a great question because what we see is that as the rally surges, it isn't sucking in more money. It isn't bringing in more volumes, and lest we think that this is just happening in this localized futures contract and volume is building in outer months, it isn't. Volume is building in other instruments. We can look at volume for, let's say, the SPY benchmark S&P 500 ETF. It's doing the same thing. Volumes are shrinking on the way up across the major reflections of the S&P 500, and so conviction is just not there. This, of course, raises a very important question. Why isn't it? Doesn't the narrative make enough sense? And of course, the markets, as ever, are asking a familiar question. What have you done for me lately? Because what the markets, as ever, are concerned with is not what is, but what will be. And the question here is, well, how much of this rosy narrative is already in the price? And can we really continue to expect that in the current environment, we are going to have the boost to GDP from all of this AI construction continue to make up for what is a consumer that has been fading in recent quarters? And again, you can see it right here. It isn't just that this incredible surge in CAPEX spending is dwarfing consumption. It's also that consumption has been quietly decelerating And although the fourth quarter was obviously a weak spot because of the government shutdown, the first quarter was even weaker, and we turned the government back on. So the key question then is, how long does that story have legs to continue? And can we really say that in the current environment, people can have confidence that all of this money that is being slated for AI spend is going to get spent just as it is intended? Well, we already see reports that because of all the incredible bottlenecks, because of all of this demand, most of the data center construction that was slated for this year is being pushed back to 2027, and in some cases 2028, maybe even further. That, of course, is complicated furthermore by the very same thing that is bearing down on consumers: inflation. This is core inflation before we even take energy and the shock from the Iran war into account. The Fed's bet that goods inflation was going to start to rebase out as the markets do the round turn on tariffs. It hasn't panned out. Goods inflation, again, core, without energy and food, is going higher. Service sector inflation is putting up the strongest monthly gains since the middle of last year, before the disinflation that paved the way for Fed easing. Housing inflation, in the most recent March CPI data, posted the biggest rise in 3 months, seemingly leveling out a downtrend going back a few years. If we look at the level of transmission for the energy shock into CPI, it's about a month lagged. So far what we see in CPI is just January and February, where crude oil ticked up a bit. This big wartime surge, it's not even in the mix yet. If we look at how that's being reflected in the markets, though, they clearly see what's going on, because the break-even inflation rates that are priced into bond markets, they're surging right alongside crude oil. So we can see here exactly what's going on. Now, from the perspective of central banks, the read-through here is as clear as day. Where there were rate cuts expected for the Fed and the Bank of England this year, they're gone. For the Bank of England, it's now rate hikes to the tune of at least 50 basis points. For the Fed, it is now uneasy standstill at 0, and no cuts are on the menu deep into next year, best case scenario. If we take a look at the Bank of Canada, even there you have a hike that now looks more likely than not. And so as you look at these astronomical numbers, and you look at what the market is doing with those astronomical numbers, the question becomes, okay, I understand what's going on. The numbers are astronomical. The thing has been driving growth in the fourth quarter. It's been driving growth, especially in the first. All that is understood. How much of that is backward looking? How much of this construction is really going to appear in GDP sooner versus later? How much of it is going to appear in earnings sooner versus later? Is the market overextended now? And of course, there's no knowing that until there is some sort of discernible top, which clearly isn't there. But the ingredients seem to be there to say, well, if what this envisions is that the great and powerful AI build-out will continue to fuel immediate earnings and GDP, even as the consumer buckles under the weight of more expensive energy and more expensive everything else amid rising inflation, and even as all of the possibility that this would see some relief with lower interest rates, were the Fed able to do that goes out the window, so consumers have to shoulder it with higher credit cost than was expected. They need to finance more expensively what consumption they have and how they're going to navigate these higher costs at all is obviously going to be made more difficult when financing the shortfalls is more expensive. Within that framework, can we really expect a 14% chunk of GDP, which is subject to all the same headwinds, and on top of it, subject to an international, globalized supply chain with a whole host of single points of failure, like the Netherlands, like Korea, like Taiwan, and an increasingly fraught supply chain environment, on top of higher borrowing costs, on top of higher inputs costs? Is it realistic to think that the 14% chunk of GDP can continue to outpace the one that's 68% of GDP? Here's consumption. Here's everything else. This yellow portion is growing so fast that the weakness here is being subsumed, at least in the first quarter. Is it going to continue to be subsumed? And can we expect that to keep GDP and earnings and everything else humming along to the extent that the markets are extrapolating? Well, perhaps disbelief in that kind of pie-in-the-sky thinking is why there's no volume here. But that clearly doesn't mean the market can continue to push higher. And so with that in mind, I'm not looking for any new shorts here. The ones that I've had on for well over a month at this point, last time I rolled. And these positions aren't really moving very much at this point as far as P&L, which is precisely the idea. It's why I put them on as a risk-defined verticals to avoid this kind of a blowout. They basically went to max loss weeks ago. That max loss is locked in. The logic here was to enforce strict minimums of 2-to-1 risk reward on each piece of the exposure. And so these end up being losses in the worst case that are locked in at acceptable levels for the strategy. It's going to end up being something on the order of maybe 2% and some change of overall equity. And in the worst case, that's what's going to happen. But I'm certainly not looking for new shorts to fight this momentum. Standing in front of a runaway train is certainly not my idea of a good time. But the vulnerabilities here make me not want to buy the rally. And so I'm going to continue to sit on these positions for now. I am still looking for the inflation dynamics, intervention in the yen, and flimsy headlines out of Axios notwithstanding. So I'm still short where that narrative exists. So short gold, short the major currencies against the dollar. I still have a bit of risk on exposure, be it Brazil, these call verticals here that take a longer term view. In fact, I've just added a bit more duration here. This is 135 days out for this next piece, and still sitting long Bitcoin via call verticals. And again, added some duration here recently. The latest chunk is 55 days out, and still looking on the short side of the long end of the bonds. So still have these put verticals here, 43 days out in TLT, essentially looking for the oil is sticky and so inflation, and so there is a stronger dollar, a weaker gold, and higher borrowing costs, looking for that narrative to keep its bearings, even as stock markets do whatever it is that they're doing. And that is Macro Money for today. As ever, we are here Monday through Thursday. That's right after Overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. And we're going to be back with Macro Money tomorrow. Happy trading.